Por ejemplo, a mí me pasa que cuando estoy grabando necesito un espacio de soledad. Ahora mismo tengo puesta la cámara ahí, estoy hablando con ustedes, pero realmente...
Please welcome from Chainlink Labs, Zaji Reyes and Zubin Pratap.
Welcome. Good morning, everybody, and welcome to SmartCon 2024. So excited to see you all here. I'm excited to be in Hong Kong, one of my favorite cities in the world.
Yes, and we're so grateful to all of our sponsors today, Open Mesh Network, Polygon, and Space and Time.
And we got lots of things happening for you guys. So we've got 4 stages. This is the main stage. Lots of things happening here. We've got another spotlight stage on the expo floor, which is just behind there. We've got right under our feet 2 more stages on the ground level, the Web3 stage and the capital market stage. So plenty of things to keep you guys really occupied, get those creative juices flowing, network, meet people, learn a lot. So you're going to have a great time.
Yes, and make sure to stop by the Welcome Mixer later, as well as the SmartCon Ecosystem Night. And without further ado, we would love to welcome to the stage Todd Barr, CMO of Chainlink Labs.
Hello, everyone. Thank you, Zaji and Zubin. This is year 3 for them, leading us here at SmartCon. So they're stars now. Well, hello, everyone. I'm excited to welcome you to SmartCon 2024. And we're excited to be here in Hong Kong. We have attendees from all over the world coming. And then we have Livestream attendees happening as well. So welcome to you, no matter where you're listening from. And we have watch parties happening all over the world. So welcome, everyone. I also want to thank and welcome our sponsors, our speakers, and our conference partners. Without you, SmartCon would not be possible. So I'm the executive host of SmartCon, and I want you to know that all the team members here, they're wearing blue shirts, are here to make sure you have a great experience. If you need anything, just find somebody in a blue shirt and say hello and let them know what you need, and we'll do our best to help you out. Now, SmartCon was created to be a place where you can learn something, meet someone new, and then share ideas together with them. And so you're going to see a lot of places around this, this property where you can just kind of sit and collaborate. So maybe you hear something really interesting in one of the sessions, and then we want you to go sit and collaborate and meet people and really understand kind of what everybody else is doing in our industry. And what is our industry, you might be asking? Well, I'm glad you asked. We love, obviously, Web3, and we love crypto, and of course, DeFi. And without Chainlink, DeFi summer wouldn't have happened. And so we feel very connected to the DeFi community and the DeFi industry. But DeFi has always just been part of the Chainlink story. And the other part is just as important, and it may have some elements that you're not aware of. In 2016, right after Ethereum launched the year before, and well before DeFi was even a thing, Sergey Nazarov, our co-founder of Chainlink, who you will hear from on this very stage this afternoon, actually won the blockchain challenge at Swift. And if you don't know what Swift is, it is the organization responsible for the messaging layer for international payments and the global banking system. So back in 2016, Sergey was demonstrating an Ethereum smart bond, maybe an RWA, if you will, 8 years ago. So, today, 8 years later, the two chapters of this story, the DeFi side and the global banking side, are starting to converge. And that's really what our theme is for this conference. Throughout 2024, Sergey has been speaking across the world at the top Web3 conferences, but he's also been speaking at places like Sibos last week in Beijing, which is the SWIFT conference of all the banks around the world. In fact, I was gratified because the Chainlink booth was right down the aisle from HSBC and the Bank of China. So this is now the world that we're living in. And in this room are DeFi leaders and builders who've innovated on crypto native assets, but also in this room are digital asset leaders and builders in banking and finance who are innovating on real world assets and putting those on blockchains. That's convergence, and it's happening now. And that's why we're here, and that's why hopefully you're here. Chainlink is proud to be at the center of this industry that includes startups and financial institutions and governments and Web3 anons all working together for the future of finance. And really, Hong Kong is the perfect place to have this conversation. It's a city that's known as a global financial center, but also an emerging hub of digital assets and Web3 innovation. And last year, one of the leaders of that here in this community, Mr. Joseph Chan, who's the Undersecretary of Financial Services and the Treasury for the government of the Hong Kong SAR, Financial Services and Treasury Bureau, came to SmartCon in Barcelona. And some of you were there. I've seen you and met you and saw you there, and now you're here, and I really appreciate that. And Mr. Chan came, and he really started to understand how Chainlink is helping enable this future of finance. And he actually convinced us and invited us to come to Hong Kong for SmartCon in 2024. So thank you, Mr. Chan, for the kind invitation. And he's actually here, and I'm delighted to introduce Mr. Chan to start SmartCon and to kick us off here in Hong Kong. So thank you very much.
Thank you, Todd. Distinguished guests, ladies and gentlemen, good morning. Welcome to SmartCon 2024. Welcome to Hong Kong. I hope you have the chance to explore our wonderful city, our highly ranked hiking trails at the Peak and in Sai Kung, our nice beaches in Repulse Bay at Stanley, the fantastic view of our Victoria Harbour, our cultural offerings at M+ and Palace Museums, and of course, our Michelin stars restaurants of not only Chinese, but different Asian Western cuisines, all within 20-30 minutes. It is my absolute pleasure to see you, SmartCon, being here held in Hong Kong. For me, it is a dream come true since my trip to SmartCon 2023 at Barcelona a year ago. I remember vividly when I first met Sergey there, and he said I didn't talk like a normal government official. At the time, I had no idea if it was a compliment or criticism. Indeed, I myself used to be in investment banking for almost 2 decades before I joined the government, and I'm still paying $299 a year to keep my chartered financial analyst designation, which my wife is not too happy about. Well, we, finance people, know best how pricing and interoperability set the fundamentals for any market activities. Although these two concepts may be applied in different forms or colors at different points in time, we know market activities are always about finding counterparts, forming protocols, and having the most cutting-edge data to facilitate accurate and efficient transactions. I'm fortunate to have my finance career experience that helped me appreciate Chainlink's impact in the world of finance. And I'm fortunate to have the opportunity to meet Sergey and team to learn how Chainlink's Oracle network serves decentralized finance like energy serves network of transportation. The open source technology infrastructure allows any blockchain to securely connect to off-chain data and computation resources. The network nodes fetch, validate, and deliver data from multiple sources onto blockchains to execute smart contracts, most importantly, with consistency and anti-vulnerability. DeFi projects depend on it. The entire decentralized infrastructure of innovation relies on a safe oracle to make things work. Witnessing the enthusiasm of builders and users in Chainlink community last year, I told myself, Asia and Hong Kong have to learn about these opportunities from a Chainlink community. And the Chainlink community has to learn about the potential for Web3 development in Asia, and particularly here in Hong Kong. As Asia's leading international financial center, Hong Kong enjoys a distinctive blend of advantages under one country, two system. On one hand, our core strengths include free flow of capital, a robust common law system, and a simple and low-tax regime. On the other hand, Hong Kong enjoys preferential access to mainland China market, the world's second largest economy, with different connect schemes already in place across Stock Connect, Bond Connect, ETF Connect, Wealth Management Connect, etc. These dual advantages position Hong Kong as a super connector between China and international markets, between the East and the West. Building on this strong foundation, Hong Kong has firmly established itself as Asia's leading international financial center. We consistently top various league tables in the region across issuance of Asian international bonds, the scale of a cross-border wealth management business, insurance density, the scale of a hedge fund business, the size of offshore renminbi liquidity pool, the issuance of green and sustainable bonds, etc., etc. Indeed, Hong Kong ranks third in the world and number one in Asia under the Global Financial Centers Index. These are not just rankings. They are a testament to our robust financial ecosystem, which sets the stage for Hong Kong to become a leader in the realm of Web3. As most of the financial institutions set up the Asia's regional headquarters or the largest regional presence here in Hong Kong, Web3 companies here can enjoy tremendous access to potential clients, potential investors, and potential business partners, making Hong Kong an ideal place for Web3 companies to start up and scale up. Similar to the vision of Chainlink, empowering its community to thrive. Our latest figures tell the vibrancy of our ecosystem. At present, we house more than 1,100 fintech and Web3 companies here in town, an increase of about 15% in comparison to the figure last year. In our Chief Executive's 2024 policy address announced earlier this month, we are advancing the development of cutting-edge financial services that will reshape the financial landscape of tomorrow. Key areas of focus include central bank digital currencies, CBDCs, payments, virtual banking, virtual insurance, and of course, virtual asset transactions. Innovation cannot thrive without a supportive environment. Recognizing this, 2 years ago, we issued the policy statement on development of virtual assets in Hong Kong, which outlined our vision and policy direction. We believe that virtual assets are here to stay as an asset class. And as an international financial center and a metropolis for innovation and technology, Hong Kong embraces the megatrend of Web3 development and commits ourselves to transforming the city into a global Web3 hub. Since then, under the same activity, same risk, same rule principle, the government and our regulators have worked to create a supportive environment. Our philosophy is very clear. We firmly believe that encouraging financial innovation is only possible through providing a transparent, certain, and predictable regulatory environment. A significant milestone in our journey was the introduction of the licensing regime for virtual asset trading platforms in June last year. 3 virtual asset trading platforms are currently licensed by the Securities and Futures Commission, SFC, and there are currently 11 so-called deemed to be licensed applicants with pre-existing business in Hong Kong, that SFC is adopting a swift approach to review the applications. As things currently stand, SFC is on track to grant licenses to a few of these deemed applicants by the end of this year. We've also made significant strides in another key area, stablecoins. Earlier this year, we completed public consultations on the regulatory frameworks for stablecoins. During the 2-month consultation on stablecoin, we received over 100 submissions from various stakeholders and market participants. The consensus was clear. With the growing prominence of virtual assets, it is crucial to establish a regulatory framework for fiat reference stablecoins issuers. We are currently finalizing the necessary preparations, and we aim at submitting the draft legislation on stablecoins to our Legislative Council by the end of this year. And in March this year, we took another important step by introducing a stablecoin sandbox to allow interested parties to conduct testing and to facilitate two-way communication on the proposed regulatory requirements, ensuring such requirements are fit for purpose. Looking ahead, we will conduct a second round of public consultation on the regulatory proposal for the over-the-counter virtual asset trading. We will also put forward a proposed licensing regime for virtual asset custodian service providers, ensuring the safekeeping of digital assets in line with international standards. When we come up with new regulation in Hong Kong, we go through a vigorous process, including soft consultation with the industry, formal public consultation, followed by the formal legislative process at the Legislative Council involving panel discussion, first readings, bills committees, second reading, and third reading, so that the industry views is fully heard and reflected throughout the whole extensive process. In addition to providing a clear regulatory direction, the government has also led by example in taking a proactive approach in promoting tokenization. 2 years ago, the Hong Kong Exile government ourselves issued our own NFT to demonstrate our openness and commitment to Web3. And last year, the Hong Kong Exile government became the first government in the world to issue tokenized green bonds, setting a global precedent. Subsequently, we launched a second tokenized green bond in February this year as well. We are also actively engaging with market participants to explore additional applications of DLT in the capital markets, aiming to enhance the efficiency, transparency, and cost-effectiveness of securities issuance and trading. As a leading international financial center, Hong Kong is uniquely positioned to link virtual assets to traditional financial instruments. Since December 2022, the first virtual asset futures ETF were listed on the Hong Kong Stock Exchange. The last year, as mentioned earlier, we became the first government issuing tokenized green bond. Then in April this year, we welcomed the listing of Asia's first virtual asset spot ETFs here in Hong Kong, further diversifying the range of products available in our markets. It was the first time a virtual asset spot ETF product has been launched in the Asian market, reaffirming our leadership in the development of virtual assets in the region. In parallel, I'm glad to see that Chainlink's vision and tech, particularly the cross-chain interoperability protocol, CCIP, have made remarkable progress in being adopted in the traditional finance world. We see SWIFT integrating with blockchains, enabling banks to connect to blockchains using SWIFT standards and Chainlink infrastructure. We see DECO Sandbox bringing zero knowledge proof ZKPs to institution transaction for privacy and safety. And here in Hong Kong, we see a local fintech firm working with Chainlink to expand partnership in tokenizing real-world assets. We also see Chainlink participating in the latest explorations of various technologies with the Hong Kong's public sector. Ladies and gentlemen, the initiatives and regulatory progress in Hong Kong I've mentioned are laying the foundation for the next wave of opportunities in Web3. We will continue to employ a multi-pronged approach to facilitate the robust, sustainable, and responsible development of the virtual asset industry. Chainlink's cross-chain interoperability protocol and how it can be a critical component in enabling on-chain capital markets are well recognized by the market here in Hong Kong. I'm sure with Hong Kong openness, transparency, and efficiency as a Web3 hub, and with Chainlink's ability to empower institutions to securely access any on-chain environment from a friendly interface, a lot of good work can be done together. Sky is the limit for us. Let's unleash enormous potential of Web3 together, and together we shall seize the immense opportunities ahead in our Web3 journey. Well, thank you for coming to Hong Kong SmartCon. Thank you for coming to Hong Kong Chainlink, and I wish you all a very fruitful conference and enjoyable stay here in Hong Kong. Thank you.
All right, welcome back, everyone. Now I'm really excited to introduce a great panel focused on bridging worlds, DeFi meets TradFi. Please welcome them to the stage.
Morning, everyone. Welcome to Hong Kong. I'm Gavin, CIO of SNZ Capital, moderator of the panel today. It's my honor. So we have 4 distinguished guests today. Emilio from Ave Labs, Mike from Flow Traders, Jeannie from Paxos, and Rob from A&Z. Yeah. So just quick intro about SNZ before we start the panel. So SNZ is the early investors and strategic partner for Chainlink. So helping them to do Asian expansion, community building, etc. So I'm very excited. This year, SmartCon could be hosted in Hong Kong, and we could be part of it. And so let's start the panel. I would love to have our distinguished guests to make an intro about themselves and also about the organization. And also, given the topic today, it's about like a TradFi meets DeFi. I would love everyone to share a little bit, in terms of the spectrum, where you are and how do you see the conversions. Probably we start from Emilio. Thanks.
Yes, thank you very much for the introduction, and thanks Chainlink for having us here today. So I am Emilio. I am a VP of DeFi for Ave Labs, and I supervise the development that evolves around the Aave protocol as a service provider for the Aave DAO. So currently, we are building a variety of solutions around Aave, which involve RWAs, involve a new version of the Aave protocol, Aave v4, and other new solutions for our stablecoin Go.
Mike.
Yeah, very happy to go next. Big pleasure to be here. Thank you so much. I'm the CEO of Flow Traders. Flow Traders is a publicly listed market maker and liquidity provider founded 20 years ago. So our journey started on the TradFi side. So we became one of the leading ETP market makers and liquidity providers across many different asset classes. But we started touching crypto and digital assets 7 years ago and became one of the key pillars of our firm. So since then, we've become leading in providing liquidity for crypto ETPs. And as such, we have invested significantly over the last few years in building our infrastructure, our risk management, in a broader sense, our business to really lean in on the TradFi side next to the DeFi side. And think one element I would like to highlight, this is not just about for us market making and providing liquidity. We have become a strategic investor. So we did introduce a venture fund 2.5, 3 years ago and put $50 million into it. Since then, we have invested significantly across the DeFi space in trying to understand what the next use case or the next use cases need to be in order to create an understanding of the benefits. And this is very much with the end investor and the end market participant in mind, but more importantly, also to build trust. So I'm also here to highlight that for us, it comes down to regulation. We are a regulated market participant, and specifically around how do we feel about emerging regulation in the digital assets and DeFi space. I feel this is a key component we need to talk about today.
Thanks so much, Mike. Jeannie?
Hi, everyone. My name is Jeannie Lim from Paxos. Thank you so much, Chainlink, for the invite, and thank you, Gavin, for being the moderator today. I'm very excited to introduce who Paxos is. We are not a startup. We're pretty in what we call it. We've been 10 years in the business, and we are the issuer of USD back to stablecoins, such as USDP in the US. So you might hear Pax Dollar. And then we also issue digital gold, such as PaxG, that is mainly also regulated in the US. And we also have USDL, basically launched this year, what we call the Live Dollar, and primarily in emerging markets. And also recently, if you heard news, PYUSD is also our asset. So we white label together, working together with PayPal, we white label their stablecoin first ever, PYUSD, and we just recently hit $1 billion market cap. Thank you.
Thanks, Jeannie. Rob, your turn.
Thank you, Gavin, and thank you to everyone on the panel. So good morning, everybody. My name is Robert Porter. I'm a director in the Digital Asset Services team at Australia and New Zealand Banking Group, commonly known as ANZ or ANZ, depending where you come from. So for those that don't know ANZ, we're the leading institutional bank in Australia. We have 8.5 billion customers across retail, commercial, institutional segments, and we operate in 29 different markets. I was thinking about Gavin's question about where we sit on that spectrum. Now, we recently celebrated our 180th anniversary. And for 177 years of that, we're in TradFi. So I guess we're TradFi maxis for the most part. But 3 years ago, we did establish a small team to look at how digital assets and currencies would impact the bank moving forward. So we started our journey by looking at stablecoin as a medium of exchange. As far as we know, we're the first regulated institution bank that is to issue on a public permissionless network. We've since built a capability with respect to asset tokenization for financial products, and increasingly now looking at key themes around interoperability and working with Chainlink on CCIP.
Thanks so much, Rob. Yeah, so as everyone can see, we have a very diverse composition of the panelists today. Thanks a lot. The first one is well, last week we see some news and market stats saying trading volume of DAX is nowadays like 15% or 20% of that of trading of SAX, right? Given Flow Traders is a major market participants, Mike, what do you thought? Can you share a little bit more about from statistics perspective, what did you see DeFi picking up, CeFi, what's the trend?
Yeah, I would like to start with a qualitative comment. So when we started investing in DeFi, I felt there was still a big question mark on how to tease the future and how to think about use cases. And I'm a big fan of partnerships. And what happened over the last few years, and I would say has significantly picked up over the last year, is an alignment across many different, if you will, parties from the banking side, from the, let's say, startup side. The regulator started chipping in, trying to frame a better picture of the future. And if I just think about DeFi, I very much, given our background, think about how to provide liquidity. And what has happened over the last 2 years predominantly is that there is a high degree of understanding that we need to move liquidity from the TradFi side into the DeFi side. So, and I would even argue we're cooperating, for instance, with Wormhole, making sure that we are creating interoperability between different protocols to make sure that from an investor perspective, if you move liquidity from one asset into another, from TradFi into DeFi back and forth, that you need to have a high degree of, I mentioned trust, but also operational efficiency. Yeah. So that's where we come in. We really want to make sure that we create a trading experience guaranteeing high efficiency, best price discovery and price transparency, and yeah, also tight spreads to make sure that the investor experience is as optimal as possible. So how do we get there is then the question. And what has happened for us specifically is that being a market maker and being an investor, we are extremely focused on building close ties across the broader ecosystem to understand who needs to deliver what. You know, one very prominent example is the All Unity project we engaged upon. So it might be the first regulated Euro-pegged stablecoin across the EMEA landscape. And we teamed up with DWS, the German asset manager, and with Galaxy Digital to really make sure that we have different components of expertise coming together. So if I translate that into trading experience or trading patterns, I can claim and highlight that the amount of institutional appetite we see has significantly spiked.
Yeah.
I can also share that the, I would say, topics being discussed with regulators, and specifically in Europe, the discussions we have, for instance, with the European Commission, really frames a picture of the future where we see coexistence between TradFi and DeFi.
Yeah.
And I think this is a key element we need to further embrace as a community, because when I started looking into it a few years ago, I felt we are all in DeFi taking over, right? But the reality is, think at least for the foreseeable future, that might not be the smartest choice. And one element I feel the TradFi side helps a lot is the, let's say, adoption of best practices. And let's be very specific, KYC, AML, putting these learnings and practices into the DeFi side.
Yeah.
So for instance, we have completely rebuilt our risk management as a trading firm, but we benefit significantly from all the ingredients we learned from the TradFi side.
Yeah. Thanks so much, Mike. Mike emphasized on the liquidity and the interoperability. That's exactly why Chainlink is so very important, right? CCIP, PUR, oracles of this. So Emilio, what's your observation in the lending market?
I'm actually very happy to hear that there are these kind of initiatives in progress, because this is a question that I get asked very frequently when I talk to people that observe the dynamics between TradFi and DeFi. Because like very often it happens, for example, yields in DeFi are like 9 to 10%, and in TradFi are like 3%, and people are like, why there isn't more capital flowing into Aave, into DeFi, if the yields are so high? I could just, like, I don't know, borrow from a traditional finance institution and convert to stable coins and then go to Aave and try to earn yield. But when you actually try to do it, you realize that there are so many inefficiencies and complexities in doing that, that is the reason why there is this kind of a delay in arbitraging this kind of opportunities, right? Which is exactly what it was mentioning before. So I think if we want to make the experience going from the traditional world to crypto back and forth more seamless, these kind of initiatives are absolutely needed to make sure that there is a bigger window of opportunity for people to catch actually this and to intervene in these particular situations. So there is more capability for people to seamlessly enter and leave the market whenever they need to. This would make the experience much better for everyone, I think.
Yeah, thanks so much, Emilio. So in addition to trading and lending, right, Ginny, so in your mind, right, so what the other like exciting and promising topics like stablecoin, tokenized assets? Please share.
So I've been in this week since Monday, and everyone is asking me, what do you think about RWA? Is it going to take off? What are the challenges and the challenges to adoption? And how do we get there? And I see stable coins in general being in like the convergence from TradFi to DeFi, because we work with both parties. We work with banks, and most importantly, we are regulated. We work together very closely with MAS, which is the regulator in Singapore, Abu Dhabi, which is where our USDL dollar is being regulated. We're also regulated in the US, New York DFS. So I think with that convergence and regulatory environment where we are basically the government's like Intel and consultants to help them frame or reframe the way they look at anti-money laundering services and frameworks, and also KYC as well. And I think with that, when we work with players such as PayPal or even Stripe, as you have seen in the news, where folks, institutions of payments players like PayPal and Stripe are starting to think, wow, we can really reduce the cost of acceptance. In the future, maybe no one is going to be talking about T+2 or T+3, and in some countries, T+21. With stablecoins acceptance, we managed to lower the overall cost of acceptance from not only merchants, but payment processors. But the ultimate SMBs are using payment services, their service to ultimately get their funding in almost real time. So I see that as a major use case from the institution's perspective. And then with PYUSD, a real use case in this world that we're partnering with them on is cross-border money remittance. If you think about the biggest sending market, which is the US, and the biggest receiver market, countries such as the Philippines, that the options for remittance today are a few, and usually are in the TradFi system. By working together with PayPal and also the off-ramp fiat withdrawal partnerships that we have in the Philippines, I think it beautifully sets a problem for us to solve, is to reduce cross-border remittance costs overall from the sender and all the way to the receiver, so that if you send $100 PYUSD, we want to make sure the ultimate consumer in the Philippines receives as close to that amount. So that is, in my opinion, a real world challenge that we can help solve.
Yeah, thanks much, Jenny. You mentioned like US, like practicing Philippines as well. Mike also mentioned Europe. Like as Joseph mentioned, like Hong Kong is very open. So highly encourage you guys to talk to Joseph, talk to HKMA to see more opportunities.
That's why I'm here.
Thanks so much. Rob, like could you share a little bit more works at ANZ? And also we understand ANZ have a very good collaboration with Chainlink, CCIP, etc. Would you mind share some with the audience? Please?
Yeah, absolutely. Very happy to. Okay, I think kind of building on what's already been said is there are some primitives and aspects of DeFi that are already kind of breaking out. I think stablecoin is a medium of exchange. I kind of call it the alpha, not the omega. It's a form of tokenized money, but there will be more to come. And so we're quite interested in what those various forms look like. That's part of the reason we're very happy to join the HKMA's Hong Kong dollar plus pilot. So looking at general purpose CBDC, but also tokenized deposit construct. So how will those things work in practice? We're working with Visa as our partner and some of our asset management clients here in Hong Kong, Fidelity International and China Asset Management Company, specifically back on the theme of RWA, tokenizing investment funds. I think if you would have asked me a year ago, would we see tokenized funds on chain from BlackRock? I wouldn't have said necessarily yes, but I think we've seen a significant shift and we're moving forward. So that's kind of a big area for us. It's really around tokenized RWA. And a lot of it is driven by where there is increased regulatory clarity and where the institution is able to build and improve its risk management framework. So I think one of the things on the TradFi side is actually building the deeper understanding. And one of the great things about being on a 9-hour flight from Australia is you get to read some papers. And I read a great paper yesterday from someone called Daniel Liebau at Singapore Management University. And he talks about this concept of DeFi literacy. And I thought it was a really interesting kind of mental model where TradFi institutions have to start better understanding some of the inherent risks that we see, smart contract risk and the like, to start to build the frameworks. Because once we understand the risks, we can align to the regulatory frameworks as they develop across in progressive jurisdictions. That's when I think we start to see the greater adoption.
Got you. Thanks so much, Rob. You talk about like you touch on the risk management, etc. And Mike and Jeannie talk about like regulation, etc. So we see like when DeFi picks up, sometimes there might be some conflicts between like innovation, like a spirit of flexibility, freedom, against like investor protection, risk management. We see some hurdles and challenges there. So from your perspective, what do you think like we either like a DeFi world or like a TradFi world can do better to improve and to bridge the gap between? Probably we start by Mike.
Yeah, very happy to take that question. I think our personal experience is that one key success factor is a continued engagement with the regulators. So we have increased time invest significantly to explain how we feel about risk management, how we have improved. And more importantly, also, leaning into the trust point. And let me tell you what I mean by that. If you just see the logic of blockchain, right, and the transparency blockchain delivers, there shouldn't be a discussion about trust because trust is inherently embedded in the blockchain concept. Still, the application and adoption of blockchain and also being mindful across many different things happening at the same time, we are not there yet. And I feel it's important to be vocal about the effectiveness of the risk management we deploy and constantly improve, but at the same time, lean back to, and I really liked what you said on the use cases and the benefits. And I think what has started happening is that we became much more vocal on our vision, and it's a shared vision by now, on how this could work out over the next, let's say, few years, the next decade. And I feel the cross-country payment theme as a use case is highly relevant, but I would like to even dream a bit bigger and talk about asset allocation. So just imagine the opportunity that at one point in time, you can move liquidity in assets back and forth from TradFi to DeFi, and you can change your asset mix and your risk profile within split seconds at lowest transaction costs with the highest speed possible. I mean, this is a massive transformation of financial markets. And I do believe that this also has a societal impact. So the latest figures we got is from the World Bank that 1.7 billion adults are unbanked. I mean, just imagine the social cost related to that. So not saying that blockchain in itself can solve that problem, but it could be part of the problem solving. And bringing that back to discussions with regulators and other public stakeholders sets the stage for a whole different perspective on how important innovation is for us.
Gotcha. Thanks so much, Mike. So Emilio, so as a crypto native, right, what's your thought, like how we can do more to improve and to get like a massive adoption, mainstream adoption?
We were kind of chatting about this like shortly, briefly, like in the backstage, right? So like it's a bit like I see it as there are different aspects to evaluate here. One aspect, if we want to improve and to bring more people into crypto and to let people use crypto more freely, that's one aspect. And in there, I would say that we are still facing the usual problems that we are challenging since a few years now, which is, lower transaction costs, better UX for on-ramp and off-ramp to crypto, better UX in this multi-chain world that is emerging now, where we have a variety of different networks, different layer 2s, layer 3s. We are improving. A lot has been changing in the last couple of years, and the speed of change is increasing. So we are getting more momentum on that aspect, but there is still a lot of work to be done there. Another aspect is like how and if we actually want to TradFi to adopt more of crypto and more of DeFi, or to start working in parallel with TradFi, or even, which is the scenario that I hope we will see the most, having DeFi become kind of the railway for TradFi, so that it becomes kind of hidden. You don't even know that like TradFi institutions are using crypto and DeFi, but they are doing it under the hood, which would be probably the best outcome for everyone. Mm-hmm. Then that's a completely different ballgame. So we are talking like complexities with regulation that were mentioned before, complexities with a variety of different aspects related to permissioned versus permissionless usage of the technology. I do think that like RWAs are one important first step. I mean, I have been working on Aave and all this kind of stuff for 6 years now, so since 2017. And we have tried many times in the past to bootstrap this kind of discussions. And until 2 years ago, if you would go to a traditional finance institution and try to pitch something with crypto, they would look at you like an alien, come to Earth to try and, I don't know, change the way the world works. This kind of vision in the last year and a half has changed a lot. So we are actually surprised now how many traditional finance institutions.
Okay, let me pitch it for you, right? So, so Rob, so if like let's say like in the next few years, you're like ANZ is going to lend out money on their platform, or you guys are distributing their kind of asset management products to your clients. What do you see the kind of gaps between hurdles between?
Yeah, there's a few things, I guess, right? So when we think about risk, we kind of think about financial risk and non-financial risk. And I think it's actually the non-financial risk that has to be properly unpacked. And we were talking yesterday evening about definitions in this space. And so when you say DeFi, what do you mean exactly? And there'll be a range of different definitions. But the one that will matter most for us is what does the prudential regulator think DeFi is? And they will take their cues from the likes of the BIS and FSB and others. So when we start to look at how the BIS thinks about this, they think about using the technology and providing the services without a centralized intermediary. That's a fundamental proposition of what traditional finance is today. So we have to think about how do you change that business model? So those are some of the things that we think about in the first instance. And then we start to drill down to the operating risk. So what is the underlying network? What are the smart contracts? Have they been audited? Those are the type of considerations, I think, in the first instance that we can work on in a fairly, really small scale, safe environment. And I think that's what will help to drive the convergence over time.
Thanks so much, Rob. Jeannie, apologies to skip you, but like, given the time limits.
That's okay.
So last one, I would say, so every panelist, can you share your vision and outlook of what will happen probably in the next few years, or share some best wishes for the convergence trend? Jeannie, you might go first.
Sure. I feel like I'm being put in this seat on purpose because I feel like I'm bridging the TradFi with the DeFi.
Because you are the flower, we are all the leaves.
There you go. So I strongly believe that stablecoins and Paxos in particular is going to be the solution and in the convergence between TradFi and DeFi, because we play with a lot of players in the DeFi protocol space. We also work with market makers and different people in the ecosystem. But most importantly, to your point, right? Fundamentally, the regulations and the banks, they want to know how are we doing KYC? What does new KYC look like, right? How do we protect consumers to know that the money in the account, whether it's a custodian wallet or it's a bank account, that is safe? So it's the same principles, and I feel like the more we converge together in terms of education, both parties, we do not use jargons. I think that is one observation that I've had is the use of jargons actually doesn't help TradFi conversions with DeFi, because people on both sides may not understand each other. So usually I'm the translator between the clients, between two partners. So I find that over the next few years, that is my mission and Paxos' mission, to basically educate the regulator together with the partners in the TradFi and the DeFi space to bring folks together, and using US dollar stablecoins as a medium of exchange for multiple use cases, whether it's DeFi protocols or RWA use cases or remittance or payments. I think there's so much to do, and I'm very excited to work with everyone in this space.
Thank you, Jeannie. Mike?
Yeah, I can repeat a lot and relate a lot to what you said. What I feel is most important is that we kill a bit complexity and align on the most relevant use cases and lean into that, because it's also about standardization, harmonization, and like your point on jargon, making sure that we all understand what we talk about. The second point is, and I want to come back to our main focus, there will be a significant increase in on-chain and cross-asset liquidity. And we will most likely significantly increase our appetite for collaboration and partnering across the ecosystem to really make sure that from a technological angle, it's doable, because that's another proof point that trust is being built by seamless trading, seamless moving liquidity left, right, and center. The last point I would like to add is making sure that the logic around DeFi and TradFi and convergence, killing a bit this idea of it will take over. What I really like is that there are significant benefits still in the TradFi side, and this really relates to all the infrastructure that has been built for decades. But DeFi, and that relates to your point, is an enhancement opportunity. And if we start embracing that and address the let's say, biggest elephants in the room, and one being, the point on KYC and AML, so that there is an understanding of all market participants on how to think about your own risk and how the infrastructure then has been enhanced and built in order to address it. I think that's a game changer moment for the industry. And I feel this is not a point happening in 5+ years. It will happen faster.
Thanks, Mike. Emilio?
I'll be very quick because I know that we are out of time, but like I kind of mentioned before, so the way I envision it is that at some point, the term DeFi will disappear and TradFi will disappear, and we will just have Fi, in the sense that like it's going to be seamless and like transparent for everyone. That would probably bring the best outcome. This will also probably mean that on both sides there will need to be some sacrifice, some compromise to be made. From the crypto side of things, probably related to some of the principles, hard principles that some purists of blockchain will probably kind of, not take this the right way. But I think that like blockchain has many benefits. Decentralization is one of them. Decentralization is also a spectrum that will probably need to adjust if we want to work with TradFi. And on the TradFi, on the regulatory side of things, like some improvements will need to be made if we want this marriage to actually happen. Like in every good love story is like between two parties, right? Okay.
Yeah, thanks, Emilio. Rob?
I'll be really quick. 3 things. I think the good point for TradFi is we've now stopped asking the question, is blockchain a solution looking for a problem? I think we're well past that way. That's good. Second point, I think we also know that DeFi works, right? The protocols are battle tested. Granted, it works in a slightly different parallel ecosystem, but I think there are learnings we can gather. And maybe the third and final point I would make is, this notion of there's no compression algorithm for experience, you have to go and do the work. So I think collaboration through the likes of regulatory sandboxes and things of that nature will allow us to be able to test things safely, and that's how I think we'll see the convergence.
Yeah. Thanks so much, Rob. I personally really enjoyed the chat today. I think it's really insightful. Hope you guys enjoy. Given time limits, I should call it today. Thank you, everyone. Thank you, all the panelists. Thanks.
Thank you.
Next up for you, we have Ronit Ghose, who runs the Future of Finance think tank at Citi, and he's going to be talking to you about the future of money, which, by the way, is also the name of his latest book. So welcome, Ronit, on stage.
Thank you. I'm going to talk about what money is. It might seem like an obvious thing. We use money all the time. We wouldn't live without money. But there are certain social, cultural, legal aspects to money that I'm going to talk about. And obviously, I'm going to talk about how digital assets or crypto fits into this broader framework. Imagine I was in a desert island, and you were unlucky enough to be there with me. A few of you in the audience know me well. The glare of these lights means I can't really see you, but there are a couple of you in the audience who know me very well. Now, if you were on the desert island with me and you were a friend or family, would we need money? No. If there was 2, 3, 5 of us, even 10 of us, and we were best friends, we wouldn't have money. We'd need language. We'd need language to communicate, but we wouldn't need money. We'd be using gifting. I do something for you. I don't know, I fish. then I cook the fish for you, and in return, you'll do something for me. We'll trade IOUs of favors. As society gets bigger, instead of 10 best friends on this desert island, we have 100 people on the, like if all of you were on the desert island with me, what would happen? We'd have a trust problem. We wouldn't know each other. We'd need some form of money. We'd probably use, depending on what we were used to in that society, beads or shells, rice even. Japan used to use rice as a means of currency 1,000 years ago when the state was weak. We'd use something like that as a form of currency. And then we go on to coins, et cetera, et cetera. Now, if you go to the extreme, for you, right-hand side of the presentation, you'll see a few buzzwords: AI, blockchain, extended reality. That's what we used to call the metaverse, but I prefer calling it X-reality. That's the world of augmented reality and AI coming together. So this is a very basic version of that. These are my Meta smart glasses. But in that world, money is going to look different. Money is going to be multi-format. It's going to be kaleidoscopic. And I'm going to be talking about that in the next 10 minutes or so. But first, let's define money. What is money? So money has a social and anthropological definition, my desert island point. But money also has a legal definition. The reason the Hong Kong dollar is money in Hong Kong is because it's legal tender. If you're a merchant, you have to accept it. The taxi I just took from Central, the taxi driver had to accept my Hong Kong dollar. It's the law. I could have taken out my UAE dirham. I'm based in Dubai. I could have given him a dirham note. He doesn't have to accept it. It's money back in the UAE where I live. It's not money here. So money actually has a legal definition. It's the liability of a central bank. But most money in an economy isn't central bank money. Today in the US, about 75% of money is commercial bank money. Stablecoins and crypto assets have money-like features. One aspect of money is the ability to exchange. I can do payments with money. And obviously, stablecoins and some, not all crypto assets, are a good means of exchange. But most crypto assets are not good means of exchange. They're not legal tender. They're not money. They are money-like. Now, this doesn't mean that it doesn't have value. It has value as a financial asset, in my view. Do you know that roughly 10% of the world's gold sits in India? Yeah, it doesn't sit in Fort Knox. It's not sitting in the Reserve Bank of India. About 10% of gold is sitting in India, most of it held by Indian women. So all my crypto friends who talk about self-custody, Indian women have been doing this for generations, for centuries. Why is gold in so many cultures such an intrinsic part of society, culture? It's got intergenerational value. You can self-custody it. Where institutions are not trusted, where institutions are weak, this has value. It also allows you privacy. And conceptually, I think one of the big positives of Bitcoin and certain other cryptocurrencies is that we get privacy. And we have an innate right, I believe, to privacy. And how do we do privacy in a digital world? You do it through cryptocurrencies. Now, this isn't a plea to policymakers to say we have to abandon all AML rules, all sanctions rules, but I believe there's an innate right to privacy. Other people don't need to know what we're doing, and crypto fills that hole. Now, having started with that kind of cypherpunk philosophy, I find it somewhat ironic that in recent years, the narrative in the cryptocurrency industry has shifted to the institutions are coming. I work for one of these institutions. I work for one of the largest, most international banks in the world. I run a think tank for Citi, called Future of Finance. Parts of our bank trade crypto. Parts of our bank will hold crypto. Other parts of our bank loathe and disdain crypto. But what's interesting is the role of particularly US-based institutions on the investor side in the last couple of years. And you can see that in the correlation. Not the short term, not the one-day correlation or the one-hour correlation, but when you take correlations on a rolling basis, on a monthly basis, you've seen a significant increase in correlation of Bitcoin returns and major US indices, stock market indices, because the holders are beginning to get more and more converged. We've seen an explosion, of course, as all of you know, in the number of coins. We now have, I don't know how many it is. When I did the deck, it was a couple of million coins. It's probably more now. I think of for me, the mental framework of the analogy for this is railways. I don't know if anyone studied or looked at the history of railways when the railways began in the 1830s. If you invested in a railway company in the 1830s in England or the 1840s, you'd have lost most of your money. Most railway companies went bust. But they built something very valuable. They built an infrastructure, first in England, then in France and Belgium and Argentina and the rest of the world. And that's the mental framework of the model I use. Most of those 2 million coins are going to go to zero, but some of them are going to become very valuable. So caveat emptor, buyer beware. Carrying on that kind of transport analogy, railways appear 1830s. As I said, most of them go bust. But by the 1930s, the 1950s, in most countries in Europe and then in Asia, they become a staple part of infrastructure, of moving people. And for me, railways, similarity with blockchain. Now, the roads that existed in the 1830s when railways come about, they were pretty bad, right? What were the roads built for in the 1830s? Horses, carriages. That's what the roads were built for in the 1830s. And over time, the roads get better. 100 years later in Germany, we get the Autobahns. 120 years later, we get interstate highways in the US. I see the fiat system continuing to improve under the competition and threat of new technologies coming along like blockchain. So we don't have real-time payments cross-border. We have it domestically in 70+ countries now. But cross-border, you're beginning to see the vast majority of payments now by volume clearing in an hour. 3-5 years ago, it would have been typically several hours. 10 years ago, it would have been several days. So for me, the fiat system is like the roads. Those roads used to be literally in the 1830s to 70s covered in what? Manure, because there was horses and carriages. The roads got significantly better as the railways can. And then we had trams. And there are lots of ways of getting around. If you're in Hong Kong, most cities in Asia, there are lots of ways of getting around. That's the kind of mental framework I have for how money is going to look in the future. There's going to be lots of ways of getting around. Now, one of the biggest shifts that we've seen in the kind of institutions are coming narrative is tokenization of financial assets. This takes time because you have to rewire all the existing plumbing of FMI, the existing financial market infrastructure. So it always takes longer than you expect. It's not just the variable cost or the variable transaction benefit that matters. It's about integrating it into the whole existing stack. And that technical, legal, cultural integration takes a long, long time. But what you have now, for the first time in the last 15 years, is some of the largest asset managers, investors, some of our biggest clients saying, we want to do tokenization. And this is a huge, huge positive development if you're interested in blockchain in the last couple of years. Now, ironically, and this is going to be a short-term or a medium-term forecast that I'm going to make, ironically, these institutions, getting interested in tokenization is in the next 3, 5, 7 years going to lead to a re-entrenchment of the US dollar. And it's going to be one of the ironies of a movement that began with cypherpunks, a movement that began with kill the dollar or kill the banks. Crypto and blockchain is actually going to reinforce the dollar. Why? Because most of the assets going to be tokenized are dollar-based assets. They're not euro assets. They're not RMB assets. They're not Aussie dollar assets. They're US dollar assets. The vast majority of money market funds, VC funds, PE funds that are being tokenized are US dollar assets. So it's one of those ironies. We're going to go in a circle. We're going to have emerging technology actually reinforce the role of the dollar, not undermine the role of the dollar. And that's, if I'm wrong on that, hit me up in the next 5 to 7 years and say, Ronit, I saw you on stage in Hong Kong at the Kerry Hotel. That was a horrible forecast, but the dollar is actually going to get reinforced and strengthened. Now, all of these thoughts, comments are publicly available. Sorry for the plug. You can put into Google, search engine of your choice, City GPS, and look into these reports. You can also, if you're interested in some of my thoughts, look at a book called Future Money, which I've just put out earlier this year, available in Hong Kong and around the world. Thank you so much for listening. It's been a pleasure to talk to you today.
Okay, up next, we have the Chief Executive's 2024 Policy Address, New Business Opportunities Unleashed in the Financial Services section in Hong Kong. From Invest Hong Kong, please welcome Alpha Lau.
Ladies and gentlemen, good morning to you. May I first express my warmest welcome to all of you who came from overseas or mainland China to Hong Kong, and I hope that you have enjoyed the dynamic energy that Hong Kong has offered so far. Now, we are very pleased to have SmartCon hosted in Hong Kong. SmartCon and Chainlink are important for Hong Kong as technology and innovation are important to our community and business. Chainlink connects the world to blockchains via data and protocols, and Hong Kong offers immense financial talents and business future, bringing the traditional and the decentralized finance together. More importantly, Chainlink and SmartCon are instrumental in bringing in technology insights, educating our local talents, attracting enterprises and builders to keep Hong Kong at our best energy. Now, some of you would have gone to FinTech Week in the past 2 days. If you have, you might have heard part of my sharing with you, but I find it quite important to share the latest in the Hong Kong policies that could be exciting to the room here. So the Chief Executive of the Hong Kong Special Administrative Region, Mr. John Lee, announced his policy address just 2 weeks ago. Our government is committed to cementing Hong Kong's position as a global leader in financial innovation. I'm excited to share some of the financial and fintech key measures from the policy address. I hope you'll find these developments exciting and they'll inspire you to have new business ideas. These measures are laid out in 8 aspects. We will continue to enhance the mutual market access regime and reinforce our status as the world's largest offshore renminbi center to further drive renminbi internationalization. We will further improve our infrastructure and upgrade the central money markets unit to cater to the settlement of various assets in different currencies by international investors. We will also develop the fixed income market infrastructure by, for instance, setting up a central clearing system for renminbi-denominated bond repo transactions to make renminbi sovereign bonds issued in Hong Kong a more popular choice of collateral in offshore markets. We will also enhance the cross-boundary Wealth Management Connect scheme. We will bolster offshore renminbi liquidity and make good use of the currency swap agreement between Hong Kong and mainland by expanding the nighttime cross-boundary service capability of our renminbi real-time gross settlement system for global settlement in offshore renminbi markets. We'll be also exploring providing more diversified channels for obtaining offshore renminbi financing. We plan to provide more renminbi-denominated investment products as well. Companies may wish to have shares listed in the renminbi stock trading counter and expand the scope of renminbi equities. More renminbi bonds will be issued in Hong Kong, including more green and sustainable bonds. Support from the Ministry of Finance in China will be sought to boost the size and frequency of renminbi sovereign bonds issuance and to launch bond futures for those in Hong Kong as soon as possible. We are also actively liaising with the mainland authorities to expand the Bond Connect, including expanding the scope of eligible mainland investors to non-bank FIs, such as security firms and insurance companies, and to enrich liquidity management tools, actively exploring and introducing at appropriate junctures various bond repo and collateral products and arrangements using onshore renminbi bonds. So Hong Kong has the highest concentration of insurance companies in Asia. To further strengthen our position as a global risk management center, our insurance authority will examine the capital requirements for infrastructure investment in order to drive insurance companies' asset allocation and infrastructure investments, such as in the Northern Metropolis. And we will continue to invite companies, including large Chinese state-owned enterprises, to establish captive insurers in Hong Kong. And I also want to share that in the wealth management space, there are over 2,700 single-family offices in Hong Kong, and sovereign wealth funds from the Belt and Road countries continue to set up here. The industry predicts that we will become the world's largest offshore wealth management center within a few years, surpassing Switzerland. To make it even more attractive for global capital to be managed in Hong Kong, private equity funds will have the new distribution channels through Hong Kong Exchange's listing. And our new capital investment entrance scheme, that is our investment for residency scheme, is being enhanced. You can now invest in high-end residential properties, and this could be counted towards your investment amount. And investments made through a family office will also be counted, tying together the residency scheme with the establishment of family offices here. We will also expand the scope of tax concessions to add qualifying transactions for funds and single-family offices. We'll continue to actively expand and deepen our overseas networks, forge more financial cooperation with the MENAT and ASEAN nations, and explore further collaboration with Islamic markets in finance, and organize more international financial mega events in Hong Kong, such as this one. There will also be a series of enhancements to the securities market, including opening up new sources of capital overseas, such as launching in the Middle East ETFs tracking Hong Kong stock indices, optimizing the vetting of listing applications, and boosting market efficiency and lowering transaction costs. And to promote cross-border financial inclusion, the financial regulators of Hong Kong and mainland China are pushing forward the linkage of fast payment systems in the two places to facilitate real-time, cross-boundary, small-value payments by residents on both sides. Now, also excitingly, Hong Kong is one of the world's largest gold trading centers. Our city's security and stability make us an attractive location for physical gold storage, driving more gold trading, settlement, and delivery activities. And behind every real bar of gold, you can tokenize it and you can trade it. And with the world politics, geopolitics situation as they are, Hong Kong will become an even bigger gold trading center. And our government will further develop world-class gold storage facilities, stimulating the development of the related industry chain from investment transactions, derivatives, insurance, storage, to trading and logistics services, collateral and loan business, opening up new growth areas for the financial sector. We will also improve the gold trading mechanism and regulatory framework and aim to include gold-related products in a mutual market access program with mainland China. And last but not least, one of the topics most dear to the international market is to use green finance to drive sustainability. The international carbon market launched by the Hong Kong Exchange is the world's only carbon market to offer Hong Kong dollar and renminbi settlement for trading of international voluntary carbon credits. The Hong Kong Monetary Authority, which is our monetary regulator, will roll out the Sustainable Finance Action Agenda, which includes the launch of the Digital Bond Grant Scheme to encourage more financial institutions and issuers to adopt tokenization technology in capital market transactions. We will fully adopt international sustainability disclosure standards this year, making Hong Kong one of the first jurisdictions to align our local requirements with ISSB standards. So we are very excited today to witness the enthusiasm in the room about technology advancement and passion for change. May SmartCon and Chainlink work hand in hand with Hong Kong institutions and tech teams. May we embrace Hong Kong's new chapter and bring about problem-solving, fun-loving, and friends-making days in the beautiful sea-breathing landscape of Hong Kong this fall. And let's hold hands for a new technology future in finance. Thank you.
All right, I know you've been paying attention for a little while, so we're going to take a brief break, get some refreshments, some coffee, something to eat, walk around the expo floor, but we will be resuming on the dot at 11:30 a.m., so about 10 minutes from now. So we'll see you back here at 11:30 a.m.
Please welcome back Zubin Pretap.
Welcome back, everybody. Welcome back. Welcome back. We hope you had a nice, refreshing break. Next up for you, we have a talk on trusted digital twin tech, bridging the real and digital world. So please welcome to the stage from Ant Digital Technology, Ying Yan.
Morning, everyone. We're excited to be here and talk about Web3 technology from our own experiences. As a pioneer in this field, on digital, on blockchain, has been on this journey with our partners in the last decade, facing and overcoming different challenges together. So we have seen the evolution of Web3 technology from our own practice. So there's a curve, 3 curves there. Each is marked by a significant milestone. So let's look at the chart. The first curve, which is the purple one, it represents the volume of data on chain. It was our early stage. The journey starts from the year of 2017. At that time, we want to verify the value of blockchain in business. And by the end of 2019, we got our first 100 million. That is 100 million transactions per day over 50 different scenarios. And also during this stage, we're focusing on building our robust blockchain infra that can support 1 billion user account with tens of thousands of transactions per second. And because of this first 100 million milestone, this confirms the value of blockchain for enterprise in business. Then let's look at the second curve. The second curve in blue, that represents the usage of data on chain, right? And by the end of the year 2023, we got our second 100 million. That is 100 million data queries on chain per day, right? During that phase, all the application has promoted integration of blockchain technology with others, for example, IoT, AI, security, and privacy-preserving computing, and so on. And blockchain starts to empower the business by providing the traceable and verifiable data. So we see people are not only putting data on chain, but start to use data effectively. So we call this stage data value phase, right? And start from beginning of this year, working together with our partners, for example, Hong Kong MA, for example, Langxin, JSB, etc. We got our third 100 million. That is 100 million real-world asset on chain. Now, this is the start of our third stage, the asset transaction stage. Yeah, we believe the journey of digital, of on-chain actually is a microcosm of the whole industry. And we have high confidence that this curve will keep growing higher and higher. Okay, and also let's consider the current stage for digital transformation. I think everything is aligned perfectly together. And this is the perfect time that we are entering an area of highly active digital asset circulation. Yeah. Today, we have seen a loop that is all the real-world data, physical asset, tangible items are being tokenized and integrated into the digital world. We all know that all the transactions, all the commercial events actually are centered around transactions. After the asset being tokenized, that will greatly improve the efficiency of a transaction, right? So we can see they'll bring greater validity and broader perspective to all the financial systems. But however, when we're talking about tokenization, we have a lot of challenges, right? Now here I list the two most important and most challenges here. One is, for example, how to verify the authenticity of the asset, because there are a lot of different types of assets and they keep changing, they're dynamic. So it's very challenging, right? And second one is how to guarantee the security of the asset during circulation, right? And we believe all the challenges actually need to be addressed technically, that we need to find the technology to solve all the challenges. So therefore, for on digital, on-chain, we have one goal that keeps unchanged. That is, we want to have extreme performance and security to address all the problem and technologies and solutions and challenges of the mentioned above, right? So therefore, to address all the challenges, actually we developed a framework we call financial grade trusted digital twin technology. It contains two areas. The first one is centered around blockchain that can support this highly active asset circulation. So we have a robust blockchain network together with our interoperability protocol. And on the other hand, we also need to address all the real world problems, for example, how to guarantee the verifiability and the security, right? Both of the areas need to be addressed. So first, let's look at the blockchain. So I'm always very excited to talk about our on-chain infrastructure. We call it HOU, H-O-U. Now, HOU, H stands for Scaling Hybrid. It contains the heterogeneous chain interoperability and off-chain computation integration. And this O stands for scaling out, right? So we can support thousands of nodes as well as thousands of subnet. And up stands for, U stands for scaling up. Yeah, talk about performance, as I mentioned. The network actually can support billions of users, tens of thousands of transactions per second, and the storage can support PB level data and with a second level latency. Yeah. But however, in practice, manage such a scaling network is not easy, right? So also develop our service we call blockchain service for ANT. So we introduced a mechanism we call 3O for orchestration, observation, optimization to help all the scaling infrastructure to be used in practice, right? And as I mentioned, on the other hand, so we also pay attention to the security and verifiability, right? So we develop a distributed technology in every single point to guarantee an on-chain and off-chain trusted loop. So we have a lot of core technologies here to support this trustability and verifiability. Now here I want to introduce three types of technologies here. The first type is how to make the off-chain computation verifiable, right? So we spend a lot of efforts on developing this software solution as well as hardware solution. And the first one, technology I want to share is zero knowledge proof, right? This is one of the promising technology to support the verifiability. But we also know that whenever the computation is complex or we have a large volume of data, zero knowledge proof fail to be practical, right? Because of the efficiency. For us, actually, we develop a hybrid architecture that we have ZKP processor plus a lot of co-processors, for example, a hardware acceleration to make the architecture into practice. Now, currently, the ZKML, actually within this architecture is used in our model trading market that can help the models provide their quality precision certificate using this ZKML. Yeah, and this make this computation trustable, verifiable, right? And for verifiability, another technology which is also very interested is the TEE, Trusted Execution Environment. Actually, we also spent a year on developing the confidentiality of blockchain because in the industry, especially in financial scenarios, confidentiality, verifiability is really important. We want to make every transaction, every smart contract execution to be verifiable, but not visible, right? So confidentiality is very important. Now, recently, we also found during the off-chain computation, this is modeling and prediction, complex computation also very important. So we developed the GPU plus TEE. That is make GPU computation confidential, right? This service into practice. Yeah, as far as we know, we are the first provider to provide such of a GPU TEE for off-chain computing in the industry, right? Yeah. After we solving the problem verifiability, now let's look at the security, right? Smart contract security is very important. Of course, all the assets actually are programmed into smart contract. Yeah, this is so important. Therefore, there's no single technology can solve all the problems, right? So for us, we develop different technology. For example, we have formal verification. So we have static scanning. And recently, we also have our AI to support for this better efficiency, precision, and lower false positives. right? Therefore, we can guarantee the smart contract, security when they're doing the circulation, right? And the next part is about key security, right? This is also very important. When we talk about asset, the key actually is lifeline. So the team actually also spent a lot of time developing the key management technology in this field. And we want to always want to break through the barriers. And this year, actually, we have some breakthrough of the underlying algorithms that we can greatly improve the flexibility. For example, the number of shards that can be changed dynamically in the application. And so we have better security, scalability, right? The core algorithm actually was published in the top security conference and journals this year, for example, CCS and TIFS, right? Yeah. So with all the core technology that I mentioned, that we can guarantee the security and verifiability to guarantee a trusted on-chain, off-chain loop. Okay, and because of all the technology that we developed, we can have a solution in practice. Our RW solution, we call this dual chains and one bridge. Yeah, there is an asset chain that can handle the asset onboarding, pricing, rating, and risk management. So we have another transaction chain that can handle tokenization, distribution, and settlement. We also have a data bridge that can connect this cross-chain probability and also can guarantee the data transfer, the confidentiality to support cross-border, the data compliance solution. Yeah. So this whole process actually can make this asset tokenization transparent and also can make all the collaborations. We can see different parties in this loop to collaborate efficiently. And the whole solution actually was put into practice this August under the guidance of Hong Kong MA that can help renewable energy company in China mainland to secure 100 million in Hong Kong. Yeah, so we are very excited that our technology from our trusted digital twin technology can support to connect the green asset to a global financing. Yeah, and at the same time, we also know that both the technology innovation and the application innovation cannot go without the ecosystem. So we have our on-chain open labs that can gather all the developers, researchers, and industry pioneers together for the technology innovation. On the other hand, we also have our Zen Web3 cloud services that can support all the innovators from the Web3. Yeah. At the same time, we also want to have all the industry partners that we can get together for both technology and the scenario innovations. And we hope to join our hand and to enter the future of Web3. Okay, thank you.
All right. Next up, we have a fireside chat with Bedrock's Gandalf and Lorenzo Protocol's William Lin that's going to be moderated by Chainlink's Luke Lim. Welcome them to the stage, please.
Welcome, Gandalf. Welcome, William.
Thank you. Thank you.
Great to have you guys here with us at SmartCon 2024 in Hong Kong. First and foremost, maybe let's do a round of introductions. If you can share a little bit about what you guys do at your protocol and what your protocol is as well.
Absolutely. It's a pleasure to be here. Thanks for having us, and thanks to Chainlink. I'm Gandalf, and I've been around in Web3 for about 7 or 8 years now. Worked in a variety of industries and been in DeFi for about 3 years. I'm with the Bedrock team. We're an LRT, or a restaking protocol, and we run a number of products, including on Ethereum restaking, on Bitcoin restaking and on IOTX restaking as well. And the team behind us also run a lot of staking infrastructure for Lido, for Swell, for Obol, SSV, and a range of other staking providers.
Oh, cool. Okay, so I'm William. I'm head of strategy at Lorenzo Protocol. So been around Web3 for a while. I previously helped build one of the biggest interest rate swap and leverage trading protocols on Ethereum. And essentially what Lorenzo Protocol is we're building the finance layer for Bitcoin, Bitcoin's liquidity and yield. So essentially we're tokenizing the yield from Bitcoin native protocols like Babylon, and then we're making that tradable and creating these liquid active markets for them.
Super interesting. I mean, we've seen Bitcoin as a sector, right, really take off in terms of building more financial products, on top of which most people think of Bitcoin as a proof of work token. How do you guys foresee, and I think right now we have various different players within the space. Obviously, the biggest is Red Bitcoin. I think now, just checked earlier this morning, there's $10.6 billion in TVL. But how do you guys compare, right, the difference between, let's say in the case for Bitrock's UniBTC and Lorenzo's STBTC, how that differs from Red Bitcoin?
Yeah, so wrapped Bitcoin, I mean, it's essentially just a way for Bitcoin to be utilized on other chains. That's its primary purpose. It doesn't have any yield underlying it. It doesn't have any other utility built into it at a fundamental level. And that's where, say, Bedrock's UniBTC really differentiates. So Bedrock takes the wrapped Bitcoin and the underlying Bitcoin that's locked away on Bitcoin's layer 1, and it essentially stakes it on Babylon, and it creates this liquid asset that is now yield bearing. And the liquid asset is then, because we work with so many different DeFi protocols and it's integrated in those, it then allows for this layering effect. Whereas with wrapped Bitcoin, there's no, I mean, yes, you can use wrapped Bitcoin in, say, lending protocols, things like that, but there's no core team that are really driving those integrations. And so you can get these, whether it's looping strategies, whether it's providing liquidity on DEXs, whether it's working with foundation teams. I mean, we work with the Arbitrum Foundation, the Optimism Foundation, and a range of other foundations as well, Binance team, to really create this growth and this drive for engagement with the token itself. And I think that's some of the core things that really differentiate just wrapped Bitcoin as just that underlying asset versus yield-bearing Bitcoin derivatives.
I mean, you spoke about Babylon, right? Maybe William, you guys have also been, Lorenzo has also stake BTC, I mean, right? STBTC. How do you foresee, like, what exactly is Babylon? How that would play out in terms of new opportunities for Bitcoin as well?
Yeah, that's really interesting. I think like the main sort of opportunity here is that for the longest time, like the main like narrative or like the main value proposition of ETH over Bitcoin is that ETH is natively yield bearing with like the proof of stake system, right, built into the Ethereum protocol. So Bitcoin hasn't had that, and obviously it's performed very well for that. So I think like the main thing we're seeing this cycle is that Bitcoin is kind of solidified as a general sort of, you know, macro hedge, whatever you want to call it. But also it's like a bet on like the general index of crypto growing, right? And I think that, yeah, I think that's sort of like a given. Just how do you price that? And in the case of, yeah, so I think what Babylon is doing is allowing, you know, even like allowing users to take that Bitcoin and start earning, you know, native yield through securing, you know, chains. So I think with like stuff like the halving really quickly, you know, Bitcoin needs more sustainable security. And by doing that, by allowing this inactive Bitcoin to be drawn out and being used to secure new protocols and, you know, economic primitives on top of Bitcoin, it's both generating more yield, but also making Bitcoin a more attractive asset. And this is relative to Ethereum, which is harder to determine. It's kind of more like a tech bet at the moment. Yeah, so I think that's how I see it.
Got it. I mean, I'm personally super interested within how the eventual landscape would pan out. Having new financial premises built on top of Bitcoin, I think that's really what everyone is looking at to build a new financial system as well. You also mentioned about chains, and with so many different new L2s out there, there's also a term of Bitcoin L2s, probably very similar to what you were talking about, where you have Bitcoin as the underlying or either staked or restaked collateral that provides economic security to the chain itself. As you guys are looking to build yield-bearing Bitcoins and expand to different chains, how do you guys see the landscape in terms of getting your token out there with regards to every single chain that's possible?
I think it's really important understanding the ecosystem in each chain, and every chain is not the same. In fact, most chains are quite different as far as the user base, the projects that are building on top, the main activity and utility on those chains. For example, Arbitrum has a very strong DeFi ecosystem, whereas say Binance, you've got DeFi on there, but the user base and predominantly it's a little bit more focused around either the gaming or the drive that Binance have been doing, whereas with Solana, it's more focused around, say, the NFT side of things and a bit more degen excitement going on there. And so being able to understand the user base and that ecosystem is really important. And so, for example, with Arbitrum, we've focused heavily on doing those DeFi integrations. We work with Pendle, we work with Camelot, we work with Ramses, we work with Uniswap, Balancer Curve, all of those main dexes. We work with all the lending protocols, etc. Whereas when we go on, say, Solana or Binance or Optimism or Base, etc., we're going to adjust our approach, and we're going to work with the foundation team. I think that's really critical there, but also creating an organic campaign or growth strategy that really speaks to those people and speaks to the institutions as well, because we, with Bedrock, we're very focused on the institutional side. And so being able to drive that institutional growth onto all of these different chains, whether it's an L2 or Bitcoin L2, an EVM, etc., I think that's going to be critical for the future success of the ecosystem as a whole.
You bring a very good point. I think it's interesting to note that I see each chain kind of like cities, right? And each city is good for one particular culture, has its own culture, what its strengths is at. The question is, how do you connect those cities? And I think this is a great chance. So I'm proud to announce that we are also working together with both Bedrock and Lorenzo, right? And I think earlier this month, we announced with Bedrock that you guys will be using Proof of Reserve.
Yep.
But I think now, together with Bedrock and Lorenzo, we're entering like partnerships together with you guys, where you guys will also be using Chainlink platform with regards to price feeds, in terms of accessing DeFi, Proof of Reserves to secure and provide transparency and work alongside DeFi lending protocols as circuit breaker, but also with regards to CCIP, right, to bring your token across various different chains. How do you foresee this work and partnership alongside with Chainlink platform? How does that help you guys scale as well? Maybe William, you want to kick things off?
Yeah, I think, okay, so I think bringing, allowing users to keep custody of their Bitcoin and using it for and generate yield while using that in, all these different cities, right? It's really important. But the core of it is, are the assets safe, right? Can I verify that? And when I move across, chains, right, is it secure? So I think, personally, I love Chainlink. I think Chainlink's one of the greatest things that came out of the ICO era, like the 2017. And I think Chainlink has weathered, Chainlink's been here, and I foresee that Chainlink will be here even afterwards, so that with both a strong brand, team, ecosystem that Chainlink has, I think it just helps users feel much more secure. And using a lot of the new products will help both Lorenzo and Bedrock both validate that, but also increase security of our own protocols while presenting this very attractive core offering to to retail users and to users of crypto, DeFi, and whatever. Yeah.
Thanks for the kind words.
Yeah, I'll add on to that as well. And I think because Lorenzo and Bedrock were both focused on integrating into all these different chains and creating I guess you could say, a multi-chain approach, it is really important to find this underlying trust and transparency that's quite difficult for a lot of people to understand. I mean, just taking Bedrock, we accept FBDC, we accept TBDC, we accept WBDC and MBDC, and then we do that on 12 different chains. It's going to be really, really difficult for people to go to all of those different chains, all those different token types, and understand where everything is and how it relates, etc. I mean, that's a job in itself. And so being able to use Chainlink's proof of reserve, which I know we're creating a massive headache for you guys in that, but being able to simplify that into one location is absolutely critical, not only for the users, but also for the partners in the DeFi protocols, the institutions, the VCs, the liquidity providers. All of these guys require this. And then taking that further again, we're also building that into what you would call a smart minting approach, where the minting itself looks to the proof of reserve and understands the balance there and makes sure that it stays one-to-one. And so it also ensures that there's no over minting or under minting or anything like that. It just adds to that security as well. And I mean, with Lorenzo as well, with you guys, you've got your YT token, etc. It's just as critical as well.
Yeah, it's definitely not easy feat. You guys have put us through quite a fair bit of a good challenge, right? To build out secure proof of reserve feeds with the many different reserves that you guys have and different tokens that you guys have across those chains. Maybe to wrap things up, right? One of the key questions is, if you look at you bearing Bitcoin, right? Or even wrap Bitcoin in general, right now we're looking at less than 1% penetration rate in terms of Bitcoin as asset class. How do you foresee, or what are some of the challenges, and how do you foresee us increasing that percentage to get more people involved within the space as well?
Yeah. Okay. So I think, like, to put it quickly, I think Bitcoin's the most attractive asset of this cycle. I mean, of all of these cycles, right? And I think that what Babylon Protocol is doing is bringing out inactive Bitcoin, because most Bitcoin don't ever move, much less like the 1%. And we're seeing that like over $1 billion have been taken out and put into the Babylon Protocol and reactivated. So I think what we're seeing is that with all these new financial primitives and being able to use your Bitcoin like cross-chain, this will draw out both retail users, inactive Bitcoin, and also institutions to start participating and build interacting, building out the Bitcoin ecosystem.
Awesome. We'll wrap things up given that we have time, but it's so good to have you guys here and then to announce our partnership together as well. We would love to continue working alongside with you guys for the next few years.
Absolutely.
Great being here.
Appreciate it.
Thanks, Gandalf. Thanks, William.
Oh, I think you go.
All right, next up, a really interesting conversation on the evolution of Web3 wallets, gateways to the decentralized identity and privacy. And so for this talk, please welcome from OKX, Lennox Lai.
Testing. Yeah, my name is Lennox. I'm the Global Chief Commercial Officer of OKX. Today, we'd like to talk about one of our business strategy, one of the key products on OKX, the wallet. So OKX basically start the entire journey as a crypto exchanges. Crypto exchange is basically a centralized business model. We match orders, we create products. At a certain point of time, we think the crypto industry, of the blockchain industry, it needs to evolve to the next stage, we need something else. We need much more than trading, much more than product, much more than financial product or tradable products. So I think 2 or 3 years ago, we began a new team. We built a new team. We assembled a new team with completely new expertise and think about how to bring OKX user, the Web3, the Web2/Web3 users to the next step, to the next phases. We believe one of the entry points, there's different companies have different kind of strategies. We believe one of the entry points probably relies on the wallets. And we believe wallets, crypto wallets, represent the very key entry point for us, for humanity stepping into the decentralized futures. Today, I would like to talk about a little bit about the fundamental product principle. That's why we build the Web3 wallets. Why become so? What needs to be done to be that successful? And why we think that could be so important in futures. I think about the first step, right? 2 or 3 years ago, there are different kind of layer 1. There's only layer 1. We talked about layer 2 back in time, but there's a kind of a very slight debate. The debate is whether or not the one chain would have more, or there were multiple different kind of chain with different kind of strategies and technology. We tend to believe a multi-chain future. And because of that premises and assumption, we believe when we're going to live in the multi-chain, it's gonna have a lot of access sit across different kind of chain. For the user to interact with different kind of blockchain, we need different kind of wallets, or different kind of technologies, and access need to rely on different kind of technology to swap in between different kind of blockchain. There's a risk, there's slippage. So we believe we need to build something we need to build an entry hub for wallets who have capability to manage assets cross-chain. So we built a new team. The wallet team began to interact with the OKX exchange capability. We migrate some of the persons, some of the developers and wallets and security engineering to starting to work on different kind of integration with different kind of blockchain. We don't pick. We don't rely on major chain. Any early stage startup, early stage layer 1, we believe to integrate technologically. We believe everyone should have equal chance. So currently, we focus on how to optimize the integration experience, how to monitor the blockchain activity, how to determine whether it's safe, and how to effectively monitor the double spending problem. So currently, I think OKX already integrate over 17 native chain, and also different kind of strategies, different kind of capability. The good thing about that is right now, because of the very basic infrastructure, currently OKX wallet have a capability to look for, discover, and swap native assets, natively built on different chains, and also we effectively know the best price in the markets. We effectively have the full picture of the liquidity of different kind of assets. I think this is very fundamental. This is a very basic infrastructure. User might not necessarily need to be aware. The algorithm we have been optimized for like 10 version in terms of how we swap token in between different chain. User doesn't really necessarily to understand, but it's actually greatly improve a lot of the experience. So it is one of the we core products right now currently. in OKX wallet. Over billions of volume have been traded using OKX DEX currently in the market. The next, I think it's like step two, we'll call it step two. Once we have, when a wallet, we have the capability to interact with different kind of fundamental layer, blockchain, we're starting to think what it means to the applications. You think about, you have the best internet, the internet with different kind of ISP provider. But what's next is what we need to build to enable better application, better decentralized application to be available on whatever blockchain you build in. We believe it's field concept that might be very crucial. The first one is we call it decentralized identity management. We think we have a belief that probably you have when you have a real life identity in real world, you're living, you're paying salary, living at jobs, 9 to 5 every day. But you should have an on-chain identity that represent you by data, vectors, your reputations on-chain. So we literally have an on-chain identity. But at the same time, we need to think about how to maintain your identity is relatively decentralized fashions. So we build infrastructure for DID, decentralized identity, and also very important to different kind of DApps because wallet is meaning the storage of certain kind of value, but as a lot of scenario, different kind of DApps requires the definition of a user. The best way to represent a user is probably not based on your biological credential, but it's really based on your digital reputation, your track record, your trade record, and everything activity on chain. That's also and how to maintain decentralized and safe, and that's one of the key challenges back in the days for in terms of our technology. We got step two, right? So once we have DID, decentralized identity, you got capability to trade across chain. We probably think ahead that what's the best way to store and review your informations at users' discretions. And also, on the other hand, what's the best way for the projects, the DApps, the government, also the regulators to seek consent for the user and ask for more information, for certain informations, at the same time to remain privacy of the users. So we invest a lot of time, fundamental research, empirical research, web university, to work on zero knowledge proof to be implemented in certain area within the product, within OKX product. We think one of the very key attributes for zero knowledge proofs KP internally is whether or not we have the capability, what we call the selective disclosure. So the user, we have the discretions to disclose necessary information to certain counterpart. And that brings to the next level of the apps. We believe that the next step of a decentralized futures definitely include law enforcement and regulators and also other highly accredited financial institutions. And we believe that in order to take it to level, we need to have certain power for the regulator to have the regulatory oversight. This is one thing that we often talk about when OKX applying license in global scale. There's also key questions related to compliance principle. A lot of them related to regulatory oversight, not just on transaction monitoring or AML rules, but also how to define a user within Web3 context and how to monitor their activities of regulatory oversight. We believe zero knowledge proof is one of the very key technologies so that a user can reveal the necessary information in order to access certain kind of features that require regulatory oversight. It's very advanced technology that requires very advanced mathematical oversight. We did a lot of research, have a lot of innovation experiments onto that particular area. Then finally, finally is actually one of the final pieces that OKX is working on as whether or not we can further enhance the user experience on the definition of wallet, the definition of your wallet. Previously, we feel one of the key roadblocks for general user is they think Web3 is as easy as Web2 experience, but in reality it's not. There's a lot of security elements that involve private seed phases. We believe that maintaining seed is one of the key roadblocks based on our data within our wallet onboarding process. So we introduce a new approach, social recovery. User can recover their private keys through a signed, trusted contact. We believe that's one of the key areas for Web3 users to maintain first custody, also maintain its privacy, decentralization, and also greatly improve the experience, accessibility, also to retain their trust over the Web3 journey within wallets. So we believe we have been working on centralized business model for so long. OKX Wallet happen to be our very successful product. Currently, I think we have 2 million users every single day, billions of access, store, manage, trade within this wallet. I think our wallet needs to recreate the second OKX globally. We're thinking about what's next, how to play a bigger role for Web3 wallets to the next level. We believe a self-custody future, and we believe the future tomorrow economy got to be decentralized, but we still need to push hard from several pieces of technological innovations. Looking ahead on the OKX level, we have lots of developer supporting program, OKX OS, for allowing users to build. And also we have different kind of meetup globally, hackathon. Hopefully everyone can make use of our global presence, experience on licensing and product. And we have different team that's very happy to provide grants. Thank you so much. I think it's about time. It's great to meet you here in SmartCon. Thank you.
All right. Up next, we have the 2025, the era of decentralization. From Open Mesh Network, please welcome Ashton Hetiarachi.
Hi, everyone. Nice to meet you all. My name is Ashton, and I'm the founder and a product architect of Open Mesh Network. I'm a big fan of Chainlink, especially Chainlink events, because of the builder's energy. So I'm very excited to be here. Today, I want to talk to you about danger of centralization and importance of decentralization. If you Google the most significant threats for humanity, you'll find roughly 3 main scenarios: nuclear war between powerful nations, asteroid destroying our planet, and a large-scale pandemic. But I think there's one more. It is monopoly and centralization of digital superpower. If you look at the world knowledge distribution today, the majority owns by a few corporations. We use cloud pretty much for everything. Most businesses, even governments, use cloud. But who owns cloud? Who owns the biggest IT infrastructure? The very same companies who owns the world's data. How about AI? The very same companies also happen to have the biggest AI capabilities today. And they are all in a race to prove who's bigger and better. The fact is we have roughly 4 large corporations control the world's data, world IT infrastructure, and has the largest IT infrastructure capabilities, and we're supposed to trust them. So the trust itself is built into the people and brands. We have been told that's how the world works. Corporation may say, don't be evil. Government will say they have plans for worst case. But I think it's more complicated than that. I also think what's going on today is kind of a repeat from the past. If you look at ancient times, empires and kingdoms rule the world. They kept secret, centralized power, monopoly, and made most important decisions behind closed doors, regardless of the outcome. We think we are better off today, but I find the structure still exists, hidden beneath us. In olden days, Ottoman and Roman empires only controlled certain parts of the world, but I think today, the monopolies like Web 2, they have more influence than distribution, than most of the empires combined. For me, this highly monopolized power is a perfect combination for disaster. It should be a checkmate for humans, and we should take it very seriously. It's not only bad for people, but also it's a threat for democracy. So the question we should ask ourselves, if we live for another 100 years or more, become type 1 civilization, and are we going to have a Google at a solar system scale? To me, we are heading that way. It seems we are heading that way. From a democratic point of view, a small group of people don't get to decide what is good for society. We should share that right. Big corporations assume they have that right and run with it, but we shouldn't give that right by default. That's why decentralization is very important. I envision a world where trust is built into the design, not into the brands or people who are running it. We should have technologies that are immutable by design and verified by widely distributed independent verifiers. When I looked at public networks like Bitcoin, I find them very interesting and fascinating because for the first time in history, we have a self-evolving and self-governing public infrastructure that is available to anyone and not owned or controlled by government or corporation. This is why I was drawn into Web3 in the first place. I was so excited and inspired by the hope that we can demonstrate democracy and freedom using technology and innovation. It was very beautiful. But the problem is the centralization problem is repeating Web3. Many Web3 projects choose centralized cloud providers like AWS to host their critical infrastructure and run nodes because of the convenience. But if you build on AWS, where's the decentralization? When I started OpenMesh in late 2020, Web3 monopolies like AWS had less than 40% market share of Web3. But today, it's more than 80%. Maybe who knows? In a few years down the track, they might reach 90%. The very same they monopolize Web2. This should be a very big concern to all of us. The other point, the asset managers who owns the Web2 monopolies also happen to be the largest crypto custodians today. So think about it. So in my opinion, decentralization has been compromised. That's why we should start from the bottom. That's why infrastructure is so important and critical to keep the Web3 decentralized. And we should be very careful about the design principles. I think we should have open source and decentralized infrastructure, cryptographically guaranteed. Verification and outcome has to be built into the design. So when I left Phantom in 2019, I got a small team together, started experimenting with a few ideas around decentralized cloud networks. The goal was to build a tiny version of decentralized AWS. For many years, I've been a big fan of torrent networks because BitTorrent, networks like BitTorrent, it's amazing. It has amazing ability to share large files without a bandwidth constraints. The network is free. Anyone can access as long as you have internet and a computer. So I thought, what if instead of sharing movies and maybe songs, if we could run a compute workloads? Also, I think the function and the utility of a Web3 wallet, hardware wallet specifically, so the only person who can access your crypto, it's you. These were the fundamental design principles we took as inspiration to design and build Open Mesh Network. So what is Open Mesh? Open Mesh is a decentralized cloud and a data network. It is permissionless network, meaning there is no KYC, no registration or license required to access it. Like other public networks, there is no company or CEO behind it. It is open source and is available to anyone. So our first use case was a decentralized hosting service, where you can host a simple website, attach a database, secure with Ethereum wallet, kind of like a building immutable hosting service. Fast forward, we are working on multiple infrastructure service, especially like decentralized virtual machines, node as a service, compute and storage, decentralized databases. You can also run like game servers, or you can build apps with Chainlink CCIP. Our goal is to combine the best of traditional clouds and distributed networks into a single solution. We are building full stack tools designed for developers and public blockchains. Now, if you compare the centralized cloud, you need an email, credit card, and your service agreement is tied to a state or a government with backdoors. And all it's managed by a middleman. They can deny access to the service. You need their permission to access the service. With Open Mesh, there's no corporation or foundation behind it. You own your data, you own your infrastructure. Your Ethereum wallet is the key for everything. You have Web3 authentication as the first layer of defense before getting to Web2 securities. So the only way to someone to shut down your service is to compromise your Web3 wallet. Instead of using service agreements in Web2 form, we use smart contracts. In this last 6 months, our focus has been providing a better, faster, and more affordable infrastructure, bring that into Web3. Our resource aggregator protocol aggregates computing, storage, GPU, and bandwidth from around the world, bring that into Web3. I'm proud to say we have one of the largest infrastructure aggregation capabilities in the world today. Similar way how Airbnb disrupted hotel industry, we apply to the microservice and infrastructure industry. Instead of relying on few providers, we enable everyone to be part of it. This way we can cut down infrastructure costs up to 80% while keeping it more decentralized. Recently, we partnered up with large data centers and bare metal providers like Equinix, High Velocity, and Volta, bring the most affordable physical infrastructure for Web3. I think many Web3 decentralized cloud projects failed because they started with the grand vision of peer-to-peer computing first. Even though we have that in our roadmap, we chose to start with the data centers and user-centric hardware first, which I think has a higher rate of being adopted and used because of the practicality of performance and reliability. Don't get me wrong, it hasn't been easy. For the last 3.5 years, we've done lots of experiments. Most failed, but we found some promising solutions. To me, Web3 infrastructure today is like a dial-up. Our goal is to introduce fiber. So the innovation behind our network is Xnode. Xnode is a modular infrastructure orchestrator. You can build, configure, manage all your services in one place. Xnode is a modular architecture you can actually build and deploy locally, or you can actually push that into bare metal or even in a public cloud. It's also designed to manage your services, network resources like computing, storage, bandwidth. It's kind of like a multi-tiered decentralized microservice architecture. You can split your X node into smaller units. We call it X node units. And you can run application services in parallel. For example, you can host a website on one unit, and another one you can run Ethereum node. Remaining, you can donate into the Open Mesh network to get paid. Another important component of Xnode is the Xnode Studio. It's a web-based console, comes with hundreds of free infrastructure templates. We treat infrastructure like Lego blocks, which means you can build infrastructure like a plug and play, saving tons of time. For example, if you want to run your own Ethereum node, connect to a front end, and you can do that by using just simple 2 templates. If you want a more complex use case, you can pull data from a popular DeFi application, run analytics locally, or push your Web 2 data into Web 2 interfaces like Snowflakes or Databricks, using a drag and drop builder without worrying about data normalization or compatibility. You can also deploy AI application with a fixed computing environment and install observability in less than 10 minutes. So funny enough, our Open Mesh YouTube account was shut down yesterday. I'm not kidding. So it's kind of like a perfect timing. So I asked my team to use one of the open source media streaming templates that we have to start our own YouTube service called OpenStream, so no one can shut down. For the last 10 years, I've been having so many centralized services like YouTube denied services. With Xnode, you can simply connect your wallet, manage your data, applications, infrastructure, and deploy everything in one place. The other cool thing is, the Xnode is also ERC 721. So if you want to swap your ownership, your entire infrastructure, you can do that very easily. Imagine someone building a Web3 game in a marketplace and monetize it for a while, running from your bedroom, and decided to sell your entire business and infrastructure to someone. With Xnode, you can do that by simply listing your NFT on OpenSea. Being able to swap ownership without a middleman can be quite powerful. Let's talk about the network economic model. We charge 15% computing and storage instead of charging dollars or crypto. 10% will be allocated for run OpenMesh Core, Consensus, and OpenMesh Oracle networks. So by default, every Xnode user become an OpenMesh validator. They earn validator nodes. They earn validator rewards. So all Xnode users get the best of the both worlds. Out of 15%, 5% we take for OpenMesh Cloud. So the more users we have, the more resources we collect. Now, I kept the best for the last. This is something I'm really, really excited about. The decentralized service mesh protocol. Let me break it down. So if you gather the old servers around the world and pile up into one location, it will look like this. It will be taller than the tallest building in the world. According to our research, approximately 78% of users duplicate their cloud operations, building the same compute, storage, and services repeatedly. It's such a waste of resources, especially real estate and energy. It's like having a 5-door car, but you're the only one who's driving it, even though it has capacity for 5 people. If you remove the duplicates, this is how much you need to power the entire global demand for the 2024. So imagine you can rent your common workloads and outputs and pay a fraction instead of running everything yourself, especially paying premium. So this concept called service mesh. This is the next evolution of microservice architecture. The reason why I'm excited about this, because centralized service mesh can have limitations, but decentralized service mesh can have an amazing effect, especially when it's scaled. So OpenMesh decentralized service mesh will enable decentralized service discovery, communication, and orchestration without a central control point. This allows individual organizations to run microservices called OpenMesh mesh workers and offer that to the world. Our open observability protocol will display the most used infrastructure on the network with on-chain stamp. Now, all of a sudden, popular infrastructure and services on demand will get attention, and you can interact with it by staking it or pledging it. This can be quite powerful for a decentralized networks, especially decentralized ecosystems. Now, innovations like this cannot be achieved by ourselves. That's why we are super excited to work with Chainlink. I don't think many people realize the true power behind CCIP, because Web3 ecosystems don't talk to each other natively or by default. CCIP enabled that securely. For me, it's one of the greatest innovation after DeFi. CCIP kind of a unified method to interact Web3. So if you're building dApps, services using CCIP, you still have to host your website or maybe front end, or maybe you want to cache your data locally because you can't run everything on chain. So instead of using AWS, consider using OpenMesh. To accelerate this whole new ecosystem, OpenMesh announced a $100 million giveaway to Web3 industry for the next 12 months. Out of that 100 million, largest allocation will go to Chainlink. So together, we can build interoperable cross-chain trustless ecosystem. To me, today, Web3, decentralized Web3 ecosystem is only 70% decentralized. Innovations like this, collaborations like this, we might be able to push our industry for 90% or more decentralized. Who knows? We might see 90% or more decentralized apps and services for the first time in Web3 history. So next year, I call it the era of decentralization. Thank you.
All right, everybody. Up next, we have Web3 for Billions. Please welcome of Startail and Sonium, Sota Watanabe.
Mic check. Hello, everyone. GM. My name is Sota Watanabe, CEO at Startail and the director of Sonium. So Sonium is the Ethereum layer 2 developed by Sony Block Solution Lab, which is the joint venture between Sony Group and Startail. And I'm here today to talk about Sonium and how to onboard a billion of the people on chain. So in terms of the Startail, our mission is to unleash the potential of the humanity through the open internet. So to do so, we need to onboard literally billion of the people on chain, because we believe that Web3 technology is for the people, not only tech people and geek people, but also general people, ordinary people. And if we talk about numbers, only 3% of the people, human beings, are using the Web3 technology in today, which is a very small amount. And according to the report, which is published by Andreessen Horowitz last week, only 220 million people are using Web3. So we are still early stage. If we compare the history of the internet with history of the Web3, this situation right now is pretty much akin to the internet in 1999. And when we talk about the browser landscape in 1999, there was the era of Netscape versus Internet Explorer. And as everybody knows, i.e. Internet Explorer won against Netscape. The core reason is the Microsoft distribution channel. Microsoft is selling the PC, and they install the IE as the de facto the browser. So the more PC has been sold, the more browser users they could get. And the light one is the landscape in 2023. And as everybody knows, people are using Chrome, Safari, and others. This is because of the product performance. The Chrome is faster and better than IE, and also a platform shift. Previously, a lot of the people use the browser through PC, but today, a lot of the people, more people, are using the browser through phone. So the insight we could get from here is one thing. Distribution is the king when we make a great product. And today, what we don't have in this industry is not the cutting edge tech, but distribution channel. And because generally speaking, this industry does not have a strong distribution channel, generally we have been developing what developers want instead of what people want. But together with Sony Group, by using the existing distribution channel, we would like to deliver Web3 technology to the mass. And we would like to make technology based on the customer's needs to solve the existing issue rather than fake issues. And we need more seamless experience to onboard ordinary people. And we would like to create the world where people are using Web3, not because it's Web3, but because it's faster, cheaper, more efficient, and better. And to do so, we should focus on customer experience technology, such as account abstraction and chain abstraction. And another things we are working on today is to create vertically integrated products. And in this industry, a lot of people compare blockchain A versus blockchain B, or wallet A versus wallet B. People are seeing this industry horizontally, but we see this industry vertically. Because we are using multiple products, multiple layers developed by different companies, the user experience and developer experience are pretty much isolated. By providing the vertically integrated product from blockchain layer to application layer, we would like to simplify the developer experience and the user experience. And we are making Sonium and ASA, and we are also making middleware, Starter Cloud, which include RPC, blockchain, API, account abstraction SDK, and more. So this is the product line we have. And today, I would like to focus on Sonium. Sonium is the blockchain, Ethereum layer 2, powered by OP Stack, and we're going to join Superchain, developed by Sony Group and Startel. Our mission is to realize the open internet that transcends boundaries. And today, we have a lot of boundaries, such as Web 2 versus Web 3, tech people and ordinary people, Web 3 degen and regulators, big company and a startup. And this chain is developed by Sony Group and Startel, Web 2 giant and Web 3 startup. So we are literally, transcending boundary here. And we would like to make the future, where people are using Web3 without noticing the Web3, without realizing Web3. People are using Web3 just like internet of today because it's efficient, faster, cheaper, and more. To do so, we need a distribution channel to deliver the benefit of the Web3 technology to the mass. And we are focusing on creators. And on Sonium, everyone is a creator, no matter where you are And what do you do? And when we say creators, it's not only the people who are, let's say, painting. When we say creators, it's all about people who would like to shape the world, who would like to shape the future, and who would like to push the boundary forward. And we would like to empower these kind of people through Web3 technologies. And we have a 3 value: emotion, creativity, and go mainstream. Emotion. We would like to create a place where people are excited and engaged. Right now, if we see the reality, I think a lot of the people use blockchain or maybe DeFi, NFT, because they would like to make money. But this does not change the world. We need to make the place where people are excited, people are engaged, people are using Web3 because it's fun. And we value creativity. And the last thing is go mainstream. GM. Before Sonium, GM stands for good morning, which represent the underground culture of the Web3. But after Sonium, GM stands for go mainstream. So we would like to literally onboarding billion of the people on chain through Sonium by using the distribution channel. And this is the very rough timeline. We have already launched the testnet, and we would like to onboard Web3 people first. But in coming years, we're going to focus more on onboarding Web2 people, and eventually we would like to provide the Web3 technology without frictions. And we would like to make daily use cases without awareness of the blockchain. And today, Web3 ecosystem is getting bigger and bigger, but the Web2 ecosystem is much bigger. So we would like to onboard Web2 people on chain by transcending boundaries. To do so, working with top project and trusted infrastructure partners are very critical for us. And this is the reason why we are working with Chainlink. Chainlink already supported data feed, function, VRF, data stream, all service on Sonium testnet today. So all developers can leverage Chainlink to develop next generation dApps. And we also would like to highlight Sonium Spark. Sonium Spark is the first incubation program on Sonium, and I will be talking about this later. We launched the brand, Sonium itself, 1.5 months ago. And we launched the testnet a month ago. Within a month, we created more than 3.5 million wallets address, and we have more than 500K daily transaction, and more than 2 million smart contract has been already deployed on our testnet within a month. So we see a lot of the engagement from the community, and we would like to make this ecosystem together with community, builders and enthusiasts. And as I said, I would like to talk about Sonium Spark a little bit. This is the first incubation program of Sonium, backed by Sony Block Solution Lab. And we got more than 1,700 applications within a month, and we selected 30 projects. This is the first incubation program, and we got a lot of the application. If this is successful, we're gonna do a second batch, third batch, and so on. And we are providing developer supports, and we are also investing in incubated project, and we are supporting the growth of each project. And if you are interested in developing on the top of Sonium, feel free to reach out to me on X, or feel free to join our Discord and speak with us. And as some of you may know, I'm also founder of A-Star, and A-Star is a layer 1 blockchain, which has roughly 500 million variation today, US dollar. And our strategy is to align with Sonium. So A-Star is going to conduct multiple campaigns and actually bring A-Star token up to 100 million US dollar from A-Star layer 1 to Sonium through Chainlink CCIP. And we are conducting a campaign right now. This showcases how to use existing A-Star token on Sonium and how to use existing ERC20 token outside of the Sonium to leverage the growth, to leverage and make the growth on the top of Sonium. Yeah, and to deliver the strength, to deliver the benefit of the Web3 protocol to the mass, we need a middleware because people cannot interact with the blockchain. So we are also making a middleware starter cloud service, and we are providing a trusted RPC, blockchain API, account abstraction, SDK, and so on. Yeah, this is the UI. To wrap up, we are developing Sonium, and we launched the brand 1.5 months ago, and we launched the testnet, and we are making the ecosystem together to go mainstream. Right now, only limited people are using blockchain today. But to prove ourselves, to prove that Web3 is actually changing the world, making great impacts in a society, we need to deliver Web3 technology to the mass, just like internet of today. And if we learn internet history today, the internet technology has been delivered through strong distribution channel. And we started from distribution channel, and you're gonna see a lot of the use cases, real world use cases in coming months. So if you are interested in Sonium and Startel and Sonium Group, feel free to reach out to me and feel free to interact with our team, maybe Discord, Telegram, Twitter, X, whatever. And let's shape the world together to onboard billions of the people on chain. I'm super excited here to be here and see the common vision with you guys. Thank you very much for listening today.
Wonderful stuff. Next up, we have from Space and Time their CTO, Scott Dykstra, who's going to speak to us about ZK proving all of crypto's data for smart contracts. So please give a hand to Scott.
Thanks, everyone. It's great to be here at SmartCon 2024. I'm Scott Dykstra, CTO of Space and Time. Space and Time was at SmartCon 2022 in New York, 2023 in Barcelona, and it's so great to be here, 2024 in Hong Kong, and our third SmartCon. It just keeps getting better and better. A little bit about myself, background in data warehousing, spent about 10 years building petabyte scale data warehouses for the Fortune 500, and I was kind of shocked when I entered the crypto space in about 2020, started looking at smart contracts, and I was like, hey, Solidity smart contracts have no access to data on chain. Like a simple question, like, show me the total volume of Scott's wallet's transactions cannot actually be retrieved from a smart contract. They have no ability to query historical on-chain blocks, transactions, events, activity. Basic questions that we're so used to in the business world of like asking questions about data using SQL, using databases cannot be done on chain. There's no query engine. There's no way to retrieve trustlessly data from the chain without incredible tools like Chainlink to bring a trust minimized oracle that provides that data. Smart contracts by themselves without oracles have limited access to on-chain data. Now, there's a nascent kind of budding market of ZK VMs, ZK coprocessors, ZK solutions that are trying to solve this by essentially accessing chain state or kind of using signed block hashes as a source, and then allowing for ZK proven, meaning cryptographically tamper-proof computations against that data that are then proven back to a smart contract and verified on chain. We also have teams that are trying to connect centralized enterprise databases or centralized enterprise data warehouses to smart contracts, and that becomes a bit challenging in a trust minimized or truly trustless world when you're connecting a trusted centralized database to smart contracts. And the market, both enterprises as well as on-chain DeFi developers, need a solution to ZK prove or cryptographically prove SQL-style computations so that smart contracts can ask questions about data. In addition, AI agents have the same problem. As AI comes on chain, as more teams start to build sophisticated agents that help users transact on chain and help users and actually autonomously transact on chain themselves, they need context about on-chain market data, lending protocols, DeFi yields, context via retrieval augmented generation. And so space and time is also starting to provide trustless, verifiable data to AI agents in addition to smart contracts. Putting it all together, space and time is sort of a decentralized database that trustlessly proves SQL queries against indexed chain data, against data we've collected from every major chain. We ingest blockchain data via kind of a network of indexer nodes, and our own clients, mainly enterprises and a lot of like financial institutions in America that are loading their own off-chain data onto space and time. And once it's loaded in, space and time is a decentralized database that can prove that the tables themselves have been tamper-proof and that the actual execution against those tables are tamper-proof as well. And we can prove data to smart contracts and AI agents. In 2015, we saw this era of smart contracts launch, right? This idea that you could have these scripts, JavaScript-like scripts that run kind of redundantly on chain, and the chain comes to consensus and verifies that they were executed correctly to verify transactions. Chainlink ushered about DeFi summer by bringing price feeds on chain in a trust minimized way and allowing smart contracts to finally access some data, aggregated data points about price feeds. Once like smart contracts could access the current average price of, let's say, Matic token as an example, suddenly the design space for developers, for smart contract developers is opened widely. We have a very wide and exciting new expressive design space for DeFi where we can now liquidate loans by using price feeds. But we believe strongly kind of the next wave or the next generation of data-driven sophisticated smart contracts will be Chainlink plus space and time, where we're not just allowing an oracle to provide single aggregated data points, but allowing smart contracts that use Chainlink functions to ask any question about the history of Ethereum, the history of ZK Sync era, the history of a variety of EVM L2s, allow a smart contract on Era to ask questions about collateral over on Arbitrum and get trustless answers next block, the same way that they use Chainlink functions to get off-chain API data or use Chainlink price feeds to get an aggregated price feed next block. Allow smart contracts to ask questions opens up the design space and allows smart contracts to ask questions like, again, simply, what's the total volume of transactions that Scott's wallet has executed on chain? Or what's the total volume of loans that Scott's already paid off on chain? Or hey, as Scott goes to claim an airdrop, has Scott completed certain on-chain activity to prove his loyalty and earn that airdrop? Or hey, before I allow Scott to LP into this Uniswap pool, let's look at Scott's wallet's history and make sure he's staked one of the tokens in that pool for at least 6 months. These simple questions that we're so familiar with as developers using SQL databases like Postgres or Snowflake or you name it, we can now do on-chain. Space and Time is bringing this on-chain. And we're so excited here at SmartCon 2024 to announce testnet of the Space and Time chain. The Space and Time chain is the blockchain for ZK-proven data. And of course, we got to announce it here at SmartCon with among all our friends and our community members. We're excited to be here, and we're excited to give this back to the community. When we first started Space and Time and did about 3 years of very tough research trying to figure out how do we quickly ZK prove, or how do we use math to prove SQL database operations. This was very much a research project and took about 3 years to make it fast, make it work on chain. We always intended to kind of give this back to the community, decentralize it, build a permissionless chain that the community owns. Anyone can run validators, make it very easy to kind of spin up home validators, contribute your own node back to the network, and kind of participate in this truly decentralized network that first kind of collects data, secures it, and then proves it to smart contracts. At the bottom of this architecture, we have a DePIN network of indexing nodes. So space and time is this network of nodes that index or collect data from every major chain. They securely kind of send those transactions of insert statements to the space and time chain itself, the validators. Those validators witness and secure that index chain data. They sign cryptographic hashes for each table so that we can prove that each table mathematically has not been tampered. A decentralized database in those nodes, essentially a database attached to each of those validators that stores the data. And then finally, DeFi smart contracts on chain that can ask for ZK-proven SQL questions against that data. It's a 3-layer network. Indexers collect, chain validators secure, provers are a query engine that returns SQL query results to clients on chain through Chainlink functions. Space and time to a Chainlink developer or a smart contract developer that's comfortable with Chainlink, space and time is just like another API, right? It's another external API they can call. But in this case, they're not just getting back an answer, they're getting back an answer plus a ZK proof. And what does this like offer to L1s and L2s? We have a growing ecosystem of popular L1s and L2s that are starting to integrate space and time and are excited for us to index their chain and collect data from their chain, but also ZK prove query results back to smart contracts on their chain to power a new generation of DeFi. These L1s and L2s get a verifiable database, right? It's like Dune Analytics, but ZK proven. A familiar SQL data model, a blocks table, a transactions table, a smart contract event logs table that's easy to query. It's easy to find your protocol's data. And it gives devs just a better experience when just like building analytics, building dashboards. But more importantly, they get a ZK coprocessor. All that means is a coprocessor is like a GPU sitting next to the chain or a server sitting next to the chain that can cryptographically or mathematically prove computations and return it back to the chain. It's a way for smart contracts to offload storage and compute. It's a way for smart contracts to not have to do very, very heavy computational activities on chain redundantly across the chain with consensus, but rather offload that to a ZK coprocessor next to the chain. Another fun thing that we bring to L2s and L1s is kind of a wealth of TradFi data, terabytes of data that we've collected from TradFi markets that we can also prove to smart contracts. Think average price of Tesla stock, but historical information. Show me Tesla stock over the last 90 days. Also, if you kind of look bottom to top here on this diagram, we're first kind of collecting both on-chain and off-chain data. So the space and time network as a whole kind of securely, verifiably, cryptographically, trust minimized way grabs this data from all these different chains, and then clients are loading their own off-chain RWA data, market data, DePIN data, etc. Now, what about Chainlink? Where does Chainlink come into this? Why are we so excited to be launching testnet here at SmartCon, and why are we so excited to be partnering with the Chainlink community and the Chainlink devs to enable this? Well, Chainlink acts as a lower cost off-chain verifier for the space and time proofs. The problem that a lot of Ethereum specific developers have is like gas gets very, very costly at times. There are times when Ethereum gas is almost overwhelmingly or prohibitively expensive. And so Chainlink actually offers a much lower cost way for us to verify our proofs and deliver already verified, already Chainlink signed data to client contracts on chain. So we're returning to Chainlink Dawn the query result and the proof. Chainlink Dawn is verifying that proof. Chainlink comes to consensus and with low cost delivers the final already verified query result to clients on chain. So you could think like client asks Chainlink for some data. Chainlink then pings space and time network and says, run this query against this DeFi protocol's on-chain information, give us back an answer. Chainlink verifies that answer and returns it to the client next block. Chainlink offers a much better developer experience for accessing this data quickly. And there's so many developers that are already building with Chainlink, and there's so many DeFi protocols that are already comfortable integrating. How do we make it fast? We spent about 3 years doing some very tough research, a lot of trial and error, I'll admit, to figure out one thing. Prove SQL quickly. Not at 100-row table scale, not at the scale of one smart contracts events, but the scale of the entire chain history. Allow smart contracts to say, hey, for this set of wallets, show me their aggregated total volume over the last 2 years, right? Not just the last 2 minutes. We knew that it would require some very tough research to figure out how to get sub-second proofs or sub-second queries against a lot of chain data, right? And smart contracts are asking space and time for some query results during a transaction, meaning the client's waiting. Scott's going to take out a loan. The lending protocol smart contract needs to ask space and time, hey, has Scott already paid off some loans? Because if so, I'm going to give him a better borrow rate. That's during my transaction. So the smart contract needs data back very quickly. It can't wait 2 minutes, worse 2 hours, right? It can wait maybe 2 blocks, maybe. So we need to return data back to the chain as fast as possible, not make space and time the long pole in the tent or the slow kind of piece in the architecture. The way we did it is we just hyper-focused on SQL. We spent years just focusing on what would a ZK proof specifically for the kinds of computations that SQL does, aggregating data, filtering data, sorting data, projections, joins, and that's it. We're not supporting arbitrary Rust scripts. We're not supporting arbitrary EVM opcodes. We're just focused on SQL against chain data, because that's what clients need so badly right now. What does this enable across the board from DeFi to on-chain loyalty to AI agents? Well, kind of going, I guess, left to right here, this is kind of ordered in the number of clients that space and time is kind of helping build on-chain. Lending, cross-chain derivatives allow a derivatives protocol on-chain to access historical price information in order to calculate implied volatility on 2 different markets on 2 different chains. The lending protocol example I just gave you, looking up Scott's previous kind of on-chain transactions in order to give him a better borrow rate if I've already paid off loans. We do a lot of work in DePIN. Right now, there's this growing market of DePIN protocols that need a way to know which nodes completed which jobs, pay them, slash them, etc. Airdrop teams that are using space and time to trustlessly look up on-chain loyalty. Before Scott claims an airdrop, look up his wallet and see if his wallet's already done some on-chain activity that makes him eligible for the airdrop. A lot of work with RWAs, financial institutions off-chain that want to onboard their bonds, their equities, etc. And then, of course, AI agents that need context about what's on-chain that are going to facilitate large transactions. A quick call to action here, spaceandtime.io/testnet. If you're running a validator, if you're a node operator, if you're a staking service, we'd love to have your participation. We are literally launching testnet today. Over the next few weeks, we're spinning up a large number of validators, and we're going to drive on a road to mainnet over the next 3 or 4 months. And we're so thrilled to have you guys here. And we're thrilled to be here ourselves. Build with space and time. Usher in a new era of sophisticated data-driven smart contracts. Thank you all.
All right, that was super exciting. Thank you, Space and Time, for all that news. And with that, we will take a quick break. Please be back by 1:35 p.m. Thank you.
Please welcome back Zubin Pretap.
Welcome back, everybody. Hope you enjoyed some of that really delicious lunch that was outside. Now, I know that everyone's going to be digesting and ready for the afternoon of talks. Just to refresh everybody's memory, we got a bunch of stages. So this is the main stage. We've got two more stages downstairs right below our feet, the capital market stage and the Web3 stage. We've got the entire expo floor behind us with the Chainlink lounge, sponsor booths, and the Chainlink activation, the digital display where you can find out more about tokenization, CCIP, and so forth. Downstairs, we have a bunch of other booths. We have the recharge lounge where you can network and connect with other people. We also have the co-working space with power supply and everything you need. We have the swag booth. We have the photo booth. And like I said, we have a couple of stages. So lots of things to keep you busy. But now, up next, we have a talk on techno-democracy, from magical internet money to magical internet votes by Balaji Srinivasan.
Okay, everybody at Chainlink, this is Balaji here, and I want to talk to you about something today, which is called techno-democracy currency. I think there's a lot of stuff here which is relevant to people building oracles or doing bidirectional things, anything really complex on chain. So I'm going to give a talk, and then I think the extension to oracles will be perhaps fairly straightforward. So techno-democracy, the concept is from magical internet money to magical internet votes. And this is an example of my friend Brian Johnson in a hypothetical techno-democratic party where somebody who votes for him gets an NFT, an I voted NFT, and he's the president, and there's a vice president, and there's other people with this party. So just give some motivation. I'll talk about techno-democracy from a motivation standpoint, then give some visualizations and talk about how we might execute it. So just as motivation, what comes after cryptocurrency? So if the financial crisis of 2008 motivated cryptocurrency, I think the political crisis of 2024 motivates techno-democracy. Democratically elected leaders are now very democratically unpopular. This is a global phenomenon. And you can see a zillion studies on this. I won't recapitulate this. This is just something which we know is happening. So what comes next? Well, if the financial crisis of 2008 and end the Fed led to Bitcoin, the political crisis of 2024, I think, may lead to techno-democracy, right? And let me just jump right into a concrete example. Okay, so I'll give you some visualizations. So suppose that, my friend, my colleague, Brian Johnson, he founded the Don't Die Party. Okay, let's use that to visualize a sample implementation of techno-democracy. So here's an example of Brian Johnson's Don't Die Party. It's built on a client to the Farcaster protocol. It looks a lot like Twitter. But what if you drill in a bit and say, okay, what happens if I click this apply button? Well, first you'll see before you click it that the members are ideologically distinct from civilization at large. They're more capitalist, more libertarian, more pro-longevity. And when you click this apply button and you try to join, what happens? Well, first, there's an interface which has you follow Brian, but also the other people in his platform, okay? Next, you fund them. This alone distinguishes it from the Democrat or Republican parties, because party membership is not just based on casual self-ID. It requires capital and time commitment, okay? So you're donating money. And third, and most important, and this is the key bit of techno-democracy, is why it's not just a petition or a crowdfunding, is the franchise, okay? So this means a Google OAuth style interface where you explicitly consent to give party members some degree of admin access to your digital account in return for mutual benefit. So in this case, vote for them as president, VP, and treasurer of Don't Die, so you get an on-chain NFT. Commit to follow norms and pay annual dues, so there's a debit from your wallet. And even allow, in this case, party leaders to slash 100 in staked funds, and generally name the president to be dispute resolver on all matters of governance within the party's digital and physical properties. So much like joining a company and giving up some control to the CEO, you're joining a party and giving up some control to the president. And both Ethereum and Solana have tools for this now. And the thing is, you actually already do this if you use, for example, MetaMask or OAuth. You're giving a limited yet binding grant of permissions over your wallet to a digital party. So you do this all the time. For example, with MetaMask, connect to this account and you can see the address, account balance, its activity, suggest transactions approved. You're giving some partial control over your digital wallet. Same with OAuth. When you log into an app, this, in this case, Google is managing, that app's access to your profile info and email address. And the key concept is that you're not granting this permission to a third-party program, but a third political party. It's a binding grant of digital power. And just like, this is, and of course you can revoke auth access, but for so long as you've done it, you've given that third party the ability to administer at least some of your account, okay? And so that's what makes techno-democracy like an on-chain vote with some consequence. It's not simply a informal vote. It actually starts to form the state on-chain by a binding grant of digital power. Because in many ways, what is the state offline? It is essentially the combination of the access to everybody's bank accounts, in a sense, right? Taxation is a big part of the state. So this is a piece of that. So the key innovation is in delegating permission, as I said, not to a third-party app, but to a new digital party. And one of the consequences, one of the things you get is you get an I voted receipt after you techno-democratically vote. You say you voted for them as president, VP, and treasurer, okay? And you can view this on either scan. And so it's a cryptographically verifiable vote. You can prove you joined, you can see who others joined. Any third party can verify these are real people rather than bots, right? And you then attend party events, longevity policy, group workout, blueprint party dinner, and you're expected to do things that advance the cause, okay? Now let's discuss some key concepts behind techno-democracy now that we've seen it at a high level. Why should we expect it now? Well, all transactions and communications are online, so all legislation elections should be as well. And institutional voting, we already know it has three parts. There's like the Twitter election, there's the fundraising election, and then there's the offline fiat election. And it's only really this part that hasn't been put completely online, and that's what techno-democracy does. We also know that internet voting has three parts too, because, for example, something like Reddit, that's like upvoting on social media. Every social media site has this. ENS, other DAOs on snapshot.org, there's votes for the allocation of crypto treasuries. And then Estonia, for example, actually has fully online voting, right? So one question is, in what sense is digital voting binding? Why isn't it like a LARP, live action role play? Well, basically right now you use, like NFTs, for example, for your Discord. You use NFT membership to govern who has governance over your DAO. So it controls Discords and DAOs right now. But your crypto wallet can also control the access to a door. So in this case, your home can be unlocked with Ethereum by verifying an NFT membership, right? And once you start seeing this, that actually crypto secures not just the digital, but the physical, well, it's not just the access to your door, it's the access to the door of your car. And it's not just the access to your car, but of your plane or your train or your bus or really any piece of capital equipment. And eventually to your drones and to your robots and so on and so forth. So that's a progression from Discords, which is just, communication, to DAOs, which is transaction, to doors, which are static objects, to drones, which are moving objects. You can actually see the scope of what a crypto wallet controls will just keep going up with time, right? And so if you have a techno-democratic president who has the pledge of partial control over thousands or tens of thousands or hundreds of thousands of crypto wallets, that means the techno-democratic vote controls significant resources and is not just ceremonial, okay? So that means crypto wallets can control real resources in the physical world. And in fact, of course they will, because every Web 2 piece of software gets hacked, but Web 3 doesn't. So in the fullness of time, anything that you really care about will be protected with on-chain security. So let me go through some key features of techno-democracy as to why we'd want it. So I mentioned a cryptographically verifiable vote. That's actually really important. I mentioned a streaming vote. When someone joins a party, the vote and membership is registered on-chain immediately. This is more like Twitter and better than the mess we have where the election day is. I mentioned the social smart, or another concept here is the social smart contract, right? So basically the permissions, this is like a binding campaign promise. A techno-democratic leader makes a commitment, and so does the voter. And so both parties are bound in a way that both parties have to take responsibility. You have provably limited government, where this is slashing $100 in this case in stake funds, but not 1,000 or 10,000. So the level of control that a techno-democratically formed government has over your crypto wallet is limited. Truly universal franchise, because anybody can now vote for anybody. And truly universal candidacy, because only 2% of the world satisfies the conditions to run for president of the United States, but 100% of the world can now run for president of a techno-democratic party or network state, okay? So anybody can just, on the internet, they can just run. Truly new polities, because basically these 13,439 people have essentially formed a polity and elected a leader, so they don't need to be bound by geography anymore. Digital delegation, so you never have to ask who's in charge. A techno-democratic president can name a cabinet and grant them cryptographically limited powers. 100% democracy, because every single person who's part of the community has actually voted for the president of that community. And 0.1% democracy, because even 0.1% of the world is 800,000 people, which is plenty. So even a tiny minority of 13,439 people can form a new techno-democratic party. So finally, a few more examples of what techno-democracy enables. So for example, the Mars Party, this would be something where maybe people would join Elon, do everything they possibly can to make Mars a reality. Elon would be the obvious leader, right? Another example, Daniel Ek or his, parallel universe version, Donnie Ek, could form an open source AI party. And, the overall concept here is that techno-democracy takes us from the two-party to the N-party system. It could reopen political innovation. And I should note, by the way, it's a whole separate thing to have these parties contest what I would call fiat elections. Assume they all start as purely online and only add fiat later. They're just talking about pledge control over crypto wallets. You're not talking about any fiat or offline elections for a while, just like with Bitcoin, it started as like a few dollars before it, rose up in value. You're doing the equivalent of an election for dog catcher. It's not going to be a big thing. Okay. So one last remark, in 2016, one candidate won 65 million votes, the other won 62 million. So if a president of a techno-democratic, of a network state gets more than 70 million techno-democratic votes, they have more provable democratic legitimacy than the legacy system, because these would all be on-chain votes, right? So that's a really interesting concept for the future, which is, of course, you don't need 70 million votes. If you even had 1 million on-chain votes or 100,000 on-chain votes, you'd be more provably legitimate than many leaders, okay? So that's what I'd call the techno-democratic flippening, and it sets the bar. Just like there's a certain bar for the size of a cryptocurrency for it to be bigger than the Turkish lira or the Chilean peso, this is the bar for the number of techno-democratic votes you need to become as democratically legitimate as a president of a fiat state as opposed to a network state. We can now win the market for votes. So just in terms of execution, there's much I can say on this. There's a lot of pieces of this, obviously, that could relate to oracles in particular. Everything you're doing where there's some real world asset that's on the other side of this, that actually makes the crypto wallet able to control more real resources and see more real resources. So a lot of that would be something that like folks who are working with Chainlink might be able to help.
Always very interesting to listen to Balaji. It's always gives me a lot to think about. Next, we have from Cryptex Finance, Joe Sticker, who's going to talk to us about everlasting gob streamers. So welcome, Joe.
Hello. It's nice to be here with everybody. Thank you so much, and I hope everybody enjoyed lunch. It was really fortunate that we were able to sponsor that and get that done. So gonna get into some things today about Cryptex and about what we're building and how we're trying to utilize Chainlink technology to create essentially a one-stop shop in DeFi. So to start, what is Cryptex? Cryptex is DeFi United. And what we're looking to build here is a very simple platform that anybody can utilize. And through this platform, you can access the very best of DeFi in a simple and seamless way. So you have indexes that we're going to talk about today. You have the ability to access spot, to bridge and swap across 28 different bridges, 20 chains, 38 dexes. And then obviously you have perpetual markets that are all powered by Chainlink. So we have a little bit of a example of how you can now bridge any asset across multiple different chains completely seamlessly and as simple as possible. So the whole point of this experience is to just try to create a UI UX experience that's just seamless for the user. Because at the end of the day, DeFi is not going to win as an industry by complicating things. DeFi is going to win as an industry by making things simple where the user doesn't even realize what's going on behind the scenes. And that's what we're working to create. Not only do you have indexes or perps or bridges and spot, but the ability to access them in a very simple, very easy UI, UX experience. So what are we building with Chainlink? What are we working on? And keeping with this mission of simplicity, we have two different indexes that we're currently building. Number one is meme, and number two is TCAP, which is a total crypto market cap asset, where it's essentially the S&P 500 of crypto in a single solution. So through Chainlink's low latency data feeds, we have the ability to create a meme index where you have 250 millisecond latency, essentially matching the block time on a network like Arbitrum, where these indexes live. And then you have a total crypto market cap index where, utilizing their price feeds and verifying that data on chain, you can provide a fully decentralized way to access not only meme, but access TCAP as well. And the way that this is working is essentially you have a group of data feeds. So I believe now Chainlink has 90 different data streams, that are now live. And you can use these streams to not only create individual assets, but index them together where the user has a multiple choice. So in the meme index case, we've taken Doge, we've taken Shiba, we've taken Floki, we've taken Pepe, and we've taken ETH. We've given them a 20% normalization across the board. We've run them through an API where you have data aggregated from Chainlink to create the index by using Gauntlet and others to create the system parameters. And you're now able to take these feeds, create indexes with them, and stream them directly into a platform that offers users the ability to trade a basket of memes. So as simple as that sounds, this is what the everyday users are looking for. They're looking for meme assets. They're looking for total crypto market cap, which we're going to get into in a second. They're looking for AI-based solutions. And the more data feeds and data streams that Chainlink releases to the world, the more use cases you have to essentially index them. And this, for us, is an incredibly important sector. We'll get into this, why we want to do this later. But to have these technologies and able to use Chainlink's infrastructure to build these assets and do them in a way that's fully decentralized to the world, this is what we believe is the future. So very, very thrilled to have these for the very first time. And the most beautiful thing about meme is that the index is fully upgradable. So over time, as Cryptex is a DAO, it's a decentralized autonomous organization, you essentially have community members and others who can decide on what wants to be added to these indexes, where you build them in an upgradable fashion, where as more feeds come online, you can add to the index, you could remove from the index, and you could essentially manage it, but do it through a DAO and do it fully decentralized, where there are no intermediaries. There is nobody that's able to, infiltrate this technology. You're doing it in a fully open source and transparent way. So we just deployed meme. We plan to add more feeds to it as it comes online. And we are getting ready to launch TCAP 2.0. So TCAP is going to be the first time that a true total crypto market cap solution exists. And why is that important? Why would we want to do total crypto market cap? Well, next to Bitcoin and Ethereum, it is the most widely quoted metric in the entire industry. Everybody's always saying, well, the total market cap is X, the total market cap is Y. But there's never really been a way to actively harness that and make that available to users. And it's such a simple type of situation where you have a data feed essentially. That data feed on chain is verifying the price. You have a series of data aggregation that anybody can check out at cryptex.finance, read the white paper. I'll spare you guys that for now. But essentially, we deployed that initially in 2021. And we just spent the latter part of 2 years recreating that system for better pay control in the secondary markets, interest rates to properly manage the supply and demand. A lot going on there that we're really, really proud of as we gear up to launch that in Q4. And that is, something that we're super excited about and super happy to have Chainlink to verify, that data in a manner that is fully decentralized. So for us, indexes, we believe, represent a huge opportunity in the space. And, looking at the current numbers, it's a $70 billion market. So all the indexes in the entire crypto space, as we're here talking about real world assets and tokenizing assets and bringing assets on chain, a metric that we care about the most is the total value of all crypto indexes right now is only $70 billion. That's it, $70 billion. And when you look at that number and you compare to the value of indexes worldwide, ETFs, other indexes, it's $15.6 trillion. So the ability for not only us, but anybody in this space to accurately or correctly figure out a way to build decentralized products in a fully open world, you have a huge market to fill. And through platforms like Chainlink, where these data streams and these feeds are fully accessible, whether you're creating one-to-one indexes using data feeds and CCIP, whether you're creating perpetual markets using the streams, whatever you're doing, there are the solutions and the tools that exist. So it's, a quote that I loved: if you want to build paradise, simply look around and build it. And obviously I took that from Willy Wonka, but I felt like it applied for this speech, right? If you want to build it, just go make it happen. The tools are there. The markets are there. And the beautiful thing about this space is that it is still incredibly early enough where people don't even care about indexes. Nobody cares yet, but they will care. They will care as their appetite grows. They will care as the demand continues to increase for actual products in this space that are going to change the world, whether it be an S&P 500S product, a Dow 30, meme indexes, AI indexes, blue chips, DeFi baskets, whatever you want to create. Chainlink provides the ability to not only create these assets for the world, but to create them fully open sourced, fully decentralized, no intermediaries, and the ability for any user to access these technologies if they so do wish. And given where we are in the cycle, and given where we are with this skew of 70 billion to 15.6 trillion, you can rest assured Cryptex will be out here building indexes of all kinds, working with Chainlink to make that happen, and bringing in open-sourced and free financial decentralized markets to the world. With that, I thank you very much and have a wonderful day.
All right, thank you, Joe. Next up, we have a really interesting panel discussion on the future of financial market infrastructure, and it's going to be hosted and moderated by our very own Angie Walker from Chainlink. So let's welcome the entire panel on stage, please.
Good afternoon, everybody, and welcome. I'm pleased to welcome you to the panel on the future of financial market infrastructure. I'd like to start by just introducing our very distinguished guests that we've got here in the room today, all of whom I'm very happy to say that I've worked with over the last few years and had some amazing experiences in the digital space. So I'll start on the far side with Koki Chung, CEO of AsiaNext, and followed by Tom Menner, who's the CTO of SBI Digital Markets, Jorgen Wolknein, who is the Head of Innovation and Digital Assets at Euroclear, and finally Jennifer Peavy, who is an advisor to Chainlink, but formerly Head of Innovation and Strategy at DTCC. So I'll start by asking everybody to introduce themselves and telling us a little bit about what they do, and then we'll get right into the meat of the session. It's Jennifer first.
Oh, great. Thank you very much, and good afternoon, everyone. Jennifer Peavy. I am a global financial markets expert and leader. I have 30 years experience in the industry, of which about half has been spent at two large US FMIs, one being CME Group and the other DTCC. And I've been pretty lucky and excited to be here today, but I've spent a lot of my career building new business solutions, all with an understanding of the value and the impact of new technology solutions and how they can help organizations and deliver better solutions for clients. So very excited to talk about blockchain and digital assets today.
Hi, everyone. So I'm Jorgen Wolknein. I'm the Global Head of Innovation and Digital Assets for Euroclear. So for those who are not very familiar with Euroclear, it's a financial market infrastructure For half of the people in this room, we should not be here. And for the other half of the people in the room, they understand that we have like 40 trillion of euro of asset under custody. And like this is a big part of the game. So yeah, we're doing innovation, we're doing digital assets. We have been supporting the growth of the capital market for over 5 decades. And guess what? We'll be here over the next 5 decades. So happy to discuss.
Okay, thank you. Good afternoon, everyone. My name is Tom Menner. Again, I'm the CTO for a company called SBI Digital Markets. I like to remind folks that SBI is a financial conglomerate based in Japan. It is not the State Bank of India, so I always need to point that out. We're based in Singapore, and our focus is on digital assets, very specifically for capital markets, particularly at the institutional level. Historically, I had a long career at IBM, which is how I got involved with blockchain through Hyperledger and Hyperledger Fabric back in the early days. From there, I went to R3, where I worked directly with Angie, and my very first project I worked on was with Jennifer over at DTCC. And as part of the SBI family, Koki, who you'll hear from in a moment, is one of my sister companies. So the only one who's escaped my clutches so far is Jorgen, but I'm looking forward to putting him in my portfolio sooner or later. Thank you.
We're built on R3, so we might have had a chance to work together. So.
And I'm Koki Chong, the CEO for AsianX. As you heard from Tom, we have 2 shareholders, one of which is SBI in Japan, a financial conglomerate, very active in the digital asset space. The other shareholder is the SIX, which is the Swiss Stock Exchange, which also has a digital asset exchange as well called SDX. So AsianX is created out of these 2 shareholders in Singapore. We have been existing for about 3 years now, building our ecosystem of digital asset exchanges. We have 3 exchanges now. One is the crypto derivative exchange, and then the spot exchange, as well as the STO exchange. Yeah. So my background is banking and capital markets. Thank you.
I do feel very privileged to be in the room with so many distinguished people. And I tried to add up the number of years that we'd collectively served between us in capital markets, and I stopped after we passed 100. So most of that was probably mine. Anyway, okay, textbook question to get us all started in that starting blocks. Financial market infrastructure, by definition, plays a very vital role in the capital markets and TradFi ecosystem. What macro trends do you see in the evolution of your roles as individual organizations and crucial financial market infrastructures as part of your adoption of decentralized type blockchain-based assets and workflows? So I'll start that question with Jorgen, if you don't mind.
So, we are an incumbent. And as I mentioned, we have been around for almost 60 years. And there are a lot of things that are changing. But if we try to focus a little bit on what will not change in the future, that might be a solid foundation to actually build on. And there are a few things that, have happened in the past, will continue to happen in the future, and that makes our role quite critical is, first of all, the trust people put in our institution. And, somehow blockchain was created at the beginning to disrupt trust, and we are the physical representation of that trust. We represent that trust not only with the assets that we have, with what we bring to the market, and how we support the overall growth. So we recognize as well that the role we are playing today is not going to be the role we are going to play in 5 to 10 years. So we have to change, and we have to transform from inside, but we have to as well appreciate the fact that we are part of an ecosystem. And if the ecosystem doesn't move together, then you might be far ahead, but alone, or far behind, which would be the worst situation. So everything we do basically is focusing on innovation, not as tech enthusiast per se, but mainly leveraging the tech to support the business evolution. What will that enable us? What kind of new capabilities will that help us? What kind of new business model do we have to define around all this new technology? Should it be AI, DLT, and all the trends? We don't believe there is one silver bullet to everything, but we have to be at the forefront of that. We have to be the change agent, and we do that together with our clients.
Jennifer, given your experience over the last 8 or 9 years, it'd be great to get your perspective.
Sure. So I'll echo Jorgen's comments with regards to what financial market infrastructures provide to the industry, they ultimately will never give up the fact that they are, bring the safety, soundness, and resiliency to our markets today. And I think as most of the players in the ecosystem appreciate that role that they play. And so, and the other thing I'll mention is, over 50 years for Euroclear, I know DTCC has had a 50-year anniversary as well. As you think about the decades that these institutions have behind them, they've also built and innovated and changed with new and evolving technologies. So AI, when it came out with algorithmic trading, different financial market infrastructures would create data centers that were closer to the exchanges to help with latency problems. Like there's always been some innovation that these market infrastructures have evolved around. I think what's going to be really important to watch in the next decade or so is how these market infrastructures now, with such legacy and histories behind them, how they actually evolve and whether they start to diversify, become more global, how they approach the markets, how they offer new services to their customers, and how quickly they can innovate in order to make an impact.
And Cocky and Tom, from a greenfield perspective, what's your view on how you address the
Well, from an exchange perspective, FMI perspective, I think blockchain, the trends around adoption does create a lot of possibilities in the post-trade side of things. Not yet the pre-trade, but eventually I think it will as well. But for now, I think there are a lot of efficiencies to be had in the post-trade, mainly because of ability to move assets and, fiat on-chain as well, whether it's electronic money or stable coins. Eventually that partakes in this ecosystem. The ability to do DVP on-chain, atomic real-time, creates a lot of possibilities for us.
So from a technical perspective, I'll take that point just because I can afford me to be a little bit heretical here. I don't think there's anything particularly magical about using blockchain as an infrastructure. From an abstract point of view, it's just essentially a distributed transactional database that allows counterparties to update those records. That being said, though, I think one of the key questions that is being answered is what gains can we see from the implementation of this technology? So on the one hand, you have cryptocurrencies, which are their very own asset class. But separate from that, within the FMIs, can we actually pull out operational efficiency with the use of this? And would it be pre-trade? Would it be post-trade? How do we handle custodial services? Is there some advantage in the sense from not just, let's say, from settlement and corporate actions, things like that, but can we introduce new asset classes? Of course, we talk about real-world assets and tokenization of those assets. Do these become assets that are of interest to investors? Is there a buy side for the things that we're actually creating? So I think there's a number of existential questions we have to answer in this space, but I think this is what's gotten people so excited, is that they see some real possibilities for growing this space.
And the next question, I want to just talk a little bit about how we prepare ourselves and how we might see the emerging roles of market participants within a digital world, if you like. And I say this from first-hand experience. One of the challenges I faced early on in my digital career with Tom was educating people. People needed to understand, what do we mean by the use of blockchain? What do we mean by the use of tokenization of assets? So the question is, from an industry perspective, how do programs of work like Project Guardian, driven by Maz, and like projects like the BIS Agora program, what important role do they play in helping us to understand potential future use cases in a digital world? How might that impact the roles of the actors and the participants that exist today? Because obviously we're going to see some changing roles as a result of some of these programs of work. And what would your takeaways be? And I certainly know that a number of you have been very actively involved in programs like Guardian. So I'll start first with that question for Cocky.
Thank you. Yeah, I think the projects like Guardian and Agora, there's globally well-known projects. These are initiatives that kind of stir the market's interest and educate the market on how regulators can stand behind private market participants to push the boundaries on blockchain adoption. The Project Guardian in particular deals with enhancing liquidity and efficiency on tokenization of real-world assets, and they have done a couple of pilots which are very successful. I think Guardian is moving towards global layer 1 in terms of the next phase of development. This will involve a lot more players and so-called the movers and shakers, right? Agora doing the same thing with cross-border payments. I think these serve to give what I call conviction to the markets that regulators are behind it, the technology works. These are being deployed in real-world cases, right? So in terms of market participants like us, we kind of look at these projects and pilots as something that we want to participate in as well, because we want to be actively involved in reshaping market structure, giving solutions that fit what the market wants, especially in how TradFis adopt blockchain, right? In that space, so we want to be part of it, so that we, not left out in terms of the solutioning. Yeah.
Tom.
As Koki alluded to, actually, SBI, we've been involved with Project Guardian almost from the outset. The first couple iterations, we were directly involved, and we continue to be involved. You'll hear announcements at Singapore FinTech next week of some of the recent work that we've done, and of course, the scope of Guardian has expanded. And as Angie well knows, when we were at R3, we were involved in quite a number of CBDC projects globally. I think one thing that's come out of this has been the question of what is the commercialization of these potential projects. So on the one hand, as Koki pointed out, we've demonstrated the technology works. We've demonstrated that it can do what it's supposed to do, whether we're talking about CBDC, whether we're talking about capital markets, and various asset classes. But is this an improvement over existing FMIs? Is this an improvement over existing processes? Is it an improvement over, in the case of CBDC, retail cash or wholesale payment systems? So once again, I come back to these existential questions of, are we able to show or demonstrate some return on investment and some path to commercialization where somebody actually says, I've implemented this solution and I'm actually generating quite a bit of money, whether it's through operational efficiency or the introduction of new asset classes and new forms of trading.
Jorgen.
I would start with one of the key points you mentioned, Angie, is around education. And let me take you a vanilla example of bond issuance. I think this is the most vanilla you can get in terms of like doing something on DLT. But it serves several purposes. First of all, it's working well for three reasons. You have regulatory clarity around that. You have technology readiness as well, it's working. And you had some client demands. And all these three things allow you to actually progress further. And what's interesting is that as vanilla as it might be, it's something that is here for good. There's no going back on that. And it's a key milestone that everyone can build on. You don't need to demonstrate that again. So actually, it's a small step. Let's not fool ourselves. It's a small step, but it's actually a step that you can rely on solidly. And between the first issuances where you had some challenging questions from the buy side, like, what's that about? Why should we be interested? And the liquidity is a challenge, etc. To the latest issuance you see where it's largely oversubscribed, and now it's become BAU for some investors. So the educational part of that plays a huge role, and we play a huge role in supporting the market there. And I would say, not to repeat what you said on Echo and on Agora and Guardian, we are part of that as well. It creates a great momentum in the market to discuss with central banks, looking at public and private partnerships, looking at the tech aspect, the regulatory aspect. Because at the end, when you talk about Agora, what is Agora? Is it an FMI? Is it a tech stack? Is it something? And this question will come more and more often. So thanks to all these projects, we are asking ourselves the right question from a capital market point of view to actually be able to progress, have great answer, and basically identify the missing points to have the three components that would allow us to scale and to more adoption and more scale, because there is not yet adoption and scale to the level it could or it should.
And given the point you made was very interesting. You said, given where you've got regulatory clarity, given where you've got client demand, and given we know the technology is perfectly capable of doing the things we're trying to get it to do, then the question then comes, and this is one for Jennifer, because I know Jennifer's lived in this world and has experienced this firsthand, so through the work that you've done at DTCC, given these types of initiatives bring everybody together, we've got clear benefits, why are they not moving towards adoption at the pace we thought they might? Is there, what's your experience of that? Why do you think that might be?
The person who lives in the jurisdiction where there's the least amount of regulatory clarity.
I'm picking on you first because I know you've had experience of that in the past, and then I'll throw it out to everybody else as well. But it'd be great to hear your perspective.
Yeah, so this is something that I've talked about a lot. And one of the things that I also think are interesting about these public-private partnerships, I think they're really incredible for that education purpose. But one of the things that I've always just longed for is, who's going to have that private-public conversation around around something where we really start to get to, look, this function no longer needs to exist, and therefore we're going more direct to the end user, or we're going more direct to the buy side, or something where you're now really shifting market structure change. That's going to be when I think it's going to get really, the conversation globally will get really interesting. To answer your question about adoption, though, I think there has been, globally speaking, everybody's moving at a different pace. And I think the reasons for that are, first and foremost, regulatory clarity. And what do I mean by that? Or asymmetry, to use your word, Angie, from earlier today. I think, ultimately, each jurisdiction has their own regulatory regimes, and they have different goals and objectives in those regimes. They have different methods. They've been around, they have different maturities in terms of the regulatory regimes. And so, that's issue number one, right? I was telling Alex earlier today, said it's funny when you have a regulation in the US that actually lists the name of an FMI in its regulation, it makes it really difficult for somebody else to come along and do anything, right? It's very specific. And so I think that's number one. I said the second one, I think you've got priorities, organizational, and even FMI priorities. If you look at this past year, the U.S. moved to T1. I can tell you it was an all-consuming initiative, and it didn't just stop with the U.S. or North America. It's starting to bleed over into other countries, and so resources are having to be diverted and put towards those efforts. They're important efforts, but it's still resource and budget that's getting directed in a different place. I'd say that, aside from regulatory clarity, I think the market maturity in different countries and jurisdictions is also important to think about. None of this can be looked at on an apples to apples basis. In the US, you've got an FMI that is 50 years strong. You in securities, you have FMIs in commodities and futures space as well, also very well entrenched, have been around for decades. And so, what happens to these organizations? They build their products and services and technology stacks over time, and it gets really hard to start to just replace things, right? We can't afford, the markets are really dependent upon these organizations to do what they do so well. We can't afford to have something just completely implode. So I think that's, whereas, in some other emerging markets, you might have, FMIs that are newly starting. And I think that's a great opportunity, because the old adage is it's easier to knock a house down than, and rebuild it than it is to remodel, right? For example. So, and going to that point, a lot of FMIs have modernization efforts going on, just kind of underpinning that, where, and again, this is on a global basis, modernization efforts to effectively, improve their platform so that they can continue to support the trillions of assets that are being processed today, but also, position themselves to be able to bridge those traditional assets and digital assets in the future. So there's so much going on. It's not an easy answer. And I wish, we want a silver bullet, but there's so much going on that's behind how we move this forward. I think it starts with some of these private-public conversations and projects, because it does bring to light a lot of the value that these initiatives can bring, and where you can start to see successes. So I look forward to seeing more of that. And again, having a little bit more challenge in the workflow and the life cycle management and the participants around the table, just to shake it up a little bit.
Yeah, indeed. And the bridging of traditional and digital assets, Jorgen knows very well indeed from the work that we've been doing on the DFMI over the last few years. So from your perspective, and you've got a big role to play in the existing world that continues its own journey, it's got its own momentum, which is huge as an international CSD. How do you feel adoption, so far and going forward has occurred from your perspective? I know that you've got a view on that.
Well, as I mentioned, adoption is absolutely not where it should be, but there's a way to get there. And, because we're at SmartCon here and we have had so many discussions with different kind of people. And looking at the front row, yesterday I had a chat with Prophet around how they operate nodes for Chainlinks. And it's a different kind of conversation. We have other conversation with other people talking to you about, they are going to do this data set on this smart contract or like that. And it's kind of very different and very focused. I see on the front row as well, everything around the LEI and the VLEI, that is start to become a standard. When you use words that everyone understands and know how it can be used, it's actually helping you progress. And that's exactly one of the works we have been doing with DTCC and Clearstream around the digital asset securities control principles. All the conversation we had made us come to a conclusion saying everyone is talking about the same story, but not from the same starting point. So people are talking about the vision there, but you need to get there. Some people are talking about what's happening tomorrow, today, but nobody has the same start of the story. And as regulated entity, I know that, we can see clearly, at SmartCon, you have a capital market stage, you have a Web3 stage, and you see the conversion of both. And that's why we laid out 6 control principles that are important for financial market infrastructures. And these are things that are guiding the conversation that when you look at them, they clearly point out to some risks and to some controls that will mitigate these risks. And all that, is supporting a conversation moving forward. And we have seen many different companies of different nature just like posting part of that saying, you know what? When we interact with these FMIs, because they are somehow, people realize that they will not get rid of us in the morning. They would like to partner with us in the evening, and continue the conversation. And we have given them a roadmap to follow. It doesn't mean it's perfect, but this is serving a purpose, and we have to go then. It's kind of difficult to argue with the principle. You can always go down to, this is missing, this is not perfect, and by choice, we decided to leave out the standards because this is something for the industry to build together. But questions like, are you regulated? What's your take on asset safekeeping? Are you resilient and secure? If these are already challenged, that makes the conversation much more difficult.
I'll just echo, one of the things that makes our financial markets work so well are these principles that on a global basis, we all adhere to in some way, shape, or form. So I, also really excited about the digital asset securities control principles because they do help that conversation along.
And we did start that together.
Yeah, actually, DAS-CP is very much dear to my heart as well, because I think we're craving standardization, and not just standardization across existing ecosystems like Euroclear and DTCC, but also so that we can embrace standardization when we're bootstrapping new financial market infrastructures in the future. So listen, Koki and Tom, I know from your point of view, you're bootstrapping new ecosystems. That is, without doubt, probably the hardest of all tasks. I mean, we recognize that. And I know in the case of Tom, you've got the heritage of SBI sitting behind you with a very large pre-existing ecosystem. So it'd be very good to get your view on how do you see adoption coming into it from a green field, and how much of your existing ecosystem, Tom, can you lean on in order to promote the services of SBI Digital Markets? So maybe start with Koki first, because you're bootstrapping from scratch. And although you're backed by very significant financial market infrastructures, you're still having to start from the beginning. So it'd be great to get your view on that.
Yeah, thanks, Angie. Yeah, so the adoption, I would say, is for me like an evolution rather than a revolution. Obviously, if you're born out of the Web3 world, revolution happens every day, right, over that side of the world. But in the TradFi space, adoption of blockchain is more like an evolution. In our case, we're trying to bridge in between, to build a bridge between the current and the future for, traditional capital markets. We see the adoption as a lot of people are interested, just trying to understand what it is. Atomic settlements, moving assets on chain, tokenization. There are a lot of interested parties. Now, unfortunately, the world has been established for many, many decades and centuries. So the old world is not going to just shift over tomorrow. There's a lot of stake, for the board, for the regulators, and so on. So for us to convince our issuers, our members to onboard onto a tokenization platform to deliver, the solutions between investors and issuers, does take some time. And to the extent they are very comfortable with their existing solutions, there's no push factor. It's much like, when you attend universities, you can now go online and get a certificate, but would a lot of people just jump on it, even though it's cheaper? May not serve a lot of people's interest to just go online, right? But in time to come, even supermarket chains are going online to deliver their goods and sales. So I think for me, it's an evolution, and I do see it in AsianX happening that way. Yeah.
I think the bridging comment is very interesting because the bridges are going to become very important in how we link all this together. Tom.
So from my perspective, again, my interest is in the distribution of digital assets. And when we talked to clients a couple of years ago, they had basically said, well, and this was institutional clients, by the way, they had said, well, if you're talking to me about tokenizing a bond just to get fractionalization effects, I'm not really interested in that. That's more for the retail market. I don't necessarily care about that. What I do care about is if you can open up new distribution channels for me, and if you can provide new possible asset class avenues for me. So it became clear that that should be our mission in life, is to focus on that distribution of assets. So to the point Jennifer made earlier, I think the strength and at the same time the weakness of this story is the network effect. The value of putting together either a single public permissionless blockchain or multiple networks of blockchains that are interoperable is really the network effect that will drive this. It will drive the liquidity, will drive, I think, the adoption. People start to see value. If I can originate an asset in this, starting in this market, get it listed in these 2 or 3 markets, maybe via Koki, it gets sold, gets custodied over in DTCC or wherever. I think that's the effects that we're looking for. At that same time, and the value that's coming from that, we're inhibited by the regulations. So the way that a token is treated in Singapore is different from the way it's treated in Switzerland, or maybe different in how it's treated in Japan or other jurisdictions. So, and what asset classes are allowed, what asset classes and how they operate, what those which would drive what those smart contracts look like, is really very, very key. So as Jorgen mentioned, if standards help to drive some of that, if I can maybe have a metadata model of what represents an equity or fixed income asset and have that represented, whether the jurisdiction is Singapore, Malaysia, Switzerland, the US, that helps quite a bit. Then the other problem that I have to solve as a technician is that interoperability. I can't necessarily assume that we're all sitting on Ethereum, for example, or that we're sitting on Ethereum variants. I need to be able to have those assets ideally flow freely, that something originates with me, I can list it over on Koki's exchange and then have it custodied maybe somewhere else. So that's, I think, part of the technical challenge, and as Jennifer mentioned, the regulatory challenge that I think has inhibited adoption.
If I may add to that, I think we're all excited about the arrival point, but there's a journey we have to go through. And the journey is long, the journey is expensive, and we have to celebrate the small wins we have in between, because let's face it, we're not going to go to the most exotic place tomorrow morning, and there's a way to get there. And I feel in the conversation we have in the market, a lot of frustration. It's not going fast enough. We're not seeing enough value. We want everything now, otherwise we wouldn't be engaged. And then you got into the chicken and egg story. And if we all realize, to make a parallel, what the smartphone has brought to the phone, this is what the smart contract will bring to the contract. Nobody will argue that, or maybe people will argue that life with smartphone is better, but life tomorrow with smart contracts is definitely going to be better. But how much better, at which pace are we going to get there? to get people excited, that's a different story. And that's the same with a lot of trends. If you look about AI, people are saying AI is so easy now, we can just, deploy it and it's cost less than everything and there's so much adoption. But people have to realize that in the back of all the investment the institution have done on their cloud infrastructure, data centers, data quality, it has enabled AI to be so quick in the adoption. But if we would have told them 10 years ago, you know what, you're doing that for AI, maybe we wouldn't be in this situation today. So there's a pace, there's a rhythm, there are progress, and we need to basically, and that's our role as an FMI, to basically progress forward, but at the same time manage some expectation like you will not solve regulatory or national securities law problem by having a common infrastructure.
And we haven't even mentioned the fact that there isn't a real usable cash component on chain on a global basis, right? So, so once that comes along too, or once there's something that can serve in that as that purpose, then that also just helps with the broader adoption.
I think the cash element is super important to the adoption. I think we're definitely going to see a change over the coming 36 months. So I'm going to change subject ever so slightly, but hopefully in line with the conversation. If we look at the asset classes that are being tokenized, we saw some very early innovation around real world assets. There's a lot of assets sitting outside of mainstream capital markets that we're very much looking forward to getting our hands on and we're very excited about. So RWAs, there's a wide variety of RWAs, and some of them are things we would want to invest in and have wanted to invest in for a long time. And the analogy that I make is it's like the man on the street walking down the street and having the opportunity for the first time ever of owning a shard of the shard. That's in the UK. But it does allow for the democratization of some fairly complex assets that then can be made available. More recently, we've seen a lot of tokenization around collateral. You've seen some really successful collateral mobility projects, both within exchange groups. And I know Euroclear were one of the original custodians to HQLX, so you've been involved in that from the very beginning. And now, of course, we're seeing quite a lot of activity in the fund tokenization space. So my question is, and I know it's a very different question for all of you, is, if you look at the asset classes that are very popular at the moment, what does that mean to you as an organization, and where do you see your organization developing in relation to those asset classes? And I'm going to start with Jorgen.
So I would start by saying that we have 40 trillion of assets under the custody, but they don't belong to us. So if we don't get the client to instruct us to move an asset to another place, you can tokenize it, untoken it. That wouldn't change much to the story. So we have to realize that you have the technical capabilities, and imagine everything would work. You still have to have a client instructing you to move your collateral or your asset from point A to point B. And that's not massive today. And so we have to have a balancing act between the new opportunities and the huge stock that we have that belongs to our clients, and to see how we can make it move. And most of us are fully aware that today most of the platforms are not revenue generating. It's a challenge. But then you need to create the different kind of use cases that would act like a layer cake to actually make it break even at some point. And this is the moment you will be able just to fund the journey in a more efficient way while unlocking the value and allowing people, people should, we are an infrastructure. We build highways. But because the technology is so affordable, everyone wants to build a highway. But it doesn't work that way. I would be happy to have different kind of roads, but it's not a highway. So people should build cars, highways, and parking spaces, and a lot of services on the highway. And eventually you get a toll and make some money out of it. But until the moment you figure out what you're trying to build and what's your nature, and if you can actually win there and how we can cooperate together, I'm asset class agnostic.
Yeah. It's a great place to be, right? Because I think you've got to go with where the demand's going to be. But you've got some very significant infrastructure you've already built, which hopefully you can leverage going forward. So Tom, from your perspective, what asset classes are important to you, and where do you see your growth?
Yeah, this question is actually extremely important because even going back to some of the other questions we were answering earlier, I believe it's the buy side that's really going to drive everything. So if there's a demand for what's being provided, if there's a demand for the global liquidity, for example, then that will drive the regulators and will drive the technical folks to actually come up with solutions. As you've probably no doubt heard before, blockchain, one of the criticisms, it's a solution that's looking for a problem. So of course we're trying to avoid this, and I think very key in that space is the buy side. If we're providing asset classes to them, or if we're providing services such as collateralization to them of their investments, I think the investor at the end of the day isn't necessarily going to care that it's a digital asset. Going to care, is this an asset class that actually provides some return for me, or is there something else I can do with it, such as secondary markets or collateralization and so forth. So that being said, again, historically, in recent years, we've tried to test the markets with institutions and institutional investors on what kind of asset classes might be of interest. And there you also start to see maybe segmentation of the different markets. It might be the case that, for example, if I'm a very large institution, a Goldman or what have you, I really don't have any interest in this sort of thing at all. Maybe I'm looking at ETFs or Bitcoin derivatives or something like that to offer to my clients, and I'll just take cut of my transactions. On the other hand, maybe the mid-tier investor, your accredited investors, your family offices, things like that, might have an appetite for a little bit more risk and a little bit more return. So that if you're talking about tokenization of real estate, for example, in developing markets, that's maybe something I want to round out my portfolio, or maybe at the riskier end of my portfolio. So it's really understanding what those kinds of, understanding what your end market is and what that investor might be looking for to help drive that adoption. So again, with SBI Digital Markets, we've kind of been kicking the tires on a couple things. Like, okay, yeah, the tokenized bond, since we're not really playing to retail consumers, there doesn't seem much interest in that. Tokenized real estate, yes, to some extent, depends what you're talking about. Tokenized revenue streams, tokenized intellectual property as a revenue stream. These are suddenly interesting asset classes that weren't really available before. The tokenization of real world assets, it depends on what asset you're talking about. And again, what market you're talking about. So as we've seen, it depends on who we're talking to and what their interest is. But that's really, in the end, that's what the commercial team will tell me to do, which, okay, this means I need to plug into Koki's exchange, and I need to be able then to have a secondary market over here and have some integration between that across potential DLTs.
Koki, from your point of view, asset class coverage?
Certainly, thanks. So I run an exchange. So for me, very importantly, we need to have collateral for our members who are trading derivatives on our platform. For the life cycle of it, we need to margin, and therefore we would like to receive either cash or non-cash collateral from our members. Now, as assets move on chain, obviously we look for the highly liquid and high quality assets like money market funds on US treasuries, for example. Immediately that comes to mind. And then this is on-chain, represented on-chain and available to us, especially if it's in our custody. Longer term, we look to expand that range of eligible collateral to also include non-US treasuries, for example, maybe hard real-world assets that are digitalized and tokenized, and maybe even sitting off exchange, because a lot of members would prefer the collateral to sit where the custodians, in their preferred custodians, right, rather than send it to an exchange. And that's where Chainlink solution might help with us building interoperability with other blockchains to make sure that we can monitor collateral sitting on another chain, able to value it real time, able to take possession and liquidate if the members default on our platform.
Angie, can I ask one
Yes,
answer?
sure.
Or contribute one thing here? If I was an FMI, I would be looking at what the current market structure change is that's going on. And I'm going to bring up T1 again, just because it's an easy one. But on the back of T1, what effectively has changed that tokenization or smart contracts, digital assets could potentially enable? And so securities financing, when there's only one jurisdiction that has T1 but others do not, like, is there something with the recalls and the effectively substituting your collateral that could be done a little bit more effectively for that? What about the money market funds that are being tokenized right now? in lieu of a stable coin or some other form of cash asset on chain, can those be used as a collateral? So should FMIs be looking at potentially, how could they potentially use that as a form of collateral or accept that as a form of collateral? So for me, it's looking at those, look at the market structure that's going on globally and thinking about, hey, what's an unintended consequence of this change, and how could we potentially solve for that in the future?
I totally agree. And I just wanted to ask one last question very quickly of everybody in just a few words. What's the most important thing that you'd like to see in throughout time? So in the coming sort of, 6 to 12 months that you think would help us to drive adoption as an industry? I'll just start with Koki first.
I think the technology is there. So it's all about the ecosystem, getting movers and shakers to participate in this equation. I like to see the community, regulators, stakeholders, ourselves getting, into solutions and really working on it. So evolution. Yeah.
Tom?
I would like to see the emergence of DLT-based networks that are very specific to financial services. I don't think a single global blockchain like Ethereum is really the correct answer for regulated financial markets. I think the development of one or more multiple networks, almost like a SWIFT network, that are interoperable is really what's key to drive this forward.
That's a great answer, by the way, because that's where we come in, because we can glue it all together. Jorgen?
I would say focus. When you see everything we are able to achieve, when we come together and we focus on solving one problem at a time, that actually helps things and the market to progress. If we're all trying to fix a small thing and not communicating enough amongst us, this is where we lose momentum. So focus.
Jennifer, US perspective.
So I'd say we in the US, we've got a lot of other challenges besides just focusing and doing some of the things that have been mentioned here. But I do think that find value, think about how in the meantime, what you might need as an organization. So I'm going to go with interoperability and connectivity, even between your existing assets and your future assets. Maybe you start thinking about how you bring those together in the meantime.
Yeah, I think interoperability is a really big question that needs to be resolved. We're very happy to be helping with that with everybody on this panel. And I think there's some other questions as well around data and synchronization, but we can talk about those another time. I'm sorry we're out of time. We didn't manage to cover everything. It was marvelous. And I thank all of my panelists for joining us. It was a marvelous group, and I really enjoyed being with you. So thank you very much. Thank you.
Thank you.
Thank you.
Thank you, Angie and team, for a great panel. We're going to go ahead and take a quick break. We'll be back here at 2:55 p.m. Thank you.
Can't stop thinking about you and me and how we used to be better. I can't stop. Wish it could have been better. I can't stop thinking about you and me and how we used to be better. I can't stop. Wish it could have been better.
Please welcome back Zaji Reyes.
All right. Welcome back, everybody. We're going to move into the next panel, Bridging Decentralized Use Cases to Capital Markets. Please welcome Nikki from Chainlink Labs, and he will introduce the panel. Thank you.
Hello, everybody. Thanks for being here. Welcome to this panel, which will explore the integration of DeFi use cases into capital markets. So it doesn't matter if you're from the DeFi side, if you're from TradFi, or everything in between, you're in the right place. So my name is Nicky Ariasinger from Chainlink Labs, and I have the great pleasure of moderating this panel with representatives from Arta, Gleef, Archax, and InvestorX. So to kick things off, I'd like to ask each of our panelists to introduce themselves, say a little bit about their business, and also your connection into decentralized use cases, capital markets, and tokenization in general. Eddie, should we start with you?
Sure, yeah. Eddie Lau from Arta Tefin. We're a listed company in Hong Kong carrying a lot of financial licenses, which means that we try to turn TradFi service into DeFi, into blockchain-based, from brokerage asset management to custodian. And also we are involved in payment with CBDC and stablecoins.
Yeah, thanks, Nikki, and Vince, if you're out there, for inviting us up here. My name is Julian. I'm co-founder, CEO of 2 licensed RWA platforms. InvestorX is based in Singapore. It's a broker-dealer and exchange license for any RWA on any public chain. Today, I'll be talking about IXSwap. It's our sister platform. We started building about 3.5 years ago when RWAs were called STOs and security tokens. There was no liquidity solutions in the marketplace, so we embarked on a mission to try to build the Uniswap for RWA, where anyone with an RWA security equity token could start a liquidity pool. So that was the original model. It went and got all its own licenses, retail licenses. We also built a launch pad so we could create more pools. And we're now soon to launch the first lending and borrowing collateralization for RWA tokens as well. Thank you.
So my name is Alexandre Kesh. I'm the CEO of the Global Legal Entity Identifier Foundation, the GLIFE. GLIFE is a sort of global big business registry to identify legal entities who are involved in transaction, be it capital markets, payments, supply chain, ESG, as an identifier for organizations. The reason I'm sitting here is because we also have a decentralized identity system for companies and the individuals working for that companies that can be used to verify identity, authenticate companies and their staff, and also permission those entities on blockchain and on Web2 platforms.
Good afternoon, everybody. Simon here from Archax. For those of you that don't know Archax, we are based in the UK. We're FCA regulated there as an exchange, a broker, and a custodian for crypto and digital assets. Our focus is very much kind of institutional. You know, we all come from the TradFi capital market space, but big believers in the power of blockchain and tokenization. So very involved in the tokenization of real world assets. Partner with some of the biggest asset managers in the world to do that. Very excited to be here at SmartCon. Very excited to be here in Asia. Although we're based in London and regulated in London, we'll be regulated in the EU very soon. We're talking to the regulators out here in Asia as well. So, you know, excited to be out here talking further about this. And thanks for inviting me today.
Wonderful. So for the benefit of the audience, let's zoom out for a minute. You know, we operate in a very fast-moving industry, but let's look at the trends overall, provide an overview. So if we think about the benefits, the drivers of why organizations are now building decentralized businesses focused on tokenization in this space, and you know, relating to your own businesses or even just the broader sector, what do you think are those benefits and drivers that really stand out, and as you know, why are they doing it? Eddie?
Well, shall we start with Alex, or you want me to go for it?
Go for it.
Well, people tend to talk about efficiency, so I won't talk about it. They talk about atomic settlement, I won't talk about it. Talk about transparency, maybe we'll talk a little bit about it. Because I guess the best way to illustrate is if you want to put your money to work and you want to make more than a risk-free rate, then you go buy a tokenized treasury fund, that's fine, that's all good. You know, you have it by now. You're greedy. your wife asks you for more money. You need to make that extra 5%, otherwise you can't go home. So you want to put that into daily liquidity instruments that is transparent enough, because now you know what, you're doing something way more dangerous than you should, but you still want to make that 5% because you need it. I think that's where blockchain also brings in things that, I mean, in a traditional capital market, something that you won't even have, you can't even imagine. But with the use of blockchain, now that your fund admin, your transfer agents, your broker, your prime broker, your custodian, they all add together to provide you that level of transparency. And guess what? With the blockchain, you can display them to, the right person. Be permissions or permissionless, doesn't matter. So the work that we do, we use permissionless blockchain. I want to highlight. Otherwise, I don't think we'll be invited to SmartCon, to be honest. But with that said, if it's a regulated token, capital market, security token, then you need a permission process. Permission token on permissionless blockchain. So with innovations, now we can bring transparency from, from data that is available, but that wasn't displayed. And you show them in real time terms, and guess what? Because now you dare to show people what you do, and you say what you do what you say, and you deliver what you said, and investors get what they think they would get, and these are verifiable, obviously. Then you get more money. So we are distributing one. We are going to distribute AI trading tokens in U.S. equities. Basically high frequency trading, 5 minutes trading per trade will last for 5 minutes. And then you can see all the data, you can see all the results. It's basically daily liquidity. You can see all this in one tokens. And guess who will do the CCIP and POR? That's Chainlink. You can't go wrong with that.
So it starts with transparency, but ends in yield. Is a good summary, Eddie? Go ahead.
Yeah, I like to break it down into maybe 5 things. So the 101 is digital shares better than paper share, or the DNA of blockchain. Number 2 is if we use like a tokenized share of a VC fund is a good example. If you have, if you did that, you could actually bring that RWA token to like a platform like IXSwap and actually create a liquidity pool for it and create some trading. That's pretty significant value increase versus the paper share. You also be able to, with smart contracts, blockchains, create better versions of VC funds, tokenizing a traditional type of VC concept. But instead of having this 10 to 20-year hold period, people could exchange it and create some liquidity pool. So that's pretty big. I think also you have these whole new distribution channels. So if you think about the RWA, the fastest growing, or at least the most well-known RWA assets today have been the tokenized treasuries, money market funds, put on chain to give the crypto holders, digital asset holders, an opportunity to participate in yield from the TradFi market. So you have this whole new kind of distribution channels, and we're plugging into crypto exchanges and DeFi wallets and all of these Web3 platforms that want to sell more assets but don't have the licenses with the security side of things. So you're seeing like a world, and the last one, which is just beginning, which I think is the biggest use case, is using RWAs as collateral and lending and borrowing. So taking again the concept of a VC token, pretty useless when you have a share of a VC fund. You just sit around waiting for distributions. If you could actually take it to a platform and use it as collateral and borrow against that, that's enormous. So we see like 4 or 5 major value propositions on wide tokenized assets that each are kind of industries in their own right. It's still fairly early, but we're seeing real traction in every single one of those buckets as well.
Wonderful. Simon?
Yeah, I mean, I'll sort of echo a bit of what Julian and Eddie has said, but I mean, first up, I mean, Archax currently, we're very much centralized. We're a centralized exchange. We're a centralized custodian. It's a centralized solution. But and the reason that's the case is because, to be fully regulated, it's a real challenge for regulators because they kind of want someone to be in control. They want someone who's on the hook. So it is a challenge to sort of how regulators view the sort of the DeFi world, exciting though it is. And the challenge then also for institutions is they want to because they are heavily regulated, they want to transact on regulated venues and regulated services too. So there is a challenge there, but that's not to say it can't happen. I mean, we are working on this now. I mean, we've taken a fork of the Uniswap technology, we've taken a fork of the Aave technology, and we're kind of developing our own regulated versions of that. So you kind of underneath a regulated umbrella, you have regulated instruments on those DeFi venues. And I think that, that is hugely exciting. Coming back to what Julian was saying, tokenized money market funds, I mean, they are of the moment, it's there's a lot of them around, and they are really interesting because you basically, in the traditional world, you invest in a money market fund, you get your 5% yield. That's kind of the end of the relationship. In the digital world, you invest in your tokenized money market fund, you get a token. Suddenly you've got this token you can use as collateral. Like Julian said, you could borrow against it, lend it out, or whatever. But you can also use it as a store of value. It's almost like a yield-bearing currency that can move around in between different institutions. And I think those kind of things are really exciting, and that's where the real innovation kicks in.
No, absolutely. So let's change tact a little bit. Alex, over to you. Firstly, thank you for teaching me the correct pronunciation of glyph. I've been mispronouncing it for 12 months, saying glyph, so apologies. But just as an overview, and we'll talk a little bit more about digital identity in a minute, but how do you think about decentralization and the value of decentralization in the organization you're building?
Well, interestingly, the Global AI Foundation has been built as a decentralized organization. So legal entities are not incorporated at global level, they are incorporated at national level and always will be. So the global LEI system is based on a network of legal entity LEI issuers who are present in the various markets. And when they need to onboard a new legal entity on the glyph system, they will verify the identification of that company based on national records. So by default, it needs to be decentralized. It's the way it's also decentralized and actually self-sovereign is that the company is in charge of asking for the legal entity identifier and to maintain their data, meaning that they are in control of the data that is published on the Global LEI Foundation, website and database. So this decentralized aspect is a must if you want to deal with legal entities and services to legal entities, because they are incorporated at national level. And if you want to bring them at global level, you need to take that into consideration. And self-sovereign is also very important because you need to ensure that those companies are able to manage their own data themselves and maintain their data on that system for them to trust the system. So the Global AI Foundation has been built as a decentralized infrastructure. And very naturally, when digitalization in general came along, we looked at how can we enable that analog service on digital through self-sovereign identity and verifiable credential construct, which enables then those companies to identify themselves on digital platform in a verifiable way, and also the people working, acting on behalf of that company through verifiable credential to be able to identify themselves on digital services. The system has been built in the cloud to be completely technology agnostic in a way that it can be plugged into a traditional Web 2 platform, but also into blockchain A, blockchain B, blockchain C, in a way that the identity is portable and that the credentials issued by that legal entity are also portable. So that's why I'm here at Chainlink, obviously conference, because I need companies like Chainlink to enable that interoperability in the chains, this off-chain, on-chain verification of credentials, and I'm very excited to work with Chainlink on that.
Wonderful. So I think, love to come back to the digital identity piece in a minute. But firstly, I just wanted to pick on a couple of threads from earlier in the discussions. We're talking about assets that are being, where we're seeing lots of demand. So obviously, tokenized money market funds were mentioned. We were discussing stable coins earlier, but starting with Eddie, just what do you think is the particular asset type that is of most interest, or where you're seeing the most demand, and why that particular asset in your
Well, two types. One is the higher risk type of asset than treasuries. So things that you want to invest because you want to earn more, but you're not sure. Things that you want to know more before you invest, and after you invest, you want even want to know more because now your money is at stake. So higher risk type of strategy, hedge funds, namely liquid hedge funds. not so much in private equity, to be honest. So that's one set, big market, by the way. And then gold, lots of demand in gold. By the way, you guys are in Hong Kong. Some people maybe not be watching it from Hong Kong, but gold, absolutely huge here. I think this week I again received 2 requests from gold operators, not crypto people, to tokenize their gold or gold mine for 2 reasons. One, they think they can sell for better prices. Not true, but unfortunately. 2 is they thought they can raise money faster and better. Absolutely. So gold token of all sort of use, gold token of all sort of forms, absolutely hottest topic in this area.
Yeah, I think, so what's the fact is that most of the tokenized treasuries, it's a very valuable product for the ecosystem, but it's not very interesting. Apologies if that's what you work on. It's actually predominantly only for high net worth accredited investors. I think BlackRock's Biddle treasuries are $5 million buy-in. So in the current space of blockchain, there's a massive confusion that utility tokens of RWA platforms are actually real asset tokens. What does that mean? IXSwap has its own utility token, IXS, it's a cryptocurrency. It's not a real asset token. Ondo's platform token is not a real asset token. Behind the platforms, the tokenized treasuries. So we've got this parallel universe going on where crypto, RWA utility tokens were the second best performing tokens in behind meme coins this year, I think. They're not real world asset tokens. On the flip side, the actual real asset tokens are predominantly for these treasuries, money market funds for high net worth. And that's because hardly anyone in the world's got any retail licenses. So we spent many years securing those retail licenses, and our play has always been towards the private markets. I think tokenizing publicly traded assets or publicly traded like assets is very valuable, but that's not, I don't believe that's where the real opportunity is. I think it's the private markets that are multiple times bigger that can benefit a lot more from tokenization. And what our mission was always, how do you get structured and bring assets that anyone could make real asset tokens as easy to buy and sell as crypto and to make it for everyone. And so what we do is we've been focusing on tokenized startups, tokenized VC funds, really exciting stuff. That's kind of our focus in particular. But I think it's interesting to note as well, like, you've seen people out there tokenizing stocks, which initially a lot of people might think, what's the point of that? It's not for Hong Kong, it's not for Singapore and New York. It's for Nigeria and Indonesia and Vietnam and for the billions of people that don't get access to this. So we tokenized a VC fund. It was a POC type thing, 500,000 USDT in a couple of days and 400 investors. A lot of people are putting in 5 to 10 USDT and they were the countries, right? So it really depends on, when you say what's the appetite or where's the most appetite, it's really like, then the next question has to be sort of which asset, which market, which platform, and it's kind of evolving all over, but we've also done private credit, private debt, real estate, of course. So it's really exploding now, and it's asset agnostic, I would say, but the volumes are all different.
I love the contrast in use cases. Simon, what's up?
Yeah, I think it's interesting, in this tokenized world at the beginning, everyone was talking about real estate tokenization. That was going to be the big thing, but it's a great use case, but it's never really got that mass traction. Then there was a lot of talk about private markets. Again, a fantastic use case, but never really got the traction yet. Where we're seeing traction the most at the moment is funds. Money market funds at the moment, but with interest rates coming down, maybe they'll lose some of their shine. But funds generally are super interesting. I think fixed income, another really interesting area. Fractionalization in that market is a great use case. So we're certainly seeing projects there. And finally, stable coins. We're working on a stablecoin project here in Hong Kong with Eddie. We're not the issuer. We're the technology provider. We can provide the custody. We can do the tokenization. We can hold the assets. We can hold the end user coins as well. And we're seeing a number of projects in that. There's a lot of stablecoin people interested in issuing stablecoins currently, for sure, and different types of stablecoin too.
No, absolutely. No, I love the contrast in particular use cases you're all seeing. Alex, I want to come back to the digital identity piece here. So I think members of the audience probably appreciate your views on why digital identity and solving this particular problem is so important. I think people hear it quite a lot, but it would be great to hear your perspective on why it's such an important problem to solve and why Glyph's perspective and your unique approach will help to kind of solve that particular problem.
Why is it important? Well, The flip coin to a digital asset is the entity issuing that digital asset. So you don't have a securities, for example, without an issuer of the securities. And the securities represent a company. So being able to identify the company at global level the same way, in a standardized way, is an obvious achievement you want to do, because it helps in understanding what you're investing in. It's nice to have digital asset, but if you don't understand the company behind the securities or the private note or the bond that you're investing in, and you cannot clearly identify that company, and that happens a lot on blockchain, where you have fake tokens flowing around pretending to be issued by this company when they are actually just mimicking the token of that company, is essential. So I'm answering the why is it essential? You need to be able to create trust in a trustless environment, especially when used by the capital market industry and by the traditional financial industry. You need to be able to ensure that if you have an investment in that token, that the issuer of that token is effectively the company that is the UBS, for example, having issued that bond, for example. You need to also make sure that if you are interacting on a platform, a permission platform with counterparties, that those counterparties have been properly verified by the provider of service, and ensure that you're not going to deal without knowing with a sanctioned companies, for example. So identification of companies, and even people acting on behalf of that company, signing transactions on behalf of that companies, physically on paper or digitally on platforms, it has always been an essential component of a functioning marketplace, and will also be an important component of a functional marketplace on blockchain.
Actually, if I can add to what Alex and Simon were saying. So we're doing a project together, by the way, between Simon and Eddie. So feel free to jump in as well. When we mint and when we burn, these are all smart contract terms, and you guys know better than we do. Without Alex, we need human beings. With Alex, maybe we have less human being, or maybe still need some manual process, because the process of KYC, knowing your clients, the process also for AML, anti-money laundering, is so onerous. It depends really who you are, where you're from, how much are you trading. So and it depends on countries. So Simon in London, me in Hong Kong, different regulator. I'm subject to SFC, you are FCA. So different standard even for a Nikki, same person coming to trade the same products. So why is it relevant is if you don't even start with the right steps to automate your process. Again, by that it means trusted data, source data is trusted, you have people contributing data, you source the data from the government potentially, which is a trusted source as well. You don't really get to the efficiency part. So that's why I want to skip the discussion on efficiency, because it's so hard. It's actually okay to be transparent, but it's so hard to be efficient without the right ID to start, decentralized ID. So and the way that we execute our smart contract, just for everyone to be interested, and Simon and Eddie are doing the same thing, is we try to, obviously stage one is easier, we a bit more manual. Stage two is to incorporate all this process under an automation, meaning that we incorporate the ID, then we also, that's the buyer and that's the seller, and then boom, and there's a process. In case the seller is a bad guy or the buyer is a bad guy, and we found out, we can reverse the process, we can burn their tokens. You know why we have to do it? Because now we talk about capital market, these are security tokens that regulate, the regulator has requirements to protect investor interests. So all these are by now done within the smart contract, meaning these are automated process. But then if you have garbage in, then you have garbage out. So Alex, make this beautiful garbage into something beautiful.
And if I may add something on that, so you mentioned your regulators in Hong Kong, your regulators in the UK. Well, guess what? The Glyph was actually created by the Financial Stability Board after the financial crisis, standard, yes, because it was trying to solve a problem of global identification of financial institutions. And Glyph is still overseen by 70 regulators from all over the world, including Hong Kong regulators and the UK regulators. So it makes it as an obvious and an easy choice in terms of identification system for legal entities. And the verifiable credential system that we've put in place is also obviously overseen by that regulatory, we call it the ROC I love it. Regulatory Oversight Committee, nothing to do with rock and roll. But it is sometimes rock and roll to deal with them, but it makes the system very robust at the governance level and very much recognized across the world. Right. So non-for-profit, by the way, not a commercial thing. It's a protocol that is that we invite you to use and abuse as much as you can in your implementations.
But you can almost play a game of regulatory arbitrage because the regulators are doing things differently. I mean, there's regulators are at different stages of regulating this space, right? And different regulators are regulating it in different ways. So as well as regulatory clarity, we kind of want regulatory consistency, ideally too. And and the digital ID thing is really interesting. Again, we're working on a project to kind of prove that in the institutional world there is a way to move a digital ID of someone who's gone through KYC, AML, and has this sort of bona fide regulated digital ID, that you can move it from one to another across different institutions, and they're all happy that it's being done, so people don't have to go through the process again and again and again. So it's interesting, but and exciting.
Happy to work together because that's clearly a use case for the VLEI, and that's already being experimented in some countries. So issuing a company with a VLEI, issuing a credential to its customer to enable them, once they KYC, to enable them to reuse that credential to access other systems and other services.
Yeah, and again, we actually use LEI already, legal entity identifier. We use LEI already. As a matter of fact, now it's a matter of making it decentralized, meaning on blockchain, or cryptographically proven, whatnot. So it's the way that we transfer the data, the way that we talk to each other, that is on blockchain, so-called, or blockchain relevance for the audience. Absolutely important. But that's it. You want to make sure that that process, after you have all these amazing things, your product give your customer, I'm not sure about cheaper sometimes, maybe things are not cheaper. I mean, actually, sometimes you buy a bottle of wine that's more expensive than a cheaper wine. For good reason, the wine is better. So we're definitely producing a better product. And by that, it means you earn more and you get better transparencies. And you probably get better liquidity because of better transparencies.
So Eddie, that's a good segue. So I mean, that's a great overview of use cases, benefits, opportunity.
Yeah.
Let's spend a bit of time talking about challenges. But we're, again, tremendous opportunities there. But Alex, I wanted to start with you first. Is it a question of the international nature of the problem you're trying to solve? Is it apathy? Or is it something else? What is the key problem or challenge that's standing in your way as you go up the adoption curve?
Well, it's clearly the fact that we don't live in a world with one country and one regulator and one way of doing things. So even though this system has been created by regulators and is still overseen by regulators, the way it is being implemented in every jurisdiction for what purpose is different. So I need to deal with that variance of the implementation of the same standard. But that's not a major problem. I think the current situation, the current challenge I have is we've created this verifiable credential system that needs to be incorporated or at least recognized in the various regulatory framework around digital certificates, around verifiable credentials that are being put in place. For example, in Europe, EIDAS 2.0. In China, it's a different regulation. In Hong Kong, it's a different regulation. So my challenge now is to make sure that the VLEI system, so the verifiable credential system that we've built, is as recognized as the LEI system across jurisdiction, and that a VLEI credential issued in Hong Kong can be recognized as a valid credential in the UK, can be recognized as a valid credential in legally, I'm talking in Belgium, where I'm from, or in Switzerland, where I live.
So Simon, from an Archax perspective, I mean, you work with very large enterprises as well as obviously more innovative players like Arta and so on. But as you engage with particularly the larger organizations, where are you seeing some of the challenges in this kind of blockchain or digital asset adoption curve again?
Yeah, I mean, I think there's we've kind of talked about some of those regulatory challenges, and in particular, I think another thing to consider is, typically if you offer a product or a service, you do it from a location and you're governed by the regulator that manages that jurisdiction. That's pretty clear. And if you're a participant or an end user and you're domiciled in a particular place, you're governed by the regulations in that particular place. But in the current world, or where the world is going, where does a decentralized product or service really fit? If it's going to be regulated, which regulator oversees it? People are much more like digital nomads these days. I mean, where are they really domiciled? Where do they fit? So I think there's, the kind of the status quo as to how financial markets were regulated and how people participating in financial markets were regulated are going to have to change. There's going to be a shift to evolve all this. And coming back to your question, the challenge for institutions is they need clarity around that, because it's quite difficult for them to get involved. Anyway. So some of my thoughts anyway.
Absolutely. I mean, Julian, do you have a contrasting view here? Is it about targeting the right market with the right customer with the right offering? Do you think that's part of the challenge or something else?
I could probably write a Bible on all the challenges. A couple of Bibles.
Get it started.
Yeah.
Preface.
Well, just for interest, these have been the major challenges. So the 2018, the very first security tokens, that was the origination. I'll just talk about RWA. Used to be called STO. So the very first RWAs were all failed ICOs, mad confusion, SEC chasing people around saying that's an RWA, we're going to fine you, and people saying RWA is illegal, all that. Then you had all these super TradFi people saying they're doing it all. It's all on their own private blockchain. That was a failed mission. We said that from day one. That's coming to fruition now. Then you had the infrastructure. There was no infrastructure at the beginning, of course. Then there was the first guys with the token issuance guys. They were selling the dream, liquidity, global markets, but they have no licenses. There's one or two left. Then there was the security token exchanges. They didn't help on the primary. They were waiting for the assets to fall out of the sky. They weren't there. There were no market makers. And you had this huge amount. You had years from 2018 to 2022, really a bunch of TradFi people or super inexperienced business people thinking if you tokenize a real world asset, and your exit liquidity is going to be the idiotic degens. So I had all these terrible assets that made no sense. Real estate. Why would I do a real estate token that pays 1% when I can get a REIT on the ASX or whatever at 6? So again, this is part of the Bible in chapter 1. And then, so end of all this, there was a lot of issues. So and it's gotten better. And so what's happened actually, kind of ironically, the real reason why 99% of people in this room, if you're all crypto people, know about RWA was in the last kind of DeFi meltdown. The major catalyst was like there's hundreds of billions of dollars of crypto earning no yield, and people went, oh, tokenized treasuries, put it on chain, so those guys don't have to get into fiat. They're actually buying treasuries, but they want to stay in crypto. And that was the first time that the crypto industry, in brackets, stopped hating on RWA and went, okay, we've got a real use case. And then that kind of cascaded into what else can we do? And then the other probably major challenge that was solved was Larry Fink saying everything's getting tokenized and it must be on public chains, and now everyone wants to be second, no one wants to be first. So yeah, there's a lot of other things, but they're kind of the main ones.
Well, to Simon's point, because now if I have clients who want to buy my token from London, I may be at risk, because Hong Kong, I'm allowed to sell to, all of you here, by the way, very much welcome. The phone call comes from London. So I work with Simon, pass the order back to him. He executed in London. So we kind of solve the problems on a regulatory standpoint. We're safe, but then we're adding layers, I thought we're supposed to be decentralized, but anyway, turns out you have more people involved. So that's one challenge. So we need regulatory clarity. Another challenge, which is also, you can see as an opportunity, actually, a big opportunity, is I think all of you probably have a crypto wallet, so this is the wrong crowd, but if you were in a more traditional conferences like yesterday and the day before, where there are more diverse topics, maybe 1/10 of the people have our crypto wallets. I'm sure they have a bank account for sure. Everyone have a bank account in Hong Kong. You will have Hong Kong dollar, US dollar, euro, sterling, maybe not, yen, probably. The amazing thing about Hong Kong, and they have done extremely well, is tokenizing Hong Kong dollar, tokenizing renminbi CNY, they call ECNY, EHKD. So Arthur Taffin is actually selected to participate in the Hong Kong MA, the Central Bank of Hong Kong MA project ensemble. Our goal collectively, again, not one person job, collectively, our goal is to bring 9 or 10 people who don't have a crypto wallet, but who have Hong Kong dollar, and turn that Hong Kong dollar into HKD, and don't worry about it, they don't know how to do it. So the government does it for them. And take that Hong Kong dollar into a tokenized product. So that's our job. That's what Project Ensemble is all about. And we run it as a business. I mean, we don't run it as a charity. We don't run it as an ideology. We run it as a business. That we need to make money, otherwise we'll go out of business. The end game in a matter of 12 months to 18 months, we think, is everybody can use their CBDC or stablecoins or tokenized deposit to buy tokenized asset, some of which will be related to capital market, maybe a fund, maybe a real estate by then, because guess what? Normal people can buy real estate, they may use a token, that's better. More importantly, trade finance. So receivable financing is something that we look into as well. That's our use case for HKMA. We're assigned the task to create RWA tokens in trade finance and settle with CBDC. Huge challenge. I mean, I won't go to a challenge, otherwise you and I can write a book together. We probably can sell a good amount of books. It's a lot of chapters of challenges, but it's also a great opportunity because now you kind of think maybe we can now truly decentralize the whole thing, because everybody, whether you have a crypto wallet or not, as long as you have a bank account and some sort of tokenized money, you can participate into tokenized asset. That's what we work on.
Excellent. So yeah, I completely agree.
We're only accepting BTC for our book sales.
Oh, we do actually. We do actually.
No Ethereum.
I was going to extend out. Collectively, we could write a very chunky book on challenges. So let me start with Simon. So what I'd like to do, a few minutes left. Everyone get out the crystal balls. So it's October 2024. We're going to look 15 months ahead at some point in the next 15 months or so. What do you think is going to be the most exciting or most impactful thing that's going to happen in blockchain, digital assets, crypto? Completely up to you. Can relate to your business. It doesn't have to relate to your business. Completely up to you. But just, I think the audience, given the wealth of experience on the panel, would love to hear from you. So Simon, starting with you.
That's great. I can come up with all the ideas, and they have to think of other ones after. So,
or feel free to alternate. Someone wants to jump out.
No, I think the continual trend for real-world assets to get tokenized, I think that's a growing trend which will continue, and I think momentum will build. I think one of the most important events is the upcoming election in the US, because that could see a massive change. I mean, there's the biggest economy of the world, pretty much, or the most powerful economy in the world, restricting the way crypto and digital assets can proliferate. So, I think that could herald a lot of change. And the other thing I'll just throw in there is stablecoins. I mean, at the moment, what is a stablecoin? We tend to think of stablecoins as being backed by fiat in some way, but actually, we've got people looking at stablecoin projects that are backed by other kinds of assets. And as long as you have some kind of proof of reserve of what those assets are in real time, then why can't that be a stablecoin? It doesn't, and those assets might be tied to the use case for how that stablecoin is going to be used for payments. So I think those are, and I think something interesting for the next 12 months or so.
Tokenization, US election, stablecoins. Alex, over to you.
Well, digital asset has been at the agenda for the last many years, starting with pioneers like you working on that topic, and now it's becoming clearly a mainstream topic. We're talking about digital assets moving from blockchain to blockchain, which is the great thing that Chainlink enables. Now, I think in 16 months or 18 months from now, we'll have the same discussions about digital identity and how digital identity can be portable and also, like digital asset, be reusable and movable from chain to chain. And that's obviously what I'm working on.
Love it. Julian?
Yeah, I think you can see the world all coming towards basically RWA. You've got Robinhood's buying Bitstamp. You've got interactive brokers already a long time ago selling crypto. You now have Coinbase and these other guys trying to find out legal compliant ways to add RWA tokens. If you go back to 2021, Binance and Bitfinex FTX all launch tokenized stocks without no licenses, pull them down. So I think the next 18, whatever the next period of time you mentioned, the really exciting part is you're now starting to see, this is why we built towards, the crypto guys are going to start adding all the RWA assets. And of course, the TradFi guys have already added Bitcoin. That's what they're doing. Now they're going to do what should be easier for them, which is RWA. So it's going to be a mad explosion of RWA assets. And hopefully that lessens the next crypto bear market, because there's actual real underlining growing throughout that.
Thank you. Eddie,
Yeah.
last word.
12 to 18 months, I know for 12 months, in 12 months time, I'll be back in here for sure. That's one thing for sure. Back in
Like a
SmartCon.
reasonable short-term time.
Yeah,
horizon,
12 months, 18 months. Two things. One is you start to see a lot of real world tokens with real world yield, real world income, real world revenues competing against crypto yield products. And that's not a good competition. That's a tough one for crypto yield products.
Yeah.
Two, I think stable coins, Simon and Eddie, we're going to do some good stable coins that will also interact well with CBDC. That may be 18, 24 months, God knows, but the interplay between CBDC and stablecoin is going to be so important. Probably less so for capital market, my personal view. It's more relevant for trade finance. And trade finance volume is huge. And that's probably where we start to have a probably ballistic growth in exponential growth in size, which we're yet to see.
Wonderful. Ladies and gentlemen, please join me in thanking our amazing panel.
Always a lot of fun listening to people talk about all the perspectives in the space. There's just so much going on. So next, speaking of so much going on, next we have a panel discussion on BTC-Fi, tapping into a $1 trillion opportunity that's going to be moderated by Johan Eid from Chainlink Labs. So let's welcome the entire panel.
Hello, everyone. Thank you all for being here. So the BTC-Fi space is a huge opportunity for the space. Imagine we can unlock $1.5 trillion in Bitcoin and make this value flow into DeFi. That's what these pioneers I have here on this panel are working on today. So if you would like to all introduce yourselves and tell us a bit more about what you're working on at this point.
Sure, I can go first. Good to meet you guys. My name is Dae Lee. I'm with DLC BTC. I'm focusing on wrapping Bitcoin using your self-custody wallet. We face institutional clients all over the world, and we are using technology called Taproot and discrete log contract to wrap your own BTC.
Hi, everyone. I'm Kyle. I represent as Executive Director the Stacks Asia Foundation. That is for the Stacks blockchain. For those who may not be aware, we were one of the original Bitcoin layers and the very first to bring programmability and smart contracts to Bitcoin. And as of yesterday, we became the very fastest Bitcoin layer to exist within the Bitcoin ecosystem, bringing transaction speeds from over 10 plus minutes down to sub-seconds as well. I'm also an advising partner to Bitcoin Frontier Fund, who continues to invest and be one of the largest investors in building on Bitcoin-based projects. Thank you.
Nice to meet you guys. Matt Donovan, head of BD at Lombard. Lombard is the top Bitcoin liquid staking protocol by both TVL and DeFi liquidity. We have a flagship product, LBTC. This is liquid Bitcoin. It is a tokenized representation of BTC that is staked into Babylon. We launched about 2-3 months ago, have around $750 million worth of TVL into the protocol to date. This is all through native Bitcoin, and around 500 million of that has been deployed across DeFi.
Hi, everyone. My name is Jing. I guess firstly, before I go into detail, I'd like to thank our host, Chainlink, today. I think it's been a very, very good event so far. Very, very well ran. So thanks for you guys. Beyond that, I think at Solve, what we're building is the concept of staking abstraction, where we look to bring Bitcoin and Bitcoin holders into the ecosystem. And then from there, how to actually work with them to generate returns and to generate yield. Over the last 6 months to 1 year, I think it's a pretty good product market fit we have found. As of yesterday, I think we are somewhere close to about 1.9 to 2 billion in assets, and definitely hoping to grow further.
Awesome. Thank you, and great to have you all here. Now, I'm very curious to hear from you guys. What do you think has been driving the interest for BTC-Fi? It's a very new industry. So many new projects are currently popping up. You folks are leading the way. What's driving this interest right now? And you guys can go in whichever order you prefer.
Sure, maybe I can go first.
Absolutely.
Yeah, I think ever since BlackRock listed ETF, there's a huge interest in investing in Bitcoin. So I think what it actually did a lot of education to the public, but at the same time, in the digital asset world, people want to do more on DeFi, but the only option they had was using WBTC. But because Bitcoin now has Taproot and other technologies that has been added for the last 3 years, ever since the bear market, so I think there are more options that we can offer as an ecosystem and as Bitcoin ecosystem world. So it just opened up a lot of doors and opportunities. Yeah.
I'll maybe take a step back, provide a little context to maybe how we all got here on stage and why we can talk about this subject. So when we look at the idea and concept of building on Bitcoin, it's easy to understand it in 3 eras. So the first is the first 12 years. That was from the foundation of 2009 all the way to the beginning of 2021. And that was a very foundational first 12 years for Bitcoin as an ecosystem. We saw not only Bitcoin launch, but we also saw the very first NFTs, real world assets, and DeFi when it came to this entire industry that we have of Web3. We also saw the beginnings of Bitcoin layers and what was potential in bringing life to Bitcoin as a network. During that time, you saw a lot of very much excitement around Bitcoin as a store of value and its proof around that as an asset. But then we moved into the second era, and that has been from 2021 all the way till today here in 2024, and that is the experimental era. That is when smart contracts, that is when Bitcoin DeFi, that is when NFTs, marketplaces, e-commerce, and staking, restaking, and all the narratives you're going to hear about today or otherwise you're hearing now. And that's also driven a lot of additional institutional interest, thanks to not only the ETFs, but also the legitimacy that led into this next era we're heading into. And that is actually seeing utility. And that all of these pieces together drive us towards Bitcoin as an asset becoming usable, that it actually has utility on top of it and an ability to earn, borrow, lend, yield, and so much more. So we saw the beginnings of DeFi early in that first era. Ethereum and many other ecosystems brought us what was potential with DeFi summer as Bitcoin itself was going through its experimental phase. And that, along with this institutional capital and the developers and builders that I sit on stage with today, have helped drive us into what now is becoming this $1 trillion opportunity.
Yeah, for me, and maybe I'll just narrow the scope there. For us, it's been Babylon, right? Babylon in the last 2 or 3 months has actually onboarded Bitcoin from a staking standpoint, where 1% of the entire supply of Bitcoin, whether folks know it or not, has actually been staked. So this is actually quite significant, and Lombard comes into play here, where we basically sit on top of Babylon, and we're a nice go-to-market and distribution arm, and really a channel partner for Babylon, where we will continue to enable folks who hold BTC, which has been such an idle asset for the longest time, to now gain actual exposure to the Bitcoin staking rate. I think it's still a bit TBD of what that actually looks like, but in a very short order, we've proved that people want to do something with their Bitcoin. There's, of course, this technical element to this, where there's BitVM and Opcat and other technical innovations that are pushing forward BTC-Fi, but then there are the actual use cases, right? There's staking, there's stable coins, there's payments, there's a number of different types of use cases, but I think overall, all we're really seeing is Bitcoin is moving from this store of value, digital gold, into a number of different use cases, and staking, for at least us, being a main driver of all this interest.
So I think many of the panelists we have brought up many good points. And if we rewind, maybe not as far as Kyle, but like rewind to maybe 6 to 12 months ago, right? Like the first usage of Bitcoin on chain and Bitcoin DeFi really started with your ordinals, your BRC20s, and that's really the first wave. And then as you evolve into Bitcoin layer 2s, you evolve into the various chains, you start to see Bitcoin being a staple in DeFi beyond just WBTC, on how you can actually use it on lending, on staking, on DEXs and everything, right? And that's how we really have been evolving. But then even if we take a step back and look outside crypto, right? Like a lot of the things we're talking about is how to use BTC and crypto and everything within DeFi. But then if you look at it outside, like topics of inflation become very real, where people want to hold many of these assets, right? Why? Because local currencies have issues. They want to hold stable coins, they want to hold Bitcoins. And so if you really look at it beyond just what we are doing and what we're building, like it's a much bigger story, it's a much much bigger use case, and it's a much bigger narrative.
Perfect. I think this all makes a ton of sense. What I can see here is that the journey Bitcoin is on right now is very similar to the journey ETH was on a few years ago. DeFi actually brought utility to ETH, right? Now, if you're holding ETH, you can lend it, you can borrow, you can stake, you can do so many things. I think what you're seeing today with Bitcoin is the start of this. But the great thing is that you can learn from the experiment that the Ethereum ecosystem had, right? The DeFi ecosystem. So now we're going from a place of knowledge instead of going from a place of discovery. So I really look forward to see how this all shapes up. Now, we have two ecosystems today, right? We have the DeFi ecosystem that's mainly built on EVM chains, and we have the Bitcoin ecosystem. What are the key pieces you need of infrastructure in order to connect these two ecosystems together? How do you bridge those two? Very keen to hear your thoughts here, and again, whichever order you prefer.
I actually want to comment on the point you just made is, from a Bitcoin ecosystem side, we're able to look to history to build on top of. And that's something that sometimes maybe we take for granted and or we forget very quickly. Because to Jing's point, the majority of the development and things we're talking about here on stage have publicly been out in the market in less than a year. The amount of development that has happened in 10 months, and I'll be generous and say 12 months, post ordinals, which was almost 2 years ago now, has been faster than we've seen in this entire industry in 15 years. The amount of growth that we've had on the Bitcoin ecosystem side has more than 7x'd year to date. The amount of capital from an asset point that was brought up earlier, Bitcoin's ecosystem, its total worth from a smart contract standpoint, so we'll just sum it up as its TVL, in December of last year was around $300 million. If we look at that today and what is happening in terms of TVL and smart contract activity around the greater Bitcoin ecosystem and layers, you're looking at $2.5 billion. That's a 7x gain that we've seen in just a short amount of time as well. So I think that's something we need to take into account when we look at this ecosystem, and the opportunity is how fast all of this development has come from. And then to your second question, when it comes to bridging these two worlds, we're already seeing that at scale right now. You've got the EVM world, which was able to take a lot of that foundation for Ethereum and just keep pushing it forward, evolve it, if anything. And then you've got some networks that are focusing more on the native side as well. And I think we're going to come to a convergence here in 2025 where those worlds do connect, thanks to some of the efforts on my right here, both with Lombard and with Solve, working with so many of the protocols to help bring them together in one world and not battle against this. Because the one thing at the end of the day, we've got $1.5 trillion of Bitcoin capital sitting out there. We can all fight for it, but right now there is no reason to fight for it. Instead, being able to work together, interoperable, which is at the end of the day what users want. We can talk very technical and speak about our individual ecosystems and protocols, but users from a real world example, it will not matter. They want to be able to move assets from A to B and be able to do C with it. And so right now, there is a lot of development happening separate, and they're slowly starting to converge because at the end of the day, they'll have to in some capacity.
Yeah, look, I think you need institutional grade infrastructure, right? And that's why we're very excited to be partnered with Chainlink across a host of different services, whether that is price feeds, whether that is proof of reserves, whether that is CCIP. If we are going to build this for the long haul, we need really smart and intelligent and established partners. I think Chainlink providing that suite from a platform standpoint is exactly why we've partnered with you guys. Beyond that, from an infrastructure perspective, you need a global approach and a very secure approach from a custody standpoint. And that is something that on the Lombard front, we're continuing to build out day by day. And so those are probably the two main focuses for us. But I think in reality, what continues to excite us is, you're right, there is a playbook that has already been that has already played out in the form of Ethereum staking. You look at Lido, what they've done with STETH. This has become a blue chip DeFi primitive across all of DeFi. If you can do this where you're now considering a 3-4 times size of the asset within Bitcoin and do that across all of DeFi, I think that is quite significant. But you can't do that unless you have a secure and institutional grade approach to all of your infrastructure. And again, which is why we're pretty excited about where we've landed with Chainlink across the suite of services, and along with the branding that comes with that, quite frankly, because there is an element of trust here. And for that reason, we want to be building with the best, both on the DeFi blue chip protocol side of things, as well as access into institutions. We want to be building where the best players are, period, and which is why we're quite happy with where we've landed with Chainlink across the platform.
Thank you. Any thoughts?
Yeah, just to add on the native Bitcoin side, we're using what we call Taproot discrete law contract. It's kind of smart contract feature on Bitcoin. And even though this was added 3 years ago, there weren't too much of utilization of the technology until now. So I think native Bitcoin side, we can explore more. A lot of developers working on Bitcoin network at this time. And I think it's continuously going to evolve. But utilizing native Bitcoin has been a very interesting journey for us.
So I think many of my panelists already brought up many good points. I think where I would like to highlight a few things. Users probably wouldn't pick a chain because it's ETH aligned or because it's Bitcoin aligned, in my view, for majority of the users. They will pick a chain because it's a good user experience. It's easy to access. It's good to use, right? I think those will probably be top of mind. Obviously, security, decentralization, and all this matters. But so, like what Johan said, over time, and what Kyle said as well, over time, a lot of these are going to converge. Less so about whether it's an ETH chain, a BTC chain, a Cosmos chain. It's going to be the chain that users like, right? So, and that's how we really see it. How do you build on the chain? How do you build on DeFi with quality teams, with blue chip teams, and blue chip partners, right? At the end of the day, what we're looking to do is to scale it and to build it and to make it more accessible for everyone.
Perfect. I think this all makes sense. From my point of view, one of the main benefits you have with this BTC-Fi adoption is that we can make it run on standards, because we've seen how Ethereum and the DeFi ecosystem shaped up. We now understand what a token standard can look like. From our point of view, it's very simple. You have 3 steps to a token standard. You need to be able to mint it safely with proof of reserve. You need to be able to get it across any chain you need to access with cross-chain CCIP. And then you need to be able to get it into DeFi through something like data fees. And I think over time, when you look at standards and how an industry can accelerate by building on stable foundation, you cannot underestimate the acceleration you get by building into a standard. So I think that's what we're all doing here, and that's what makes me very excited about the growth of this space. I'm confident that if we build on stable foundation, this space will be billions and billions in the coming months. Now, I have a question which I'm quite curious about here. Bitcoin has shifted vision. I would say at the start of the Bitcoin space, Bitcoin was meant to be digital cash, right? Progressively, it started shifting more towards a vision over digital gold. I think the BTC-Fi space actually has the opportunity to adapt the vision around Bitcoin being used as a financial infrastructure. I'm very keen to understand how you see this vision actually progressing in the future and what role BTC-Fi will play in shaping up this path.
I'll start. Everyone's kind of shifting their eyes towards me. So in terms of that vision shifting from a store of value to a more flourishing financial ecosystem, we've got a few things that have to happen and a few things that are happening. In terms of what is happening right now, that infrastructure has continued to grow and improve. I think we've talked about that at this point. Two, security is something that, or excuse me, standards is something that's being worked on. And to be very clear, and I'll be the bad guy on the stage here. Right now, on the Bitcoin side, we don't have standards yet. Outside of BTC itself, we do not have token standards. We have experiments. As I noted, this development cycle is outside publicly just under a year. There's much more work that has been done, but we're all trying to figure out what will be that standard. And a good example of that is the battle that we saw between Runes and BRC20. And BRC20 in the beginning of this year was going to be the next standard. It was going to rival what was existing in ERC. And then very quickly, Runes was going to come up. And all of a sudden, Runes was going to be it. And very quickly, we went from 1 to 12 to maybe back down to 1 in a very big clouded area of standards. So a lot of this right now is experimentation. But what we're all working up on here, and myself and 2 others, so we're 3 of the 21 different assets that have emerged that are now tokenized Bitcoin, that are allowing Bitcoin to start moving from the L1 onto a layer and into the application side of this ecosystem. That takes things from a store of value to a truly financial ecosystem in some capacity, whether that's DLC BTC, that's SOLV BTC, that's SBTC, or again, 18 other assets. We're starting to see that emerge. That's being accelerated with some of the recent changes with WBTC and its proposals, as we're seeing TBTC and others start to thrive in a way that has usability, that does have use cases, that does have users. But at the end of the day, while this is all being talked about, there's 2 very important things that have to happen for this to even be successful beyond a conversation here on stage. And first and foremost, that's security. From a security standpoint, when it comes to the world of BTC, we have one shot. We cannot have, back to your point about looking at Ethereum and the ecosystem that was, we have one shot. We cannot have what has happened in the past happen again. We cannot see leakage. We cannot see breaks of billions of dollars. Back to the point made around institutional capital. Once institutional capital sees $1 billion lost, the financial ecosystem that we're talking about is done. And so security becomes a very big component of what will be a Bitcoin ecosystem going forward. And the last is mindset. Going from a store of value to a financial ecosystem, that is a mind change that we need to make. Being able to use your BTC, borrow, lend, yield, earn, and engage with it in some way, that is something that 46.5 million unique wallets and individuals that exist today in this ecosystem have to go through. And that's how we go from 46 to 100, and from 100 to 500, and 500 to 1 billion users in this ecosystem.
I mean, I think Kyle brought up many good points. I mean, we have been on many panels together, and I think I share many of our similar thoughts with him. I think at the end of the day, what do you mean by financial infrastructure in this case, right? How do you really get to that point? It's both going to be a use case and both is going to be a vision, right? Like BTC right now and historically has always been an asset you hold in your wallet, you hold in centralized exchanges, and end of story. Now it's about how do you use it beyond that, right? How do you use it in various contracts? How do you use it in various places? Bitcoin largely is a series of trust assumptions right now, right? On-chain, we work with partners like yourself at Chainlink, using either the oracles, using your bridges and stuff. It's all about trust assumptions and who do we want to work with and who do we trust, right? I was looking at the stats yesterday, and funnily enough, I think on the average for CCIP, we're probably more than 50% of your daily bridging volume. And I think what that shows is that our users trust your bridge. Our users trust the CCIP technology, right? And that is a step. That's a trust assumption. But these are many small steps that users need to take, that we need to take to get to the next point. And then increasingly, you start to see Bitcoin and BTC not sitting in your traditional crypto wallets or your crypto holders. You're going to see it in your family offices, your institutions, and increasingly your ETFs. How do you get these assets into the space that we are building? Because you don't want them to stay out there. You want them to get involved. And all these things that we're discussing, those are baby steps to get them here, right? So that's what we are really working towards. That's really the long-term plan.
Yeah, and I think to some degree, the cart is a little bit before the horse with regard to this whole BTC-Fi push. For us, we've found a lot of value in this concept of Bitcoin staking, again, which has been pioneered by Babylon through two different protocols that they've launched, which is the timestamping protocol and the actual staking protocol itself. We've gotten a ton of value out of this. Again, we have proven the fact that people want to do something with their Bitcoin, where we've onboarded about $750 million worth of BTC into Lombard. Again, folks who are minting LBTC, this liquid Bitcoin asset, are deploying that across DeFi, where $500 million worth of capital is deployed across these extended DeFi strategies, where we have 25 plus different integrations that have been stood up. So I think there is a use case here, and for us, that comes in the form of staking. But I do think we need to tread lightly, and we need to be very, we need to move carefully and responsibly. Maybe not all of us have a fiduciary responsibility, but I do think we need to act that way, because I agree. To some extent, we only have one opportunity here, where you're taking the largest crypto asset by market cap far and away and providing more programmable features to that. That comes at a cost. And if you're not doing proper audits, if you don't have things like proof of reserves and very clear security measures as it relates to cross-chain expansion, you're dead on sight. And so for us, what we want to continue to do is align ourselves with those who have a similar mindset, have this institutional grade infrastructure approach to building. And that's exactly what we're doing.
What's really exciting about that too, I mean, you look at Bitcoin right now, $1.5 trillion. All of our efforts and those that are here building on Bitcoin, everything works. We provide utility to Bitcoin today. That means today, $1.5 trillion economy turns on instantly. None of us in this room, audience or on stage, have ever seen that happen instantly. That $1.5 trillion ecosystem turns on, is fully active and ready to go instantly. That is the responsibility and mindset we need to have as builders, and the responsibility that we need to take when we look to how we engage with our users, because that $1.5 trillion economy will hopefully go to 2 trillion, to 5 trillion, to 10 trillion. And that is something we need to be very thoughtful about as well.
But again, I do think it comes down to the use case, right? And in a world where TradFi runs on yield-bearing assets, retail is starting to expect and maybe even start to demand access to yield-bearing assets. This concept of staking is playing out in real time. You're seeing that within Ethereum. You're seeing that within Solana. Van Eck just launched a Solana staking ETN across Europe. This is happening. And so if we can take these concepts that have been playing out across Ethereum, across Solana, across BNB chain, and apply it to Bitcoin, of course, doing it in a fully secured way, this will take time. But the opportunity here is quite massive, and is exactly why we're very comfortable to be in this position across Lombard, where we're pioneering the idea of Bitcoin staking via the likes of Babylon.
Yeah, I mean, I agree with all you guys about building the right infrastructure, having the right custody, and making sure the infrastructure is all set up before everybody jumps in. And also, I think it comes down to education. Like, what risk level are you willing to take on, yield generation opportunities? So I think it's all fine balance of what you're willing to risk and also what you're willing to do.
Okay, this is all super, super exciting. And I do agree with your point around security. Let's say everything works out. Let's say we provide a fully secure standard for BTC-Fi to actually grow. Where do you think this whole industry will be in a year from now?
Yeah, I can go. I think any.
I didn't want to be first.
Yeah, sure. I think
Everyone is too polite on this panel. That's good.
I think a year from now on, any institutions that are heavily invested in ETF or any Bitcoin reserves, just like MicroStrategies, they'll have another opportunity to generate yield, not just holding Bitcoin. That involves a lot of work, compliance, legal, and it's going to take a lot of paperwork to get there. But I'm very hopeful that that's going to happen because we do have a lot of interesting plays that's happening right now, right? when companies are holding Bitcoin as treasury balance, like imagine what else they can do when they're doing that. So I think Bitcoin Fi allows that to happen. In terms of the retail, imagine if you're holding a ledger, like Bitcoin in your ledger, just plug in and generate yield, either using any of these platforms out there. So I think 1 year from now, that's like, I think that benchmark is pretty low, but I'm pretty optimistic that we can do more.
Just want to see two things. I want to see 46.5 million unique wallets, more than double. I want to see us push towards 150 million unique wallets 1 year from now. And second, L1 integrations, that our respected assets and protocols are cross-chain with other L1s, whether that's Aptos, Sui, or others. I want to see all of us being able to support those ecosystems, provide users a way to move and interact with their Bitcoin in the respected ways and ecosystems they choose.
I would say at least 10% of Bitcoin liquidity and market cap has access to DeFi. And on the Lombard front, what we're going to continue to do is provide additional paths to distribution. We have the staking SDK. It's been quite attractive for different wallets, exchanges, UIs, UXs. As I mentioned, we're gearing up for a massive institutional push. So where we'll be in a year exactly, I am not sure. But for us, we're just going to continue to building and partnering with the right folks to make sure that at the end of the day, we're doing this in the most institutional, great approach, because I do agree, if we get this wrong, there's really not too much coming back from this as it relates to all the different things that have gone wrong within crypto. So there's a ton of responsibility to be doing this in the right way and with the right partners.
I think at the end of the day, how you're going to measure success on this thing is really about adoption, right? How do you get more users in? How do you define users? Your mom and pop on the streets, your institutions, your ETFs. I think at the end of the day, every little bit matters, right? It's not about just me playing against you and you playing against me. It's how do you get incremental assets, incremental interest, incremental users in it? I think that's really the benchmark and that's really the goal. From an institutional side, like you said, it's about quality institutional grade assets. From a retail side, it's about how do you make the user experience much easier to get in. Crypto as an asset, crypto as a front end is 10 steps backwards when compared to Web 2. Right? How do you make all these things so much easier for people to use and to get in? I think that's really the next steps for us.
Perfect. Well, I agree with everything here. Thank you very much for this panel. I think it was a very good session. I also want to thank you for the partnership. We're all working together on something that could be the next big unlock for DeFi and for our space. Trillions and trillions of dollars flowing into DeFi through what we're building here. So if we get it right, we could literally change the space in 1 year. Thank you very much, and thank you everyone for coming.
All right, everybody. Now, next up, we have the keynote presentation by Sergey Nazarov. So please, everybody, big round of applause for Sergey.
Hi, everyone. Great to see you over here with us again this year. Excited that we're back together to think about the future of how DeFi and Web3 and TradFi and the capital markets merge together into an internet of contracts. Excited to see everyone so well dressed. Nice shirts. So excited that we're all here together. The fundamental goal that we have here together is to create a standard, and for that standard to create a single Internet of Contracts. That standard needs to work across both the Web3 DeFi world and the TradFi capital markets world, because those are the two worlds that are going to collide and create the big financial economic boom when they become a single global Internet of Contracts. So our fundamental goal is to become that standard. Right now, these two worlds are evolving in two separate ways, the Web3 DeFi world and the TradFi capital markets world. We've already made a lot of progress winning and becoming the standard for Web3 DeFi, powering the majority of it. And now we're making a lot of progress becoming the TradFi capital market standard. The final goal that we want is all of these applications working with each other, agreeing on price, agreeing on how to transact value, agreeing on how the application operates and proves security to each other and counterparties over the Chainlink set of standards. That is our fundamental goal. That is what success looks like, to create the global standard that powers the Internet of Contracts and creates the economic boom that will come from the merging of these two worlds into this large global market. We've been making a lot of progress with the capital markets and TradFi community, in addition to the Web3 community. We have implementations on production for large asset managers. We have multiple collaborations with large financial market infrastructures, and we're in different stages of implementations with some of the biggest banks, financial market infrastructures, and asset managers. So just like we have already successfully as a community made Chainlink a global standard for the Web3 DeFi community, this year we've made a huge amount of progress towards being in the leadership position for creating that standard for the TradFi capital markets community. We've done this by providing a set of services, a set of individual services, data services, proof of reserves, identity, cross-chain, computational services, directly into contracts. But one of the things that we've learned along the way from providing all these services, and Chainlink provides the largest universe of services for all data, connectivity, and does it on a single platform in a way that no other system in the industry, in the blockchain industry, does today. What we've actually learned is that there needs to be a way to weave together all of these services, all of the different blockchains and smart contracts, all the different payment systems into a single unified application. If you look at the history of financial applications, you'll basically see that each economic boom in the financial system is created through the simplification of how to use new technologies. In the 70s, when the first databases appeared, you had the first successful runtime, which was COBOL, simplify interaction with databases, simplify interaction with the first computing systems, successfully creating the first electronic transactions, the first banking transactions in the 70s. This was done by creating a runtime technology, so a low-level computing technology that coordinates various other systems into a single application by running a single piece of code. That is what created the big economic boom from computing in the financial industry. It was COBOL and the COBOL runtime. Then new technologies emerged, new database technologies, the internet and internet protocols, various languages, and financial systems and financial applications had to evolve to interact with that new complexity, with the new databases, the new languages, and the internet. The Java runtime environment, the JRE, is what simplified that in the 90s. By simplifying that in the 90s, it gave rise to web application and online banking, just like COBOL gave rise to ATMs and in-person banking. So if you've ever used an ATM or you've ever gone into a bank and spoken to a teller, at some point you were a user of COBOL code. And if you've ever done online banking or used a web-based payment system, at some point you were interacting with the Java runtime environment. This is the simple truth of the fundamental technologies that defined how the world worked for 20, 30 years. And this is actually the opportunity we have in front of us as all of the world's value migrates into this new blockchain format across hundreds of different chains and across thousands of different Oracle networks. The opportunity really comes along every 20 to 30 years. And it's about unifying all these separate systems into a single application and allowing developers and people building those financial applications not to do that in years or months, but in days and eventually hours. And even if we provide all the best services, all the best data services, all the best identity services, all the best connectivity services, that won't be enough. It'll be very good, and it's what's taken DeFi from sub 100 million to over 200 billion. It's already created its own little mini economic boom in the Web3 world. So we know that that works. The next challenge is how to make a much bigger boom by allowing developers to build applications that are very advanced, very quickly. That is the history of runtime environments and the history of how they have affected the financial system. This is why we're announcing that we are making the Chainlink runtime environment. The Chainlink runtime environment, the CRE, seeks to play the same role that COBOL and JRE played in the previous big financial booms of the 70s and of the 90s. Just like COBOL coordinated the very first databases into the first core banking transactions, and JRE converted modern database technologies and the internet into the first online banking transactions, the CRE, the Chainlink runtime environment, is what is built to coordinate the different blockchain technologies, Oracle networks, and smart contracts into a single unified application. This is the thing that we think is missing from all of our interactions with the largest infrastructures, banks, asset managers. And this is historically what has enabled them to build advanced applications. A single environment where they can go in, use their existing data, their existing systems, together with the new technology. In the past, that was basic databases and then web databases. Now it's blockchains and smart contracts. And nobody is in a better position to simplify that problem. Because to simplify that problem, you both need to provide the services that the smart contracts need, which we obviously do better than any other system in the entire industry and really ever in history so far. And what we've realized from all of our work with these large institutions is that their model of consuming new technology is to have it simplified for them through a runtime environment, through a single computational environment where they can put code to coordinate all of the different systems into a single application. This is how it's worked for 50, 60 years. This is simply the pattern that they want. And if we provide this pattern and the environment to do it together with the services that they need to build the applications, then I genuinely believe that not only will we enable this next economic boom, but we will be at the very epicenter of it. So let's see how this works. Basically, the CRE accepts existing languages, right now Go and TypeScript with other languages to come, which means that you as an engineer can write a workflow, CRE workflow code, that coordinates multiple existing systems, data APIs, payment systems like Swift, computational resources, AI computations, confidential computations, TEs, all these computing resources into a single application. And it can unify all of those existing resources with hundreds of blockchains. So while we already make the services, and we're on track to continue to make all the best services for consuming data, payments, identity by smart contracts, we now need to make that easy to consume and to weave into unified smart contracts, the more advanced version of smart contracts. This takes taking the existing systems, data, payments, and compute, and merging it together with blockchains across hundreds of chains. And there has to be an environment that does that coordination. There has to be a place that runs the computation to manage the app, to manage the smart contract across multiple places. That's basically what we are now announcing into early access. And it's what results in a kind of unified smart contract model where you can still run a primary smart contract on a chain like Ethereum, but then that smart contract through the workflow code is unified with all data, all payments, all other chains into a single application. So your interaction with your systems, your interaction with data, your interaction with payments is simplified, just like COBOL and the Java runtime environment simplified that interaction in previous big financial booms and enabled that level of simplification. This is now going into early access sign-up, and it's something that we are planning to release more generally in 2025 after all of the relevant audits and security reviews are completed. The CRE is also something that we've started to implement with certain select key user groups that can benefit immediately from the simplification of a lot of complexity into a single unified application and smart contract that functions across multiple chains, but is administered by a single piece of code. The demo that was given recently at Sibos is running on the CRE. So the demonstration that was given last week at Sibos of using the Swift network is actually already running on the CRE. This is the diagram for what we were saying we were going to build with Swift a year ago. This is a diagram of the second pilot, where essentially Swift messages and blockchain events become interchangeable, both for triggering blockchain events and for payments, basically making Swift systems extremely usable for interacting with blockchains as an interface and as a payment resource. So that's a very complicated problem, and it's a problem that we've been working on for years, and it's very complicated to solve. But when we applied the CRE to solving the problem, we were able to solve it much faster with a fraction of the technical resources by writing a single piece of Go code that coordinated the Swift network against multiple blockchains. And the speed and quality at which we were able to do this was, for me personally, quite shocking. Because for the 7+ years I've been working on getting Swift messages to interact properly with different blockchains, it's a complicated process. And the CRE made it genuinely simple so that a small amount of engineering resources could coordinate one complicated system with multiple other blockchains. The flow that we demonstrated last week in Sibos to the financial community, which was extremely well received, was the ability for Swift messages to coordinate an agreement, for that coordinated agreement to then result in an on-chain event in the form of locking an asset in the anticipation of a payment, that locking of an asset to trigger a payment flow within the Swift network, so a real payment transaction would happen, and that payment transaction using Swift messages could then be converted to a blockchain event, and using actual Swift messages in the formatting that they use, and then that blockchain event would unlock the asset on the first chain and transfer it across chains to the other chains. So this is much more real than things have ever been with the interaction of blockchains and a very complex system like Swift. And the Go code that operates this was written by a handful of engineers pretty quickly. That, to me, is very impressive because I actually know this problem, I know its complexity, I know how many things would need to be coordinated and managed securely. And not only was that complexity simplified for one chain, but using CCIP, it was simplified across chains. And so now that piece of Go code running in the Chainlink runtime environment simplifies this immensely complicated problem with the real types of messages for blockchains in anticipation of a state where you would actually be on production. From what I can tell, that's a really, really big step forward. And we've gotten a lot of interest from the Swift and the capital markets community about this flow and implementing it. But the really exciting thing for me is once they understand how efficient it will be for them to implement in the computational model that they are already used to. Because once again, our goal is to create a standard. And the goal is only achieved when people adopt a standard, and to adopt it, it needs to be simple and to provide a lot of value. The services, the cross-chain services, the data services, the identity services provide a lot of value. The hundreds of blockchains where there's more and more money for people to transact on provide a lot of value. The challenge is now to take all of that value and make it very simple to interact with and build applications around. So I'm very excited that we made all of this progress. A lot of it is thanks to our new chief architect, Uri, who will be up on stage in a few minutes to describe in more detail how the CRE works, how it actually operates, and the key technical assumptions that it makes. It's very exciting, and it's something that I think is going to take the whole Chainlink community and what developers are able to build within Chainlink through workflow code, essentially defining their application in that way from the beginning to a whole next level. So excited to hear what Uri has to tell all of us, but I know it's really great and it'll be very interesting. Uri also has a very storied history in creating great open source standards that already power a lot of the financial system. He was previously the CTO of MuleSoft, which is a very widely adopted way of dealing with APIs in the financial industry. The next key problem that we've clearly seen from the capital markets and the TradFi industry is privacy. If you don't create privacy for transactions, for a group of people and a group of transactions that are already built with privacy today, you're basically not going to do transactions. If there isn't privacy for all kinds of critical parts of the transaction, you will not get to the point of real global adoption by the capital markets community. This is why we've started to release tools and services like the Blockchain Privacy Manager, which is a tool to manage privacy across various chains by defining what information can and can't leave a chain. And then we ourselves have applied that tool to CCIP to create privacy for CCIP transactions, creating the first CCIP private transactions. These CCIP private transactions are very unique and valuable because they maintain a previously unreached level of privacy for an institutional transaction. And that new level of privacy makes that group very comfortable, or much more comfortable, in transmitting value in the blockchain format. You'll hear in a few minutes from Anurag, who is the product lead for digital assets at ANZ, a trillion asset under management bank, where he'll describe his own views as a consumer and user of these technologies, both of them. And I think you'll see that the ability to provide privacy is quite valuable. And just to be super clear, Anurag is a product leader in an institution with 1 trillion assets under management. 3 of these institutions add up to more than the total cryptocurrency industry. And there are thousands of these institutions. So what we're really looking at is making people like Anurag able to make financial applications that flow that value into our industry to the benefit of our industry's growth and success. That is the economic boom that us solving these problems and us creating these standards will successfully create. That is what we are doing here. And so I'm excited for you to hear Anurag's view and the value he sees in these technologies. What Anurag and other product leaders and engineering leaders like him should experience in the TradFi capital markets community is the ability to easily inject any data they want into a blockchain, the ability for the privacy of their transactions to be managed to the level that they expect from transactions generally, and for those transactions, smart contracts, blockchains, to be synchronized with their existing systems. If these 3 problems are solved, then they are more than happy to flow hundreds of billions, eventually trillions of dollars into the blockchain industry. If they remain unsolved, then that value will not flow into our industry. So our goal is to solve these problems, to flow that value into our industry and take it to a new, more serious, larger level, creating the economic boom that will go on to define it. The need for cross-chain, I think at this point is obvious, because without cross-chain, you can't do transactions for value stuck in other chains. And then the conclusion of those transactions also requires data, privacy, and synchronization with existing systems and standards like SWIFT. We've already done an amazing job as a community powering DeFi, powering the best DeFi protocols, keeping them secure for many years, processing trillions of dollars in transaction value successfully. That is amazing. And we're going to continue to do that. And we're going to continue to improve the technology that does that to create a standard there. But I am convinced that the DeFi community will, and already does, see the TradFi community as their biggest user base. If that is true, which it is, from like the hundreds of meetings that we've had at this point with both of those communities, it's pretty clear that the valuable tool set and the valuable set of standards is the tool set and standards that unify these 2 groups into a functioning market which means you need to meet the requirements of both groups. You need to make them both able to transact with each other within the group and then between groups. That is what we're doing at this point increasingly successfully, which I'm personally very proud of. The other aspect of privacy is data privacy. After many years and lots of conversations with many teams that value data privacy, the DECO sandbox is being released here at SmartCon for public consumption. The DECO sandbox basically allows zero-knowledge proofs to be generated about any piece of data, identity data, proof of funds, proof of anything. And it's being released in a format where any developer can go and start utilizing it to apply zero-knowledge proofs to any API and to prove things about the data from that API in a way that keeps the data private, but allows the data to be used on a chain. That's a very clear example of a problem that wasn't solved. So in the past, if you wanted to put identity data on a chain, you were stuck either revealing the identity data, which was completely unacceptable for most identity systems, or you don't put the identity data, in which case you don't have identity, which is a hard requirement for many transactions. Many transactions can't happen without identity. It's not the DeFi Web3 world where you can be anonymous and pseudonymous. And just to be super duper clear, while the Web3 DeFi world is an amazing place that I'm extremely grateful and happy to be a part of, the way it's going to grow is all the money from the other place coming into it. So the challenge now is not just making Web3 and DeFi work, it's getting the value from this other place to flow in there in a simplified, unified way. DECO is a great example of this. I encourage you to try it if you're a developer, see how it works. We're excited to get your feedback. If you're in the institutional world and you have identity problems, you have proof of funds problems, you have sanction screening problems, you have any problem where you're trying to prove something to a contract, to a smart contract, but you want to keep the original data private, that is now a solved problem for you. And if that was a blocker for you to get a contract into production in order to get value from your clients and your systems onto a blockchain, that problem is now solved. I encourage everybody to go see Lorenz's talk tomorrow. Lorenz will give a very exciting and interesting presentation about how this works in more detail and walk everyone through how they can use this exciting system and service, which is now, after many years of research, security analysis, development, and conversation with users, is going into a state where it's becoming usable and kind of testable by different groups so that they can start implementing it. So that's another very exciting development. So far, the Chainlink community has enabled over $16 trillion worth of transaction value. That's very impressive. But the majority of that has come from the DeFi community. I personally think the DeFi community in and of itself can generate much more value than this. But it will need the value from this other community, the existing capital markets and TradFi community, in order to do that. The existing Chainlink system has also delivered the most messages, the most verified messages of any system, whether that's messages for cross-chain, data, all of these different resources. If you add all those up, you get to the most verified messages of any system that has been securely putting information and messages on chain. So I think we've hit a kind of critical inflection point where we can continue to make the Web3 DeFi industry successful. But really what we need to do is expand the market by merging that industry with the existing capital markets industry in an efficient way. Our data adoption in the DeFi Web3 industry remains very high, with the top protocols relying on Chainlink data feeds. And the proof of reserves category of data that is now basically becoming a standard for how to define reliable RWAs and reliable stablecoins and reliable commodity coins is being rapidly adopted. So just like Chainlink made a data feed standard for price and market data, it is now very quickly creating the standard for proof of reserves as a critical component of a reliable RWA. And it will be a critical component of an RWA in public chains, in private chains, and it will be a critical component for transactions between those two places, such that if you have a stable coin, a commodity coin, or an RWA, issued in either of those places, the Web3 community or the TradFi community, and if it doesn't have sufficient levels of proof of reserve, then it won't be accepted in either community. Just like people don't like to put value in protocols that aren't operated by secure Chainlink data feeds. So we are successfully creating more and more data standards based on security that define whether users will or will not put their value into a smart contract. That is a very big deal, because if you define the standards that determine whether users do or do not put value into a smart contract, then you are on track to define how smart contracts are built, which is, once again, our fundamental goal. One of the things you'll hear about today, as well, is the Smart Data Standard, which is an expansion of the types and amounts of data feeds that are available for what is called asset servicing. This includes NAV data, yield amounts, AUM, all kinds of pieces of data that we're already serving both to the Web3 DeFi community and live in production on chain to large institutional managers like Fidelity smart contracts live in production. So the Smart Data Standard is an expansion of proof of reserves into more types of data, and it gives rise to what we call smart assets, which are assets that are properly informed and controlled by highly reliable data. I encourage you to listen to Gando's talk, which is coming up in a few minutes after mine, where he and some of the other product managers working on the different aspects of smart data, smart assets, proof of reserves, and other aspects of the Chainlink data protocol will give you a very thoughtful update about how putting more reliable data on chain will lead to these smart assets, and how this smart data standard is emerging beyond market prices and proof of reserves into many other types of data. This is a good example of a standard that counterparties need in order to transact, that we have now expanded past one or two pieces of data and are now expanding into many pieces of data, so that the way to create assets is based on using this highly reliable Chainlink-powered, signed, and verified data. And we do continue to see the user bases of those applications choosing whether or not to use the application based on the reliability created by the various guarantees of these systems. So it's very exciting to see Chainlink's important role in defining what secure and reliable means. CCIP, the cross-chain interoperability protocol, is something that is continuing to gain very rapid adoption for, I would say, the right reasons. Generally, what we've started to see is that the security properties of CCIP are finally starting to be valued by the market, and the advanced features like programmable token transfers are also starting to become more and more valued. Here, we're releasing or talking about the release, like a couple of days or something, about the self-serve deployment capability of CCIP, and putting into private beta the token attestation feature that allows the creator of a token to participate in its security by operating a separate service that views and signs or doesn't sign transactions, letting them contribute to the security of their token. The other key feature that I've always been extremely excited about is programmable token transfers. And programmable token transfers is something that's also getting wide adoption. The attestation service already has initial users going live with it. And it's something that I think will expand the security guarantees of CCIP, which is once again the focus of how the Chainlink community should be building things, providing the greatest amount of security and reliability for all of these services. One of the most exciting pieces of news for CCIP is its adoption by Lido as a one-step staking solution for multiple chains in an efficient, reliable way using the programmable token transfers feature. The programmable token transfers feature basically simplifies an application's interaction across chains down to a single transaction that includes the value and the critical information of the transaction as a set of instructions that are executed on the target chain. It's really one of the most exciting features that I think the market is now starting to appreciate and implement. And when you combine it with the security of CCIP, I think it puts CCIP far above any other cross-chain system. And that's what we're starting to see validated by adoption by some of the most security-sensitive users like Lido. We're also seeing CCIP get adopted as the canonical bridge solution of multiple chains. A canonical bridge is the official native bridge of that chain. And because there weren't reliable bridge technologies, blockchains basically built their own bridges. They created native bridges with long delays, 7-day settlement times, and they had to invest a lot of value and money and resources into building their own official bridge. Now we see a very clear trend of very security sensitive blockchains evaluating all the different bridge solutions and giving the responsibility of being the canonical native bridge of that chain to CCIP. And there's a greater and greater amount of chains making this decision. And that decision is once again based on the evaluation of CCIP's security, which is what it was built for. This is generally the other very big pattern, that when you build services in a very security sensitive space, like the blockchain space, if you build the most secure service, you have a huge advantage in getting adoption. This is the experience we had with data feeds, where there were different providers of data feeds, and the market kind of chose Chainlink as the standard because of its security guarantees. This is the fundamental thesis of the Chainlink services. Being able to take those very secure services and compose them together with all the different chains into a single application through one piece of code written in a language that developers already know about is really the next stage of both Chainlink's evolution and, together with Chainlink, the industry's evolution. So I think all of these folks that chose CCIP as the canonical bridge will see their canonical bridge get more and more usage through the Chainlink runtime environment. And there will be a positive virtual cycle there where the more Chainlink runtime environment adoption there is, the more users there are that can easily use your bridge because they're on the Chainlink runtime environment computing standard and they're writing their smart contract coordination in the workflow code in their preferred language. Go, TypeScript, soon other languages that are under consideration are things like Rust and others. What the adoption of CCIP by Lido is really starting to create is the creation of a composability layer for these liquid staking tokens over CCIP. And that's only possible because of the combination of all the different CCIP services and the advanced features inside of CCIP like programmable token transfers. The other exciting development around CCIP is cross-chain billing. There's now a contract and audit for a billing mechanism and a reserve contract that is able to take payment in various tokens. What this does is it simplifies the payment for a Chainlink service by reducing friction, because the fundamental goal of the system is to get usage and payment in whatever format people want to pay in. It then converts those payments into Link tokens that are then paid to the node operators and service providers that provide the security to create the service, the protocol, and in this case, the CCIP services. Every different part of the Chainlink ecosystem and set of services is actually evolving in different markets that eventually get interconnected through the services. But data feed, streams, CCIP, automation, CRE eventually will all evolve at their own speed and in their own markets. Right now, the goal of the vast majority of those services and markets should be market adoption, should be optimizing for being a standard by providing a very high quality, very secure service at a very attractive price, while conditioning the developers of smart contracts to build them in a way where they're integrating billing and they're getting used to paying for that service through on-chain transactions. But the fundamental goal of CCIP and the other services that I'll show you that are also going to be implementing their own unified billing capabilities is still adoption. Because the goal that we have is to create a standard. And the way you create a standard is you provide quality and price over time to become a standard that is used to being paid for in some way. And then as the standard grows and becomes ubiquitous, from that volume and that standard position, that is where the value eventually flows in the form of revenue, and in this case gets converted into Link and paid to the service providers. You can learn more about CCIP, the billing system, and all these other nuances in the presentation tomorrow from Rahul. He'll have a lot to say about how CCIP is evolving, how the billing standard applies to its evolution, and how it's basically going to be providing even more features, self-service tokens, and all of these more advanced capabilities. We're also seeing a lot of adoption in the low latency data space. The data stream service is now reliably converting users away from competing services and away from home-baked solutions. We ourselves have done a lot of testing and a lot of analysis on the latency of the data stream service and its reliability and uptime. And from our analysis, what we can see is that it's the most reliable and fastest low latency data service there is in the industry. And when we show this analysis and explain it to the industry, they switch. So basically, if you can make the most reliable and secure service that provides the most critical feature, in this case, low latency data, you can be a standard and convert that entire category of data users, in this case, perp dexes, to being your user base. We're continuing to see existing users launch with data streams on other chains, and users on those chains, including Solana and others, work on switching their system over to streams. That's because at this point, from our analysis, it has become the best product on multiple dimensions. It will also be implementing a unified billing set of contracts. It'll be implementing it at its own pace for its own market under its own set of conditions. It'll be looking to convert the revenue from that into Link tokens at some point relative to its own economic development at its own speed. And in my opinion, it should focus on adoption and market share, which means that it should implement the billing system and it should condition the market to pay for services, but it should optimize for adoption and market share because that's what creates a standard. Because what we're trying to do is we're trying to get everybody speaking the same language. We're trying to get everybody who's used to using perp dexes or used to using cross-chain systems to simply view CCIP or streams as the secure standard. And that's what's going to lead to long-term adoption, market share, and eventually, as the industry grows, volume. I encourage you to hear Raul tomorrow, where he will describe in more detail how Streams is developing, how users are converting over from other services and their own home-baked solutions, and how the security guarantees and other properties of Streams are allowing it to win over users consistently. At this point, we are consistently seeing one after another perp dex user shut down their existing solution, switch from some other solution over to Streams, similarly to what we saw on the data feeds side of Chainlink's adoption in the early to mid period of its growth. So that's another example of a data standard we're creating, where we've successfully, as a community, made a more secure, more reliable service. And it's now getting adopted where the market share numbers are slowly growing and going more and more in its favor. So our fundamental goal as a group is to create this standard, to propagate it across the Web3 DeFi world, to propagate it across the TradFi capital markets world, to get everybody speaking the same language, whether that's about data, connectivity, identity, and in the form of CRE, how to make all of that work together in a reliable way where the application that it creates can be trusted. If we do that successfully, I really do think we can be the ones that not only create the next economic boom in our industry, but are the group and the set of technologies that power it. The unified smart contract that I'm showing you here is really the way that I believe applications will be built in the smart contract and blockchain industries, because it is really the history of computation. There has to be a system that simplifies all of the interactions between data, payments, identity, various blockchains, confidential computing, AI models. And historically, there has always been a system that emerges that simplifies that complexity and unifies all of those services in a single runtime, in a single computing environment, running a single piece of code. That's the history of financial computing. It's pretty clear to me that even if we generate all the great services, even if we interconnect all the blockchains, there will still be this friction for building these applications. And taking that friction away is extremely important and valuable, because the service and the runtime and the environment where that friction is resolved will be the place that developers code the fundamentals of their application, and it will take them from doing it over the course of months and weeks to days or eventually hours. And very excitingly, in this case, even in languages they already know, like Go, TypeScript, and with other languages under evaluation like Rust, and then others. I think the CRE really is the final piece of the puzzle for us. It's the thing in the system that's going to enable the interconnection of hundreds of Oracle networks, thousands of chains, all the world's data, all the world's payment systems into a single application. And I really do believe that if we're able to pull it off and get it into the hands of the right developers, we already have the services, we already have the integrations with the relevant chains, we're getting the integrations with all the largest existing payment systems, we already have AI working on Oracle networks, confidential computing is entirely possible on Oracle networks in this model. If we can provide all of that through a single service and platform that people can interact with using their existing languages and models for building applications, then I think eventually the vast majority of blockchain-based applications can be built through this standard. What that would result in for all of us is a globally interconnected set of contracts, creating what I call the Internet of Contracts. And while CCIP will be the low-level protocol, and while the Chainlink data standards will be the low-level data protocols, and while they will transmit lots of identity information, they will transmit price information, they will transmit proof of everything else information, once we can coordinate all that information, and once we can coordinate all those connections in a single environment with a single reliable piece of code that can be proven to counterparties as being reliable, that is when I think things will really accelerate for both our industry and for the adoption of the Chainlink standard, partly because the industry will massively grow with a technology like this, in my opinion, and because the technology that lets the industry grow in this way will be at the epicenter of its growth. So this is the very exciting kind of new direction and development that we have, thanks to many of the people that you'll see speaking soon after me. Thank you for your attention, and stay around to hear what they have to say. I'll be on in a few minutes after them to give you some concluding thoughts and statements. It's going to be good. I'm excited. I'm very excited. I'm very jet lagged, but I'm very excited. Great. So what happens now? I get off? Yes? Rory? I got to go. All right. I'll be back. See you soon. I would stick around for all the presentations that these folks are going to make. They'll show you the details.
Thank you, Sergey. All right, everybody. Up next, we have the product keynote with Gondo and Yuri. Please welcome them to the stage.
All right. Fun. Hey, everybody. 777. The Hong Kong dollar is arguably the most successful stablecoin in human history. It's been around since 1983. It's got a market cap of over $2 trillion, and it has never depegged. This is a model of success. It stood the test of time. It's resilient. It's securing trillions of dollars in value. As we look to revolutionize the traditional finance world with on-chain finance, we can take inspiration from the Hong Kong dollar. Because success like this is achievable. You just need a strong foundation. We need a strong foundation to fulfill the potential of this industry so that 5 or 10 years from now, when we look back at what we're building together, we can have the same or even greater level of success as 777. We're lucky to be in an industry that has so much potential. We've been waiting for a catalyst to move us into the mainstream. Just like email kicked off the internet revolution, so now we're seeing tokenization kick off the on-chain financial revolution. Tokenization is the catalyst that's going to take our industry into the mainstream. The WEF estimates almost $900 trillion of assets are going to get tokenized. And as much as 10% of GDP is going to be on blockchains by 2030. And the Bank of New York Mellon estimates 97% of asset managers believe that tokenization is going to revolutionize the asset management industry. The journey has already begun with $170 billion of assets already tokenized across 5 different asset classes. The magnitude of this revolution is like nothing we've seen in financial history. Hundreds of trillions of dollars getting reformatted from an existing technology stack onto a new technology stack. This will include, of course, all of the spot markets of all the major asset classes, as well as their corresponding derivatives markets, which are typically multiples the size of the spot markets. And for those of you in the financial industry, you will know that there's also, besides the big asset classes, there's a very long tail of investment opportunities that are typically bucketed together as alternative investments. These are typically uneconomic to build investment products around, like funds. But one of the promises that's so interesting with tokenization is that it's going to collapse the operational overhead associated with these investment products. And it's going to suddenly make numerous investment assets viable for things like funds. To handle this innovation that will follow will be staggering in terms of its creativity and its magnitude. I mean, look at these numbers. To handle these magnitudes and that velocity, we're going to need infrastructure and applications. That is going to be a requirement if we really want to achieve the success that we really going to get to. It starts with having secure, reliable, and scalable infrastructure that can be resilient to handle these magnitudes. On top of that, we're building financial applications, so things like compliance, verifiability, and privacy cannot be an afterthought. These things have to be integrated from day one. On top of that, you need common standards to enable people to access all of these capabilities in a consistent manner. And last but not least, for developers, you need a great user experience and great tooling so that they can focus on creativity and innovating and access all of these capabilities in an easy fashion. That's what a great foundation looks like. At Chainlink, we've known this for years now, and we've been at it since 2019. Some of you may remember back in the day when blockchains first kicked off, smart contracts were not very functional. They were disconnected from the real world. All this changed in 2019 when we launched our price feeds on Ethereum mainnet. And suddenly, on-chain contracts and assets and the off-chain world became connected. And there was a burst of innovation, and billions of dollars came into the space. There was an explosion in activity that culminated with the DeFi summer of 2020. 5 years later, we're still at it, and we've become the premier infrastructure service provider for Web3. We've expanded the scope of our products and services to meet the growing complexity and growing demand of the DeFi space. Today, Chainlink offers data services, cross-chain interoperability, and compute services that are used by thousands of developers and projects out there, including some of you here. We've, on aggregate, published over 15 billion verified messages on-chain across our services across multiple blockchains. And we've enabled over $16 trillion of value. This is the scale we're operating at. The great thing about the foundation we've built is that it's already enabling the adoption journey for financial market infrastructures, banks, and asset managers. Fidelity International and Sygnum Bank have partnered with us to bring on-chain data for NAV for their tokenized fund. Euroclear, SWIFT, and 6 other institutions worked with us to showcase how AI and blockchain oracles can be combined to revolutionize how corporate actions are managed. The DTCC, along with 10 other institutions, worked with us to bring NAV data on-chain for tokenized assets. And of course, Swift and Chainlink, as you heard earlier, are working on a joint project aimed at facilitating interbank transactions using the Swift network, Chainlink CCIP, and blockchains. The capital markets are ready, and we're excited for the work ahead with them over the coming months. This Chainlink platform is the only platform capable of providing end-to-end blockchain-enabled workflows. Our products are secure and reliable and interoperate seamlessly between Web 2 systems and the Web 3 ecosystem. This is the foundation you need to realize the potential of this technology to help you achieve the level of success of 777. But our platform isn't static. We keep evolving it and adding more capabilities to it so it can be even more useful for you. Let's take a look at some of these new additions that I think you're going to really like. As you heard, DECO, privacy and compliance cannot be an afterthought. That's why we're launching a suite of solutions to address data and privacy. It's a zero-knowledge Oracle technology for authenticating data privately, a way of verifying sensitive information without revealing the underlying data. This sandbox is going to be pre-configured for use cases around identity, proof of funds, and sanction screening. Join Lawrence tomorrow for this presentation. It's going to be really interesting. But of course, what we're doing with DECO is only one of the ways that we're using data to enable the adoption of tokenized assets. And I want to invite on stage Ray Zhang to tell you more about some of the other things we're doing on the data side. Thank you so much.
Our vision for Chainlink data is to be the essential infrastructure for the tokenized economy. And we believe this tokenized economy will be underpinned by data-rich, data-powered smart assets. Now, you've heard Gando talk about how tokenization will be a massive game changer for on-chain finance. But the next generation of these smart assets, they need smarter services, they need new types of data, and they need scalable infrastructure in order to hit the escape velocity that's needed for hypergrowth. Now, Chainlink is on the front lines here, working in lockstep with asset issuers, builders, to solve some of the key data challenges around tokenization. The problems we're tackling today includes standardizing data formats and structures to support smart contract workflows, expanding the range and the depth of asset servicing data, as well as scaling data delivery of complex financial data from on-chain to cross-chain. Tokenized real-world assets in particular, they need more than just the price data and asset transparency that we provide today. Now, to transform static on-chain representations of real-world assets into a dynamic smart asset, we need TradFi-grade asset servicing infrastructure that delivers high-quality data in a secure, scalable, and reliable manner. Now, Chainlink is uniquely positioned to bring this to bear. Today, I'm excited to share with all of you the new gold standard for tokenized asset servicing. Introducing Smart Data. Smart Data is Chainlink's new suite of data asset services for tokenized real-world assets. Smart Data embodies Chainlink's vision to be the essential infrastructure bridging TradFi and DeFi. With Smart Data, your tokenized assets will have access to real-time asset servicing data delivered directly from the canonical source to the blockchain. Our current data integrations include reserve verification data through our flagship Proof of Reserve product, as well as asset under management, net asset value, and other collateral information. We're also rapidly expanding our asset data coverage to meet your tokenization needs. Smart data transforms your tokenized assets into highly programmable on-chain smart assets and offers robust minting protection powered by proof of reserves. Just as the sound policies of Hong Kong anchor the Hong Kong dollar's 777 currency peg, smart data maintains a golden record of the critical data that you need to anchor your tokenized assets, making it smarter to use and safer to manage. And we're already partnering, as you can see here, with leading asset managers and token issuers across a wide range of RWA asset classes to integrate with smart data today. Reach out to me or any of our Chainlink associates at SmartCon if you're interested to learn more about smart data and to build smarter tokenized assets with us. Now, finally, I want to share a sneak preview of something else that we've been cooking in the kitchen. Beyond data accessibility, we think asset discovery can be much more streamlined to help investors navigate the expanding universe of tokenized assets. And this is our vision, a new tokenized assets data hub. This will be built on our data.chain.link data product portal. Data Hub will be your one-stop shop to search, to view, and to find comprehensive information on tokenized assets, such as the reserve details, the token issuers, asset composition, and much more. This will position Chainlink at the epicenter of tokenized asset discoverability, making information much more accessible throughout the on-chain economy. Now, if you would like to find out more about all the exciting data products that we're building and market trends that are transforming on-chain finance, come to one of our sessions here. We'll be sharing more in all of these deep dives. And now I'm pleased to bring on Anurag from ANZ Bank, a valuable Chainlink partner, to share about enhancing transaction privacy through CCIP. Thank you.
Big thank you to the Chainlink community for inviting us to be here. I just want to start with a quick recap. Last year, when we were at SmartCon, we presented how customer on one chain can purchase an asset on the other chain and get it delivered to them in a seamless fashion. It worked perfectly. Small problem. It works perfectly for public assets. What if the assets are private in nature? No solution? Last 1 year, we have been working hard with Chainlink team to solve this problem. The problem is twofold, that if these assets are private, you want to preserve the privacy at the network level and also while they're in transit. So 2 parts, remember that, because at my last slide, I will ask what were the problems. The second challenge we gave ourselves is we wanted to use the same infrastructure of Chainlink oracles so we can solve this problem in a scalable manner. This is a very, very big platform shift. And big platform shifts take time. Not just because it takes time to build things, but the risk which these new platforms present. And to better understand these risks, I said, why not? Let's do a PhD. So what you have on the screen is the mental model which I apply to understand these risks and how we can manage it. This is a diagram from one of my research papers with Dr. Tallis and Dr. Mark Staples. What you're seeing is at very bottom is the network layer where all the nodes exist. Above that is the consensus layer. Above that is the protocol layer. Protocol layer is the most important part for our conversation today. To have a Web3 enabled interoperable solution, you need to have interoperability contract present at the protocol layer. If CCIP contracts are present at the protocol layer, to make sure that privacy is preserved, we have to provide selective access to the Oracle nodes to this contract. Because otherwise, if we give the entire access to the Oracle network to this layer, they can see all the transactions. And guess what? Privacy is important to the network layer. The second part is, if we are able to achieve the selective privacy, What about privacy in transit? That was the second problem, because Oracle Network, all the data goes through, is publicly available. So these two are the big risk surface area which we wanted to solve. Now a big drum roll. How did we solve it? Excited to see? Raise your hands. Yeah, cool. We solve it using CCIP private transactions. I will quickly walk you through how it works. When a sender wants to send value and data across chain, first step which happens is CCIP contracts encrypts both data and the value, which ensures the problem of privacy in transit. Because if it is encrypted, Oracle node operators will not able to see how much value is going through the chain and what data it corresponds to. Example, if you are subscribing for a debt issuance, people will not able to see what is the price which you have, which you are subscribing for which particular issuance. So that is protected. Other thing is how we ensure that Oracle Network is not able to see the entire activity of the protocol layer. We achieve with Privacy Manager. Privacy Manager ensures that the Oracle Network only see the activity which is associated with the CCIP contracts for the events which are going on these chains. Now, it may sound like I'm just talking about private chains. No. The other big thing which is solved is, imagine you have a private chain which want to interoperate with all the public chains. Now, to do that, the most important thing is privacy at the network level. If there's a private chain which has the Privacy Manager enabled, what they will able to do is they will able to interoperate today, for example, with 17 public chains which has CCIP contracts deploy on them. All you have to do is, I want to send my tokens to this chain address, it's called chain selector, to be very specific. Now, this is not the only risk mitigant which exists here. From institutional perspective, we want to make sure that only the right tokens reaches the right place at the right volume. So all those features are also, with this deployment, we are able to take advantage of. Given we have done this work, we aim to focus on now making our customers transact with digital asset, doesn't matter where they're present, public chain or private chain. Hope you found it useful, and I will do a survey now. Thank you all.
Thank you, Anurag. I'm excited to introduce CCIP v1.5, the next major version release for CCIP. With v1.5, we're introducing self-serve token onboarding. This means that for the first time, token developers can permissionlessly manage and onboard their tokens. Let's go into a bit more detail as to what that actually means. First of all, token developers can deploy cross-chain tokens entirely on their own. This applies for launching new tokens, as well as taking existing tokens cross-chain using CCIP. Token developers can also manage cross-chain tokens. If you've ever deployed a token to a large number of chains, you know just how meticulous it can be to manage all that cross-chain state. We wanted to build a single, simple, and streamlined interface to manage all those settings. To that effect, we're launching the Token Manager. Using the Token Manager, token developers can configure key parameters such as token pool rate limits on all chains. Token developers can also configure their token to grow to additional networks as CCIP grows to additional networks. I'm excited to say that self-serve onboarding launches on testnet starting today. The docs are already live, and if you're interested to learn more, I recommend joining the developer bootcamps. Mainnet is launching soon over the next few weeks, and along with that will come the launch of the Token Manager interface. Next up, we're introducing Token Developer Attestation. For the first time, token developers can participate in the network security of CCIP. They can do this by independently attesting that tokens were burned on the source chain before CCIP can mint them on the destination. We're proud to say that we're launching this in partnership with Lombard and their LBTC token. As you can see in the diagram above, Lombard is providing an independent third-party attestation API that'll confirm that the LBTC tokens were indeed burned on source before CCIP can mint them via the off-ramp on the destination. Though this is not part of the self-serve capabilities, I am excited to say that it's launching in private beta starting today. If you're interested in learning more, please reach out to our go-to-market team. With all of these exciting new capabilities for CCIP tokens, we thought we'd take the opportunity to wrap all of this into a single standard that we now call cross-chain tokens. By leveraging cross-chain tokens, developers will benefit from all the great capabilities that CCIP already has, including programmatic token transfers and our defense-in-depth security model. Beyond that, developers will continue to benefit from the new features that we release, including the self-serve deployments, token developer attestations, and more in the future. To learn more about cross-chain tokens, I'd recommend joining the CCIP deep dive that's scheduled for tomorrow. Next up, I'd like to welcome a very special guest, Yakov from Lido, who's going to be speaking about a really great CCIP use case. Thank you.
All right. Hello, everybody. Once again, my name is Yakov. I'm Master of DeFi, contributor to Lido DAO. And today I'm very excited to be announcing a fruit of collaboration between Chainlink and Lido, built on top of Chainlink CCIP technology. It's essentially a way for users on L2s to stake to Lido without going manually to Ethereum mainnet, which means that Lido staking finally goes cross-chain with CCIP. So what it is, how it works, it's very simple. So for users, the idea is to replicate the user experience that is available on Ethereum mainnet, which means that end user is now on an L2, initially either on Arbitrum, Optimism, or Base, holds native ETH or wrapped ETH, and is able to deposit it to direct staking protocol. Once the deposit happens, that deposit gets shuttled using CCIP back to Ethereum mainnet, gets staked to Lido. The artifact is wrap staked ETH, which then gets routed using a canonical or native L2 bridge back to the destination network and to the end user. It's really important to use the native bridge to avoid liquidity fragmentation. So that's one way of operating it. As you might have noticed, there is a need for every transaction to do this shuttle process, which takes some time, depending on the network. So there is another way which provides similar user experience, but is much faster. Again, user is able to deposit ETH or wrapped ETH, but this time, depending on the size of the deposit, he's tapping into a local liquidity pool that already holds some amount of wrap staked ETH. This liquidity pool also contains a rate between wrap staked ETH and ETH that is reflected from Ethereum mainnet. And if the size of the liquidity pool is sufficient to satisfy this deposit, then what happens is that deposit actually gets swapped inside the liquidity pool, and user gets wrap staked ETH immediately in a single transaction in a single block. But then, since there is a liquidity pool, the pool gets disbalanced. There will be more ETH coming in and more wrap staked ETH coming out. So what happens then? The flow that I just mentioned in the slide before will actually be used as automation in this flow. So there will be automation process that will rebalance the pool periodically. When there will be some amount of ETH above threshold, automation will trigger, and this ETH will be sent using Chainlink CCIP back to Ethereum mainnet, staked into Lido, and in this case, not sent to the end user, but end user in this case will be a liquidity pool. And the pool will get restored, replenished. So who is this even for? Why do we need it? Why not just buying rep-staked ETH of decentralized exchanges that are already available and there is a pretty decent amount of liquidity? Well, DEXs are good for a lot of use cases, but if you don't want to be exposed to a slippage, if you want to get like a static ratio, or if you just want to use a simple user experience that you also have on Ethereum mainnet, you would want to use something like this. So the target is, there are multiple targets. First, end users, the ones that are using Lido as a staking service and think that this is the best way for them to stake and earn validator rewards. They would be accessing now from L2s without spending too much on gas cost. And the idea is to get direct staking integrated into all of the major access points. So we are talking about wallets, we are talking about custodians, bridges, and staking UIs, and also DEP UIs. Another really, really important aspect that I think it's gonna be displayed even better in the future once everybody starts thinking a bit more, what can we even unlock with something like this? But something that comes to mind right now is, for example, DEX aggregators. So imagine a DEX aggregator on L2. Obviously, it aggregates DEX liquidity. But in most of the cases, if you want to trade, you will not get the same ratio as you would be getting on Ethereum mainnet. So on Ethereum mainnet, you have a choice. If the price on DEX is not good, you go to Lido and stake. But there is a caveat, there is a gas cost. Well, on L2, this gas cost is very minimal. So in a lot of cases, going to direct staking is gonna be a better option than using a DEX. So what if DEX aggregator integrates direct staking as a route? Even more interesting, on lending markets and strategy vaults for using staked ETH as a collateral to do recursive staking. On L2s, it doesn't scale really well because you have to deposit staked ETH as a collateral, borrow ETH, and then you have to swap it for staked ETH to deposit it again. But now we're replicating the same experience as it's available on Ethereum mainnet, because borrowed ETH can be deposited to direct staking, and this staked ETH gathered from direct staking can then be supplied and looped multiple times until you extract the maximum value from arbitrage. So yeah, that's all for now. Thank you. I'll be around, so if you have any questions, if you want to collaborate, feel free to get to me. And thank you. I'll be now introducing Raul, who is going to be talking about data streams.
So I'll be switching gears a little bit and talking about a different product. We're going from CCIP to data streams. 12 months ago, on this stage, we launched Chainlink data streams. With data feeds, we solved the Oracle problem by bringing data that exists off-chain, on-chain. But it wasn't fast enough. We needed more, we needed it faster, we needed it on more chains. And that's why we originally launched data streams. Now, we've seen the market react, and we've gotten billions and billions of dollars of trading volume and millions of data points added on-chain. But it's time to build a lot more. So I'm very happy to say that we are going to be shipping to 7 chains in 7 weeks. It's time for data streams to go live, to go vertical, and to get into users' hands. We are already live on OPBNB and Sonia Minato, and very soon we are going to launch on Optimism, Scroll, Mantle, and ZK Sync Era. And we are deploying to those chains to support the growing user demand. Users like KiloX on OPBNB, like HoldStation, a build project with billions of dollars of volume on ZK Sync Era, like Syn Futures, Zaros, and many, many others. We know that we're on the right track with data streams because we're seeing users react. And these users need a lot of data, but not just of crypto assets anymore. We're here to bring the off-chain world on-chain, and for that reason, we're also launching RWA feeds, starting with gold, silver, and oil, and 7 G10 currencies. These will be available at extremely low latency and super high accuracy. If you want access to these, please reach out to me. I'll get you set up. I'd love to see what you're going to build. Now, 2 slides ago, I said we are deploying to 7 chains in 7 weeks, but there were only 6 chains there. So I'm very proud to say that we are now live on Solana with Chainlink data streams. This means that instantly available are extremely high accuracy and super low latency prices for any user. It's in early access, so again here, if you want to build something, please come to me, I'll get you set up, or reach out to anybody in the GTM organization. And as we originally launched on Arbitrum with the GMX community, we're doing so again on Solana, with GMX Solana. GMX Solana is a community project run by some of the biggest brains in their community. They took the battle-tested code of GMX v2, translated it into Rust, and are deploying it to Solana to get that battle-tested, reliable architecture together with the unique user experience of Solana. And I'm very excited to see them go live in a little bit. Now, I told you what we've done over the last 12 months and what we'll be doing over the next 7 weeks, but I also want to give you a little bit of a peek in the kitchen of what we're going to be doing over the next 12 months. The slogan that I like to use for this is any data on any chain at scale. It's not enough to have a little bit of data. We need to get whatever it is that you need, wherever you are, and enormous amounts of it. And I want to take you through 2 architectural changes that we're doing on the engineering side to make that possible. The first is we're going to go to what we call a channel-based architecture. What that means is all the way on the left side, we can get you any input and do any compute on that. If you can find an API for it, we can go and get it. Whether that's off-chain data, whether it's a smart contract value, whether it's a price, we don't mind. We can go and get it for you. Then we update that 4 times per second, and we put it into what we call a stream. And then all the way at the end, you're going to have thousands and thousands of these streams updating at 250 millisecond intervals. That's a lot of data. So how do you make sense of that? You make sense of that by picking and choosing exactly the pieces that you need. Because everybody needs a lot of data, but what you need is unique to your protocol. The second thing that we're going to be doing is enabling all that scale, because I said thousands of feeds. So that means that we need to change up how our DON works in what we call a multi-stream architecture. This means that we found a way to enable our DON to scale by 50x. We're going to go from hundreds of streams to thousands and tens of thousands of streams. What that means is that if you have any unique requirement, you need a TWAP, you need an interest rate, you need whatever it is that you like, you can come to us and we'll help you get it set up. So if you have any data that you want to share with the world, or if you need any data, whatever it may be, please do reach out. I'd love to talk to you. Now, we're doing all of this and we're building all of this for the builders. So I want to bring on stage one of our builders. They've gone live only a couple months ago, but they've done billions and billions of dollars of volume already. And that's Lei, the co-founder of Jojo Exchange.
Yeah, hello.
Welcome, Lei.
Yeah.
You're the co-founder of Jojo Exchange.
Yes.
Now, you guys onboarded only a couple months ago, so I think a lot of people in the Chainlink community are still a little unsure, like, what is Jojo Exchange? Can you tell us a little bit about that?
So Jojo is a decentralized perpetual contract trading platform built on Base. So we now have the leading trading volume on Base. We provide 1,000 times the leverage, multi-assets, collateral, and advanced trading bot. We are building on Base to perform the best trading experience with a secure on-chain settlement.
Got it. And you guys integrated Chainlink data streams only a short while ago. Can you tell me a little bit about what that's done for your exchange?
Yeah, so that really helps us a lot. So after integrating with Chainlink's data stream, we can provide higher maximum leverage for our users, and they are really happy about that. After integrate with Chainlink's data stream, we can perform the Oracle price updates much faster than before.
Got it. And up here on the podium, we see basically a little diagram of what you guys are building with the AI silicon-based exchange.
Yeah.
Can you go into a little depth there?
Yeah, so that's our next step. We are trying to build an AI-based exchange that transforms the control from human team to a complex AI agent system. And it's very crucial to have a high-quality data to feed and train the AI system. So we choose Chainlink because Chainlink's data stream provides the most real-time price with low latency and high quality and high reliability. And to achieve this, we need the support from Chainlink, and we really feel good about it. Our AI agent system will collect all the market data from Chainlink's network, and it generates some of the whys for our traders, like whether you should long or short Bitcoin. And then after one click, the agents will help the user settle all the trades on chain.
Awesome.
Yeah.
And people can sign up on the whitelist there. There's a QR code on the page.
Yeah.
And they can reach out to you.
Cool. Join our whitelist. We will release it just in 1 or 2 messages.
Awesome. Thanks a lot. If you want to learn a little bit more about what we're doing with Chainlink data streams, tomorrow there will be a panel with Lei and a number of other of the leading voices in this space. And there will also be a data streams deep dive tomorrow on the spotlight stage. Now, I think Lei is one of the most creative developers in this space, but we have thousands and thousands and thousands of them. So we need a lot of tools for this. So I'd very much like to ask Gondo back on stage to go into the developer ecosystem. Thanks, Raul. That's right. Thousands and thousands of developers. We're really counting on the developer community to build this industry. So let's talk about our developer ecosystem. First, our build and scale programs. With hundreds of projects involved in the build program, we're supporting the most innovative and exciting projects out there. We provide marketing support, technical advice, and also early access to some of our products. And our scale program with over a dozen projects, blockchains, and L2 networks, taking benefits from enhanced access to our services. Over the past 5 years, the Chainlink developer community has grown to become the biggest and some of the most active in the entire industry. This year alone, we've had over 2,000 developers join our online boot camps for CCIP and RWAs. And hundreds of developers attend our hackathons, including the one we did at ETH Global and Hacker House that we just had over the last couple of days here. This excitement from developers is really the motivation for us to keep building new tools, new initiatives, new quality of life upgrades to make your life better and better when you're developing on the Chainlink platform. That's what really motivates us to keep going. We have updates for you on the Developer Hub. We're bringing you a more unified experience, everything that you need in one place, no more jumping around, all of the resources, developer utilities and tools to help you along the way, no matter where in your journey you are, change logs to stay up to date with all of the Chainlink features that are coming online, demos to give you ideas, code repos to help you kick off your project, and we're even featuring some community-built projects for you to observe and get ideas from. We're providing also architectural diagrams if you want to dive into the technical details. And Chainlink Local, which is an installable package that gives you all of the Chainlink services running on your local machine, so you can experiment and boost your efficiency as you develop. You can do that for CCIP, for data feeds, VRF, functions, automation. This is a huge boost for efficiency. And some of our community developers are already using this tool, as well as some developers even in the capital markets. We're also delighted to announce home.chain.link, the Chainlink home. This is based on feedback that we've heard from our community and we're delivering for you. This is a one place to manage all
your VRF functions and automation deployments across all of the chains that you have them deployed, all at your fingertips in one spot. And we're excited to launch the Chainlink certification program, which just launched at this Hacker House and had over 130 developers participate. You know, this industry is going to really change the world, and it's going to happen fast. And that means that the people that are building it have to get it right. So this is about knowledge transfer and really upskilling the developers, because we're counting on them to build this industry. This certification is developed by top industry experts. It's got hands-on workshops, interactive sessions. Of course, this comes with a great, an industry-grade credential that you can show off, and it's completely free, just for you. We've also launched a 17-hour blockchain development course in Mandarin. This has gained over 30,000 views already in the last few weeks, and it's on track to be one of the most popular educational videos we've put out there. No other Mandarin-speaking web development, Web3 development education exists at this level of depth. Try it out. We really think you're going to love it. The educational offerings we have, I really love, and they're great. But I know that some people out there are really already experts in this space. So this next section is especially for you. Please join me in welcoming Uri Sarid, our chief architect, on stage to share with you what he's been cooking up behind the scenes.
Thanks, Gando. Hi, everyone. So you've seen this slide before, right? It's architecture, but it does tell a story of what can be achieved, what has been achieved across a very broad set of DeFi protocols and TradFi use cases and institutions that are all powered by a combination of Chainlink oracles and blockchains and their smart contracts. And it works because it's highly reliable. Our public oracle network is decentralized, and the oracles get together and coordinate via a Byzantine fault-tolerant protocol called OCR. Plus, we've built up very solid experience on how to release reliably and how to enable our NOPs to operate reliably. It works because it's secure. As you saw from Gando earlier today, Chainlink oracles have published over 15 billion messages to public blockchains and have enabled over 16 trillion dollars of value on public permissionless blockchains. That's amazing. And it works because it's verifiable. So much of our configuration is open on public blockchains, and the source code is available for public inspection. But so far, we've had one big limitation. These use cases have been focused around things that we saw at Chainlink are really important. We've not made it easy to put all this power in your hands, and that's now going to change. So I wanted to share what we've been cooking up so that all of that power can be applied to your use case, however you want it. But let's take a step back to figure out how to do this. So as you know, blockchains use cryptography to create an immutable write-only ledger, and then numerous nodes that synchronize in a decentralized manner in order to produce consensus. And that consensus across decentralized operators is what then gives blockchains their amazing properties, like an immutable known good history. The smart contracts then give you a programming model on top of that distributed ledger, right? Built on a well-defined state machine and predictable execution, which is again founded on consensus. And then you can take that consensus for granted when you're writing the smart contract code, right? You don't think about all of the nodes that are running independently because you're writing against the virtual machine. And in that virtual machine, you know that whatever you write will be executed reliably, securely, and verifiably. But all this state and all these interactions are internal to that chain by design, right? By design, they're living in their own world. And we know that while it works great inside of that one world, there are other worlds out there. And each one has its own contracts, and each one has its own ecosystem. And the consensus models vary a little bit across some of them. And the assets and the contracts on those chains vary. And in fact, there's a very important ecosystem, as we know, outside of any blockchain, right? There's a lot of data out there that's really, really important. We've been serving that data for years. And it's often available behind Web 2 APIs. And some of that data, some of that information is available only behind messages, such as the SWIFT messages that coordinate a lot of the traditional finance systems and banks and institutions. And of course, there's a huge array of Web 2 systems that are providing not just data, but also interactions that power the traditional financial world. And so, if we want to pull all of that together, we need to involve oracles, if we want to do it in a reliable, verifiable manner. We need, in fact, decentralized oracle networks, as we know. And these oracles will need to connect with these various APIs and the messaging systems and the Web 2 systems. And sometimes they need to call them multiple times and aggregate the data in some way. And sometimes they need to call them only once, because it might be expensive to call or because they might have side effects like creating a resource. And sometimes you need to listen for calls or events that happen and react once you know that all those things happen. And consensus has to be thought of a little bit differently in each one of these interactions, right? So after they connect, you also need to perform often some custom logic and use consensus to make sure that that logic has worked reliably and securely. And the oracles will need to read and write to the various chains, each with their own consensus model. So we see there's a lot of variation in how you need to actually deploy consensus or work with consensus in order to get the properties that you expect. Again, what are those properties? First, reliability, that what we say will happen will indeed happen. Second, security, that nobody can get in the way of that. And third, verifiability, knowing with certainty that what should have happened did indeed happen. So that's, of course, what the oracles, working with the various blockchains and their smart contracts, are going to need to achieve by the various forms of the consensus. And they'll need to work together in this careful choreography to get just the right connections, just the right compute, just the right blockchain interactions with the appropriate consensus mechanisms in each one of these things in order to get you reliable, secure, and verifiable execution. Okay. What do we call this? Consensus computing. This is an age of consensus computing, right? There's consensus of various types all across these things. And we ask, how do you program Oracle networks and smart contracts to achieve all of that consensus and get you those properties that we just talked about? And that's the key to being efficient and effective in this world. Now, we've worked hard for years to figure that out, to understand how to achieve it and adding more and more use cases. And today, I'm going to talk to you more about making it programmable, to make it really easy to achieve any use case, your use case, very, very quickly. So, as you know, as you heard from Sergey, we've been building the Chainlink runtime environment, the CRE. It's a runtime for DONs, a runtime for decentralized Oracle networks. And it automatically gives you just the right consensus model for your particular use case. Now, just like any good runtime, it completely abstracts away all the hard bits. You don't have to think about them at all. In other words, it gives you a simple programming model for DONs. Let's visualize how it works. So let's say you have a particular use case. You have some data that sits behind some APIs. You need to pull that data, do some compute, write it on blockchain C. So what do you need to do in order to make that happen with those properties? You create a workflow, which simply says, get some data, do some compute, write it to chain. That's all you need to do. Just tell us what it is that you want these oracles to do. And the workflow Don will load your workflow and start to execute it. It first communicates with a connect Don to call the API using the calling pattern that you requested. And then it communicates with a compute Don in order to do the custom code that you asked to do, say transforming the data or extracting the data. Now, these DONs could be a logical overlay over exactly the same nodes, or they can be completely separate DONs that communicate with each other. And you don't need to worry about any of that. And finally, you get a chain writer DON that has just the right RPC and the logic to write to chain C. And that's a lot of orchestration, a lot of cryptography, a lot of synchronization to achieve the consensus properties appropriate for each one of these steps in your workflow. But your workflow can be super simple. Now, we call each one of these building blocks a capability. So what you're doing is orchestrating these capabilities. And that capability, each capability, is executed on a DON that has exactly the right properties in order to achieve that particular capability. So as you see, what we've done is we've broken it up into units called capabilities, building blocks, that you can then assemble through simple code. Now, your workflow is written in code. It can be Go, it can be TypeScript. We compile it down to WASM, and that WASM is then what's actually executed on the appropriate nodes. So in your code, you simply invoke the capabilities. We'll see an example of that in just a second. And the execution, the coordination of the DONs for each one of the capabilities that you called, and then combining them with a consensus overlay, that's what the Chainlink runtime environment provides you, the CRE. Now, to accomplish this, we did need to re-architect in a significant way the Chainlink platform. And we needed to break it down into these capabilities. And those capabilities are those building blocks. Let's walk through them. So the foundation is a unified interface for interacting with blockchains, where the specifics of each chain are indeed taken into account, the consensus model, the RPCs, and so on. But in the end, they're surfaced as common interfaces for all the rest of the platform, a chain reader and a chain writer. Now, you can have a DON in the end for Solana, you can have a DON for Ethereum, and so on, and these DONs will communicate and will be very, very simple for you to interact with any chain that way. So the programming for any such DON is exactly the same. Now, reading and writing to these chains is just some of the capabilities. We also have, of course, compute to actually run your code. We have an outbound API where you can call any API out there. There's a key value store to provide you permanent persistence as much as you need in the middle of your flow. There will be an event store to have an immutable write-only history of just the information that you want to write. And very importantly, a policy engine that allows you to define policies that can be instantiated and can be checked against without having to write the same custom code over and over again. So these are configurable policies. And again, remember, every one of these capabilities is mapped to a DON that has the functionality to provide that particular capability. Now, there's two kinds of capabilities. There's capabilities that you execute inside of your workflow, and there's capabilities that trigger your workflow. So for example, inbound API calls can trigger a workflow, or receiving a message or an event can trigger a workflow, or you can run these workflows on schedule. So these are all the capabilities, and there will be more over time, and eventually you'll be able to write capabilities yourself. Okay, now the CRE is what pulls all of this stuff together. It executes the workflows whenever the triggers fire, and then it uses DON-to-DON communications so that these DONs can, in fact, be coordinated across each other. Let's look at an example of exactly this kind of flow, this time in TypeScript. It's just a lot easier to read. And in this case, this example will provide net asset value, or NAV, to a tokenized asset on a chain. So let's actually walk through this. At the beginning, you can read in your config, right? This seems trivial, but it's really important because it means you can reuse your workflow over and over again simply by changing the config. and you have easy access to it right inside of your code. Now, the first step when this is triggered is to get the nav from the API. You see that inside of the connect DON, we include a little bit of custom code to extract the API from the response of that API call. And we're reaching consensus on the median in this case. All of this is changeable through your code. Now, just like any code, you can easily log anything that you want, and you don't have to think about the fact that it's running on numerous nodes across various DONs. You just log it, and it'll be produced on the observability stack on the other side. And finally, you can see how easy it is to write the chain. Which chain? Whichever chain was inside of your config. So again, you can just reuse these flows across lots of chains. And finally, we register this particular workflow to run on a regular schedule, which you can configure through your configuration. Now, that's all it takes for the CRE to coordinate swarms of Chainlink nodes and blockchain nodes to reach consensus and execute things reliably, securely, and verifiably, as you've come to expect from Chainlink, except now it's your use case. Now let's look at another example. We saw this earlier. Sergey explained the context of this DVP interaction across lots of institutions and Swift messages and so on. DVP, as you know, is a common process inside of traditional finance. You can have the payment, the P part of the DVP, for example, happen off-chain while the delivery is happening on-chain and so on. And you end up orchestrating a lot of things and a lot of messages. But with the CRE, it's just more of the same steps that you saw. In this particular case, this is a TypeScript version of the Golang we're actually using. And I'm not going to walk you through all of this. It's just lots and lots of steps like this. And in fact, there's lots of workflows that institute this. But let's look at a couple of pieces of this thing. One is we're using a key value store in order to map accounts from their off-chain Swift message equivalents to their on-chain identities. And we're using the policy engine explicitly to check whether these particular things are compliant, for example, against some attestations. So that's what it looks like. It's very, very simple in the end, and a lot of stuff that happens underneath that. How do you see what that stuff is? Well, in fact, here is a UI of an application that we built recently, and we demoed at Sibos last week. What you're seeing inside here is the individual events that are happening in various places, off-chain, on-chain, all brought to you through this interactive UI that makes it really, really simple to figure out what in fact is going on. You don't see lots of nodes, you just actually see the functional events that are happening. And of course, you can add your own events to this thing. So the platform is real. It's being developed as we speak. And we're excited to take it to production in order to be applied to use cases like the Swift DVP one. And here's a preview of a web console that you'll have that allows you to, I remember that was a workflow manager in that architecture diagram. This allows you to actually launch workflows, see which ones are working, understand their status, and also get notified of any problems that have happened so you can get in there and debug them. So what's the status of all of this good stuff? Well, first, we're really dogfooding it ourselves. We're making sure that it'll be ready and easy to use by first starting ourselves. And we're doing that by putting this in the hands of our engineers that are customer-facing, not our product engineers. The product engineers are building the developer experience, and they're building extra capabilities. But it's the customer-facing engineers that are sort of our first line of give it to someone else and see whether this thing is actually working for them. Can they be successful? So we're dogfooding it first. Now, the architecture is already starting to accelerate us. For example, having one place of integration, chain reader and chain writer, allows all of our functionality to immediately be available on those chains. And in fact, the configuration is much easier because the DONs are relatively static and you only compose across them. Now, we're using it ourselves, as I mentioned, with other institutions just like Swift in order to enable real-world use cases. And it's a really good place for TradFi and DeFi to come together. It's the same platform, and each side will add in their use cases and will stretch what the platform can do, and the other side will be able to benefit from that. So I'm really excited that this is literally a place where they come together. The final question you might ask is, when can you get your hands on this stuff? It's November 2024, so I'm happy to say that all of this will be in your hands next year. And if you want to sign up for early access, you saw this QR code before, so let us know what your use case might be, and we'll get you some early access to this. Thank you very much. Let's bring Sergey back up.
Yeah, so when Uri showed me what he was developing with our team and the fact that he has working code that can execute that level of complexity across Oracle networks, multiple blockchains, whether that's for data or whether that's for coordinating a payment system like SWIFT, the type of stuff that you just saw happen in a few lines of code would have taken weeks or days in the past. And it's something that a single developer can now build with a single language that they already know over the course of a few lines of code. So we're really going towards a world where all the learning, all the capabilities, all of the services, and all of the interactions we've had with both the DeFi community and the capital markets community are resulting in a product that can let people build advanced applications across chains that are deeply integrated with their existing data systems, payment systems, and assumptions through the type of code you just saw. Whether that's Go code or TypeScript, two very popular languages, are executing really complicated, really critical steps, coordinating critical systems in a secure, reliable way. Basically, when I saw this, it was very clear to me that this is the future of how these applications are going to be built, because it's the right way to use Oracle networks, for one, which is where all the services are. But the other way is that it is the simple, direct way to actually build the application. And it is exactly what developers are used to doing. So really, when I first saw this, it kind of just blew my mind. The other thing that I'm really taking away from all this, what I've seen on the stage today and at the conference in general, is that we've had Anurag on stage, who works at a $1 trillion asset under management institution, one of the largest institutions in Australia. And we had Yakov on stage from Lido, one of the most successful Web3 DeFi projects. And both of them, in their separate use cases, are talking about using the Chainlink standard for one set of problems and another set of problems. But the really important thing for me is that they're both talking about using the Chainlink standard. So they're both getting on the Chainlink standard. Initially for one use case and another use case, but then once they're on the Chainlink standard for that piece of data or that cross-chain flow, it's very natural for them to adopt the other parts of the Chainlink standard. And then once they get the CRE in their hands, their ability to use the Chainlink standard and its services will become 10 to 100 times simpler. And they'll, I think, realize that building their application through the CRE in a way that it interacts with all the Oracle networks, all the chains, all the data, all the payments, is really the simple way for them to use their limited resources to build a reliable application. So this is really the world that I think we're going towards, that I'm very excited by. And I think I'm really starting to see it form in the early stages here on stage with us. I think the next stages are Anurag, Yakov, other people like them, get more and more on the standard and start interacting with each other using that standard. That's the next stage of what I hope to see on stage here sometime soon. So it's been a great first day, a lot of great collaboration, a lot of great innovation in Web3, DeFi, and TradFi, a lot of great steps towards bringing those communities together in a productive, useful way. Really thrilled to see many of you. It's been a great first day. There's a lot of great updates and things going on tomorrow. I'll be here moderating some panels. There'll be those presentations I mentioned in my presentation, and excited to see all of you here back tomorrow. Even more exciting stuff coming up then. Thank you very much.
Thank you, Sergey. All right, that's a wrap on day one, everyone. Please make sure to stop by the welcome mixer.
And on your way out, definitely check out the Chainlink Explore section further down on the floor on the other side of the expo floor, where for those of you who want to actually interact with the displays, you can, and you can create your own tokenized real-world asset like real estate. You can just go out there, click on the buttons, and create your own. Try it out right now as you walk out on the way to the escalators. You can't miss it.
All right, we'll see everybody tomorrow at 9:55 a.m. Thank you. And Chainlink Labs members, please stay. All right, thank you, everybody.